Well, good morning, everyone. Welcome to the Baker Institute. My name's Ken Medlock. I lead the energy program here. It's really good to see all of you. A couple of announcements that I'll make before I hand it over to Mike Stice to make a couple of announcements on behalf of the Price School of Business, the Energy Institute at OU, this is the second year to do this conference with them. It's been pretty successful, pretty happy about it, and look forward to many more years of doing similar types of events. Of course, this year we're going to talk about something that is, I think, in the news probably 5 or 6 times a day, different stories, sort of thinking about the role of data centers and AI and the potential impacts on the energy sector and electricity in particular, and how will we meet projected future loads. All of those things are going to be right in the middle of the conversation. We'll open after Mike makes a few remarks with Jay Singh. He's from Rystad. He and I are going to talk just about the overall sort of energy landscape to kind of put a framing around the rest of the day. Couple of logistical announcements. We will have breaks scheduled through the day. There are no scheduled fire drills or anything like that. So if you hear a fire alarm, the muster points out of this building are out front by the fountain, which is probably where most of you walked past when you came in, or through the back doors, either one out in the roadway. Again, nothing scheduled, so if you hear one, just make your way orderly to one of those 2 spots. Restrooms are on either side of this room. Men's room is on that side. Women's room is on that side, in case you're looking. If you feel claustrophobic at any point, everything is being simulcast outside in the Doré Commons, so feel free to sit at a table out there and you'll be able to watch. You just won't be sort of as personal, if you will. The last announcement I'll make is we're doing Q&A a little different for this event. We're going to try to use a program called Slido, so we'll see how it goes. But there'll be a QR code that will be flashed right there. Scan it with your phone, and you can enter your questions that way. It'll make things a little bit more seamless, if you will, because as the moderators, we'll have access to an iPad up front, and we can see the questions as they come in and sort of sort the questions that are similar, so we're not asking the same question 4 different ways. But that's the quickest and simplest way for you to interact with the speakers. So if you have a question at any point during the day that you want to direct to somebody, just scan the QR code and enter it. Okay. All right. So with that, I'm going to hand the podium over to Mike to make a few announcements. Mike.
Thank you, Ken. Appreciate you. Well, I can't say enough about this opportunity. This is the 2nd annual collaboration with the Baker Institute. I always am reminded, my son graduated from Rice University, and I'm always reminded when I went to the basketball stadium, at OU we have athletes' jerseys mounted. Here they have Nobel Prize winners, and it's kind of impressive. I don't know sure how many we have, but it's always really great to be collaborating with somebody as fantastic as Rice University and Ken Medlock. So let me, on behalf of the Energy Institute, the University of Oklahoma, let me welcome you to the 2nd annual Energy Conference. I want to talk just a little bit about, my clicker's missing. Here it is. No? It was up here. Oh, there we go. I want to talk just a little bit about some of the people, special guests that are here representing the Energy Institute. I'm chairman of just the committee. Rick Talley's the actual chairman of the Energy Institute. He's here in the front row. My boss is here, so Dean John Antonio is here as well from the University of Oklahoma. Number of our board members and people on our committee, Jay Jimerson, I think he's here. Lori Woodward, special thanks to Lori. ConocoPhillips was nice enough to sponsor our students to come down. Please be reminded that we've got students with boards out here that would love to share their thoughts with you. Take some time. You're going to be impressed, I think, with the talent and, frankly, the intellect of our students. And so, Ken and I pride ourselves in showcasing our students. And so there's probably, 5 or 6 from each university. And I know they'd love to talk to you, okay? So take that opportunity. So special thanks to ConocoPhillips and sponsoring not only our students coming down, but also a really nice reception for the speakers last night. The desserts were particularly talked about on a regular basis. So why did we pick Power the Energy Future? I think it's something that I think we all know is near and dear. The Energy Institute at the University of Oklahoma has been talking about energy as a system long before it was cool. to talk about that. And what we mean is it's not just about the supply, it's not just about the demand, it's about the entire value chain of energy. And now we've come face to face with some of the challenges that we're seeing. We had this enormous supply boom with the unconventional technology that brought a lot of natural gas to the market. We had a major shift into renewables, which brought on a different challenge for grids and otherwise, especially in ERCOT, where we saw some significant changes, but in Europe as well. It's a global phenomenon. So energy is a system, and at the University of Oklahoma, we pride ourselves on believing of energy as a system and that all supply sources need to be considered. Fossil fuels, renewables, nuclear, geothermal. We think it's going to take it all to meet the growing demand for energy. And so we have to acknowledge that the global demand is growing. I took a slide from Mark Mills. This is a little bit controversial. Mark is at the National Center of Energy Analytics, but he had a slide that I just couldn't resist. If you want to know why we thought powering the energy future was so important, he basically has this slide that says if you spend $10 billion in capital over a decade, if you spent $10 billion in cars, that was going to create $2 billion worth of energy demand, okay? If you spent $10 billion in airplanes, that would create $3 billion in energy demand. Chip factories, $3 billion. But this is the eye popper. This concept of data centers, this idea of going from yottabytes to lottabytes to names I don't even know, okay? I asked somebody last night if they could explain how many zeros in a lottabyte, and they just said that's why they call it a lottabyte, okay? But what we have to understand is that data centers could create over, in that same decade, between 6, and a big range here, and $20 billion in energy. Can you imagine what we are going to be facing on this globe trying to meet that kind of demand? Technology drove this situation on the upstream side with fracking and new completion designs and 3D seismic, et cetera. We've had this enormous supply boom, which created economic competitive advantage for our country. I think no one can speak to that better than Ken. Low-cost energies drives wealth in economies, and so we've been very fortunate here. But we're also getting ready to hit a big technology-driven demand for energy, and so how are we going to deal with that? So FERC then picks up on all of this and gave, in 2022, they thought 22 gigawatts was the demand profile we could see for power. Then 2023, they upped it to 39. And now in 2024, they've got this huge range. You can only imagine what 125 gigawatts in power is going to do to our grid, our system, our energy supplies. So this is a big, shocking peak demand forecast. And so as we consider the pragmatic side of this, how are we going to meet that demand? And when you think about, if you want to build just 1 gigawatt of 24/7 power, you got to put in 10 gas turbines. These are combined cycle, not simple cycle. If you remember the permitting process and everything that goes on, you got to put in 1,000 wind turbines for 1 gigawatt, 100 diesel gen sets, a complete new nuclear or coal plant. That is why we decided today's conference should be called Powering the Energy Future. So with that, I just wanted to offer those comments to get you going. I'm going to turn it back over to Ken. I know we have some great panelists for you today. I do want to give a plug to the fact that we've got the founder of University of Oklahoma's energy program. Where's Dipankar Ghosh? Is he in here? Oh, he's disappeared. Oh, he's in the very back corner hiding. So at the University of Oklahoma, one of our proudest degrees is the Executive Energy MBA. And Dipankar is here, and he was the founder. And we also have the acting director of that program, Adam Clinton, over here on the left. So if you're interested in that Energy MBA and you want to get another continuing education, please come to the University of Oklahoma. Okay? Back to you, Ken.
That was great. I want to just sort of re-pitch, engage with students, and for the students that are in the room, there's a couple of things for you as well. Right outside on the table when you're walking in, you'll see something about Switch. It's actually a competition that students create teams to participate in. It's basically, you create a pitch to solve a particular energy problem in a particular region of the world. There's $25,000 in prize money available, so I remember still what it's like. It's left that big of an imprint to be a poor graduate student, so I know how valuable that can be, and it's a great opportunity to get to know people and network as well. So I highly encourage you to pick that up and have a look and consider participating. The students that are here have also prepared posters that reflect their work, their research. So during the breaks and then at the end of the conference, there'll be an opportunity to actually engage with them, ask some questions about what they're doing. You never know, it might actually pique an interest of your own. Hopefully lead to some follow-up. I know all these students are going to be hungry for jobs before too much longer, so if you're ever in a position to help sort of expand their network, I can tell you I would appreciate that, and so would they. Just want to reiterate that point. So without further ado, I'm going to ask Jay Singh to come up front here. Jay is the head of America's Advisory at Rystad Energy. It's an international consulting and advisory firm. He advises clients across energy segments, including upstream infrastructure and CCUS. Prior to joining Rystad, he held roles with Wood Mackenzie, Hess, and PFC Energy. So, Jay, I look forward to this conversation.
All right, glad to be here.
So, just to get us kicked off, yeah, you want to grab that clicker? I know Jay's going to have some slides that he's going to kind of use to motivate some conversation, much like Mike did. Introduce yourself. Tell us about what you do.
Jay Singh, I head America's Advisory at Rystad, which simply means, Rystad is a global energy research subscriptions model, but we also have an advisory arm. So in the Americas, I head up our advisory work. What does that mean? Well, it's a lot of studies that involve some outlook on the market. How is CCUS developing? How is hydrogen developing? And we'll talk about that later. A lot of upstream studies, a lot of transaction support. So some of you might have seen Centrica bought into Grain LNG in the UK. We supported the buyers on that transaction. We supported the buyers of ENI, CCUS business. We supported the Jafurah midstream transaction that just went through with BlackRock, GIP, et cetera. So we do a lot of transaction support, and basically what it involves is energy expertise and a knowledge of the markets and how they work long term. So based in Houston, we've got a team also in New York. We've got offices Calgary and Brazil and so forth. But joined Rystad in 2018 when it was 100 people. Now it's about 700. So it's been a wild ride. But yeah, it's been great.
Well, I know you got a few slides to kind of set the stage. If you want to kind of jump into those, make some comments, and I certainly have some questions for you. So.
Yeah, I think the agenda for today's conference is just amazing. Like so many great topics. I think I saw my role as kind of just setting the broad energy picture. Having discussed with you. So for us, we've come out of 3 years of trying to tell clients that hydrogen is not going to move this fast. CCS is not going to move this fast. And energy demand is going to be a lot stickier than perhaps we thought. Specifically, oil demand and gas demand. So on the left-hand side, you'll just see our house view of just exajoules of energy demand. For me, I don't think in exajoules. I think in barrels, and I think in BCF. But nevertheless, you have to normalize, and you see resilient oil and gas demand. But then I think really relevant for all of the questions we're facing today is just how are we going to handle all this demand for electricity? So you see on the energy carrier side, on the right-hand side, just the surge in electricity demand as far as the energy carrier. What I haven't shown there is losses. So the other thing that you need here is a reduction in electricity losses. That's a whole other discussion. But we've been advising clients for years on how to position themselves for certain upstream themes. A big one these days is shale gas, particularly our friends in Asia, our clients in Asia, who are saying, how can I buy in? We've tried to support some clients on finding good shale gas assets, and most of the time we have to say, well, you've got some stiff competition, both internally and externally. So it's quite a challenge, and of course that's all part of the electricity story. I think this is kind of the backdrop. A few years ago, admittedly, Rystad, Woodmac, S&P, et cetera, all of our forecasts were probably a little too optimistic on demand. But I think pragmatism has really come into play over the last, let's call it 1 year. Yeah.
So on this point, a lot of what's driving demand just over the last 20, 25 years has not been the developed world, it's been the developing world. So sometimes people frame this as the global south or the emerging economies or whatever. You don't have it listed here, but just I wonder if you could briefly kind of touch on how that breaks down in your house view.
Yeah, Asia-led growth, right? It's the same story we've been telling since I started in 2006, which is the energy poor countries are going to continue to consume more. You mentioned the Switch program, and Scott Tinker does a lot of great work on just quantifying the scale of energy demand. And having spent summers in India growing up, it's electricity for 4 hours a day is not fun, right? There's so many different things that become possible with electricity, and I think that's going to continue. The other aspect, I didn't bring the slides associated with it, but and it's going to come up many times over the course of today, but China's not energy poor. It's just going to be doing a multiple of the U.S. in terms of gigawatt additions. So that's not even a story of catching up or delivering basic needs like powering homes or industries. It's really just getting a lead on things like at least the energy side of AI. We'll talk about I'll be curious to hear others on the other sides of AI. So I don't have the breakout, but India, China, I mean, you see it kind of rubber hitting the road right now with India's oil purchases and China's growth.
So real quick before we move on the electricity projection, that is a staggering sort of outlook, right? Yes. But I wonder if you could comment on something that a lot of people, I think, miss in the broader conversation about electricity demand, particularly when you think about where demand growth is really occurring globally. So you think about India, Southeast Asia, some of the more sort of tropical and subtropical climates that, it's hot.
Yes.
Air conditioning load. I think a lot of people underappreciate how important that's going to be, particularly as economic development continues to progress.
Yeah, it's going to be. It's already, in Europe. There's very, intense debates about it in Europe. Pro air conditioning versus anti. As a Texan, it's like, how can you be anti? But it's very hard to deny that. I mean, one of the first things you get, at least in a middle class Indian home, like my extended family would say, you put a little AC, you have an AC room. That's like a luxury. And one of the great things about solar in ERCOT, you've seen, solar tracks AC, and it's a really nice benefit. So it feeds into this notion that all of the above. If we start optimizing energy sources and energy demand, there's lots of opportunities, and perhaps AI can play a role in that as well.
Yeah, it's certainly going to look different everywhere.
Yeah, definitely.
Yeah. On the hydrocarbon view, so I can't help but not see that top picture. So
exactly.
Go ahead.
It's been challenging. I guess going back to the electricity point, one of the strangest phrases or terms I think still used is power to X. And you say, well, this assumes that power is just abundant and cheap and available. But we've been disabused of that notion very quickly over the last 2 years as AI has really taken off in terms of its demand. So a lot of the business models are based on, I'm going to be in Morocco and I'll have free solar essentially to run a giant electrolyzer. It could work in Morocco because it's a beautiful resource, wind and solar. But this notion that I can just go around the world and pluck out just the ideal locations to do electrolysis on a lot of water, that has become much harder in the context of, well, if there's cheap electrons somewhere, a data center probably has a larger value prop than hydrogen. So the scarcity of electricity, of electrons globally, does feed into some of the business, some of the challenges of clean tech. Specifically hydrogen, but others as well, biofuels.
You see that in the Middle East, right? Yeah. There's a race between Saudi Arabia and UAE to sort of capture that data center demand.
Exactly. Yeah, and I think just to answer your question specifically, I think with hydrocarbons, there was also this notion that EVs were going to continue to take off and everything would be electrified. And EVs will continue to grow, absolutely. I think that's still very much a strong trend globally. The challenge there, of course, is the developing world. You know, the adoption of EVs is not going to be universal. And the other aspect there is on the gas side, the limits of the alternatives to gas-fired generation when renewable sources are intermittent. So,
Sure.
yeah, hydrocarbons will be much stickier than perhaps the super majors certainly thought or the European super majors thought in 2021 or 22. One of my favorite things to do is to contrast the CERAWeek agenda from 2021 to 2025.
Yes.
And it's just, it tells you how quickly we can move. I don't call them out. We're probably as guilty as anyone. But
This chart is intriguing. I want you to explain it a little bit. So.
You know, I remember vividly. I mean, it's not to pick on them, but Plug Power when they SK bought into Plug Power and the stock started running. I was like, wait, who's going to buy all this hydrogen? You know, and it was a question of like, we'll figure it out later. I think the answer right now in green energy is, there's not a scalable, reliable, investable theme. And that's why you've seen Exxon and Chevron in particular emphasize that, why would I take my shareholder capital invested in renewables when I earn a higher return and the world needs my core business? And so Shell and BP have kind of come back more to the U.S. supermajor view on that. Supermajors I just use as a proxy, right? I think they work well for as a shorthand for the industry. But yeah, I think the money has spoken. The returns are just not there in at least the publicly traded green space. I think there's a lot of excitement, and I'm looking forward to the discussion on geothermal. I'm really excited about what Fervo and Sage and others are doing in geothermal. But that's like, it's a technology play. It's going to take time to mature. But what you're seeing here mostly is renewables, right? Which are getting squeezed with tariffs and other things right now. The costs are not coming down as they were.
So you just mentioned opportunity, technology play, but oil and gas, what does the opportunity space look like going forward?
Oh yeah, I mean, you see there's still so much room to explore the world. BP had a big discovery in Brazil. Guyana continues to deliver. I think Chevron was, breathed a sigh of relief as far as the transaction going through with acquiring Hess, because there's just not that many large-scale world-class resources up for sale, right? So it's a tricky space, because if you're looking to grow, you're going to have to pay up. There's not as many independents in the U.S. in the shale space that are, juicy acquisition targets. I mean, there's still some out there, and there will be further consolidation. But when you talk to when I talk to clients about where are the big opportunities, it does tend to be back in the international space. Whereas for a long time, you saw ConocoPhillips and all these independents just come and focus on the lower 48. Never ending. But maybe the canary in the coal mine there was EOG looking at shales in the Middle East. So I think there's appetite now. I mean, it's challenging at these prices, but there's appetite now to let's start exploring again. There's lots of opportunities around the world. Exploration kind of slowed down quite a bit 2020 to 2023. So I think it's picking back up. It's going to not look like it used to, which is like big, multi-well, deep water commitments. But there'll be substantial opportunities internationally to explore and through the, discover new resources. And then as far as M&A, that's going to be ongoing.
So we'll come back to some of the other stuff, but do you think the deep water play is the next frontier?
I think in the Gulf of Mexico, for example, it's been always seen as like, oh, it's mature. Yeah. Like, let's not get too excited about the Gulf of Mexico. But the technology is such that it keeps improving, and you're able to extract more and more out of an existing hub. So one of the telling signs was, Oxy got all the Anadarko assets in Gulf of Mexico, and they got in there, I think, expecting to sell once they got hold of it, because at that point, there's pressure to deleverage. But they got in there, and it was an excellent business, like just delivering lots of cash flow, and they had 10 hubs. and 9 of them are close to full. So, or I don't know where it sits right now, but when I last looked at it, so the Gulf of Mexico, you can keep drilling tieback wells, especially with improved ocean bottom node seismic. So the GOM is a place that'll a gift that keeps on giving, I like to call it. And then Brazil, Namibia, Guyana, of course, Suriname. I'm leaving some out, but there's a lot of opportunity globally, and there's not a lot of appetite to increase the exploration budgets for 2025, 26 with oil prices where they are. But there's also a lot of gas out there as well. So I think there are lots of deep water opportunities globally. And they'll come through in the next few years as we realize we have a lot to invest.
Yeah, I want you to explain this one just real briefly.
Yeah,
but in doing so, comments on even why in the high case you're showing sort of a peak, if you will, because that was actually present in the house view as well.
Yeah.
Kind of what's driving that? I'm
Yeah.
pretty sure it's the demand side of the equation.
Yeah, absolutely. I think we have our global fleet models and efficiency models, and I think if the shape of the curve is going to vary based on that. I would say like EV adoption assumptions probably drives the difference between the 3 curves. The reason we show this slide is basically to say, like, you may think that okay, there's upstream is taken care of, like the world already produces about 100 million and doesn't need that much more. But the amount of capital required just to stay flat is massive. And then if you want to grow a little bit, it's even more so. So if you're talking, you're talking $9 trillion of capex through 2035. It's not a dying business by any means. So we talk about all the above a lot. Well, what does that actually mean? We have to be spending on all of the above. So, upstream oil and gas, solar, geothermal, all nuclear. There's just lots of capital that needs to come into this business.
So I want to shift gears a little bit because we've kind of framed there's lots of opportunity, right? We mentioned the innovation, the technology play, what's still present in, sort of mature or incumbent energy sources. But one of the things that I think everybody in this room is acutely aware of is the amount of uncertainty that is pervasive across the energy space right now.
Yeah.
A lot of that's being driven by shifts in policy, tariffs. You kind of referenced those a few minutes ago. I know you have some comments on all of that, so dive in.
Yeah, we've been busy. Our excellent but overwhelmed team of analysts, we took it upon ourselves in, I think, April, to try to summarize all the things that were happening in the Trump 2.0, and this is just one of like 60 slides where we're just let's just write it all down. What's happening? Is it an executive order? Is it a tariff decision? But the framework of energy dominance. A lot of executive orders came in, and there was a need to digest. Okay, what does this mean? What does it actually mean for somebody trying to put money to work in the sector? There's so much going on. We just have forced ourselves to be very specific. So, in the case of tariffs, so steel in particular, and the impact on the industries, we've tried to do our best to do the math around. Okay, what are the inputs? How much of it is imported? I think the kind of LNG projects, all of the OCTG, like the pipes that go into upstream, that's all going to go up in price. And that's why you saw the E&Ps react the way they did in the Dallas Fed survey. I think it was a few months ago, where it was like the most negative they've been in quite some time. I think the jury's still out on how this all plays out, in part because we've gone back and forth quite a few times. Like this, we try to also just write down, okay, where have we been on China trade policy with all the changes? And it's still TBD. I went on a rafting trip and I got on the river when I was going to lose reception. I was like, what's going to happen with the China deal? And I said, I bet you by the time I get off the river, it's going to be extended by another 90 days. And so midway through the river, I got reception somewhere. It's like, oh, it's extended. So it's like, okay, good. We can just relax. But that's kind of where we are right now. As far as uncertainty, I do think it has impacted the appetite for large investments, at least as it pertains to kind of mega project. I think shale is going to just always be oil price dependent, and the One Big Beautiful Bill did kind of add a little bit of juice to royalties, which was welcomed by the upstream industry, but I don't think it was a game changer. So uncertainty, I think to answer your question more starkly, I think hydrogen developers probably, there's very little left worth investing in the near term. I know the ammonia projects are moving forward. The Japanese are underwriting those. So there's still projects that work, but as a sector, it seems like it's impossible to attract capital into kind of greenfield hydrogen developments.
Interesting.
Yeah.
Wow, there's a lot to sort of dive into. I always look for the silver lining in what appears to be apocalyptic, right? And there's a couple of things here that I'll just mention. One is in terms of what I bring into the classroom and even discussions with, folks in the media about what uncertainty does. There's, long ago things were written. I think Ben Bernanke wrote one of probably the best pieces in the early 1980s about the role of uncertainty on investment, the impact of it. It slows it down. So to an economist, this is not surprising to see everybody hitting the brakes, right? But I guess the question is, if you do see a slow investment, that's going to have negative, broad macroeconomic implications. How do you see the administration responding to that? I mean, I think the tariff stuff is, it's a lot of it's noise. It's trying to signal to trigger negotiations. You mentioned that we'll extend it by 90 days, but what sticks and what doesn't?
Maybe I should backtrack a little bit, because I don't think upstream investment or certainly shale gas investment has been kind of stuck in the mud due to policy uncertainty. I do think that prices are driving that. So just weakness in near-term gas prices. I mean, we'll talk about this later today with a huge boom in natural gas driven power gen for AI. We're not seeing that in prices right now. Right. So I think where it's stopped activity was on kind of slowed activity was on the clean tech side. So I know that's probably pretty enduring, because the bill essentially took away a lot of incentives for wind and solar, and then I think they kind of took the additional step of, I guess, revoking the permits for a project that was almost done. I think that's what really has at least the offshore wind industry kind of puzzled and not knowing what to do with itself. But I think broadly speaking, the silver lining is a lot of capital still being deployed. I don't think the upstream industry has kind of stopped per se. It's more about prices right now and what OPEC is doing than it is about policy, just to clarify on that. But there are the many silver linings. I think the administration's insistence that trading partners commit to purchases, whatever that means. It's kind of hard to figure out exactly what those commitments look like. Is potentially going to spur investment. Although, in the case of Alaska and some other announcements, I'm questioning. It's a LOI for a reason. It's not going to happen.
So I want to dig a little bit into the natural gas comment that you just made, you think about the U.S.'s largest producing basin, the Permian Basin, which tends to be getting gassier over time. How will that play, given various projections for load growth in the electric power sector, and how some of the hyperscalers are looking at going behind the meter and focusing on gas? How does that play out in the house view, so to speak?
Yeah, I mean, the Permian is going to continue to grow. I think right now in our base case, we've got the Permian kind of plateauing on oil, but growing on gas. And that's kind of the function of how the wells actually get gassier over time. In the play, I think you start drilling gassier stuff as you get into your tier 2, tier 3 acreage. You've seen that Tallgrass, I believe, wants to run a pipe from the Permian to the Rockies, which is like a few years ago, if you told somebody that, they'd be like, why? Yeah, that's crazy. But the Permian is going to play a huge role, not only in underwriting the gas that you need or delivering the gas that you need for AI, but also for LNG. The question we get, and everyone's asking, is, okay, we've got AI, we've got LNG exports, we just have like base industrial growth, and we have electrification of everything. Not everything, but more electrical demand in general. Do we have enough gas for that? And it's kind of an open question. Right now, of course, our model's balance, right, in terms of gas and supply and demand. But let's say if we were to increase our, and we're kind of doing a study, we're in the middle of a study right now, like what if you increase demand by X? Like what do the break-evens need to be before you get there? And that could explain some of the activity in the Haynesville, where you say, like, why are they going to the western extent of the Haynesville? The break-evens are like 7, in the best case. Well, maybe it's because they're betting on some technology improvements, and that Henry Hub just kind of gets into a world where it used to be, which is, double where it is right now, triple where it is right now. Not impossible.
That's interesting. I mean, I think an underappreciated factor in the overall U.S. natural gas balance is it's a North American market. It's not a U.S. market, and people often forget that, right? And the role that Canada plays in backstopping all of this long term is critical. I mean, we used to be a pretty significant net importer from Canada. Imports from Canada have only slightly fallen, but now we're exporting more north. But at some point, that could easily flip, because there's a lot of resource up there that is stranded, for lack of a better way to put it. But when you think about the way policy and regulation sort of intersects with the overall North American market, and how that dovetails into the deepening connectivity between oil and gas, because we're producing over 20 Bs a day now of associated gas, and that's effectively free gas, which has helped keep a lid on gas prices in North America.
From the Permian,
yeah. So when you're sort of factoring all that together and thinking about how the Permian in particular will evolve, how does that actually play out long term in y'all's view?
Yeah, in terms of the oil and gas being kind of having different markets. And
and the connectivity in North America more generally, and what's going on with Canada. I mean, because it's a shock to most people in the energy space to see what's happening. So.
Yeah, just to start with the Canadian and then working south, LNG Canada, I think, will be very interesting to watch as far as what it does for the pull westward, and then phase 2. Montney and Duvernay. I know they're pretty aggressive now as far as data center development in Canada. I don't track that as closely, but I'm sure developers in the room or out in the overflow space have kind of looked at the compare and contrast Canada-US. Then, of course, AECO hasn't seen a huge jump, at least last time I checked, but that is a pricing point up there for gas. And then, being Gulf Coast based, I don't think a lot about the flows cross border from Canada, but obviously it all has to balance. With respect to the Permian, the gas required for all of these projects that have lined up, I think the competition has gotten so intense across the Gulf Coast, because I think everyone is growing in their awareness that they all can't go, right? So somebody's going to be left out in the cold. So there's intense competition to secure the gas on competitive terms, and that's why you see some of these midstream companies successfully, securing the commitments they need to underwrite new pipes. So I'm forgetting the name of the new pipe, but the Whitewater folks have basically announced a new one, which did not surprise me, just given the amount of inquiries we've gotten on how can I secure gas. I think once you have commitments to supply the gas, then you'll drill to fill. I think one of the big NGL players, I think it was Enterprise, said that, despite the weakness in gas prices, despite the NGL weakness, ethane to China being disrupted for some time, they've essentially had no changes to their turn-in line schedule, the wells that are going to be coming online next year. So all the operators they work with in the Permian basically are unchanged for next year, and that's part of all of the commitments you make to when you kind of sign up for capacity on a pipeline. So some people might be hurting, in the short term, like up and down, as far as like, oh, I wish I hadn't committed to this pipe. Gas prices are so weak. But the other aspect of it is Permian in-basin gas prices are so low that if you can get it out and get another dollar for it, it usually will benefit you. Conversely, for our data center friends, they want the Permian to stay constrained, right? So you can get the wonderful in-basin pricing, or better yet, just go behind the meter.
Yeah. So I'm going to tilt this, since we've kind of shaped the natural gas supply-demand balance somewhat. When you think about the future of the electric power sector, and you think about what the recent HR 1, so that's the One Big Beautiful Bill Act, what that has done to potentially reshape investment flows into that sector. I was actually speaking at a conference in Tokyo in December, and so this is before all this has happened. So I'm gonna brag a little bit here, because what I predicted has actually happened. I'm not going to tell you all the things I've gotten wrong, though. But so I was asked a question. Now that you've elected the anti-climate president, what's going to happen to the U.S.'s goals to decarbonize? And I thought that was a really interesting question. It's actually Nobuo Tanaka asked me that question. He's the previous executive director of IEA before Fatih was. And I thought about it, and I said, I think you're going to see something that might be surprising. I think you're going to see a push, because of what this administration is going to do through the EPA, for primacy to be granted in an accelerated way out to the states, because this administration, first go around, really wanted to kick things back to the states and let them sort of handle it. And lo and behold, that's exactly what's happened, right? So that could actually be a good thing long term for decarbonization overall of the oil and gas value chain. Because if you can actually, if you're in the state of Texas, for example, if you can actually manage Class 6, you can already do Class 2, which raises another interesting question, right? Without having to go up to the federal branch of the EPA, that can actually accelerate permitting. So it's an important first step. Of course, with the recent legislation, there was a levelization of the tax credits that were passed during the IRA between enhanced oil recovery with using CO2 and direct sequestration. So why anybody would do a Class 6 if they have an opportunity to do Class 2 anymore, I have no idea. But that's interesting. I said there's two other things that I think you could really see an acceleration in, which actually benefit decarbonization long term, because they're energy dense, they're base load, and they're dispatchable, right, in that order. So I think you're going to see this administration lean into advanced nuclear in particular, largely because of who had been appointed or nominated at that point. So Chris Wright had already been nominated as the Secretary of Energy, and he's been a long-time supporter of advanced nuclear. There's still a lot of mud to clear, if you will, off the road, because for those of you who don't know the nuclear sector, you're going to hear a great conversation later today, but it is a regulatory spider web that you have to navigate. So I think this administration has a really strong opportunity to clean that up. And then geothermal, right? Because again, both Burgum and Wright, longtime supporters of geothermal, like the idea. Advanced geothermal is actually applying the same technology that's being used in upstream oil and gas now to go after shales. And again, you're going to hear a conversation later today that's focused on geothermal. But I wonder if you could comment on the opportunity space for those things as you think about the U.S. going forward.
Yeah, absolutely. I mean, I think CCS is a space I've been following quite closely. And as far as EOR, like why would you sequester versus use for EOR? I think the main answer is just location, right? If you have a good site and you have good, you kind of need to be as competitive for the emissions, for the emitters as you can be. And running a big pipe to the Permian probably won't help your project economics. But Oxy's well positioned, of course, in the Permian itself. They've been planning on EOR all along. I think CCUS has a lot of work to do on the capture side. That's been the challenging one. So right now, low-hanging fruit. First, it was supposed to be SMRs, but then nobody wanted to tinker with existing infrastructure. But it's been gas processing, which is extremely low cost to capture. You're capturing it anyways in some cases to make pipeline spec. So I expect really positive developments in CCS. For geothermal, it just seems like it's a matter of time, and you listen to Fervo and others speak. It's so clearly one of these things where you can see the cost curve, right? You can see like, okay, you're starting with this, then you're going to try this. You're starting with the best resources, and you'll work your way, maybe eastward, or you'll start getting closer to load. But you can kind of see the cost curve develop in a way probably you couldn't for electrolyzers, for example. So that's what makes it exciting for me, and also the analogy with upstream, because our industry knows how to do this. They've done it with shale, which is, okay, I take one thing and I try it, and then I try different technologies, I try different combinations. So yeah, it's extremely exciting, but of course, there's limits to what we can do in the 2020s on geothermal in terms of scale. These projects are great, they're exciting, but in terms of large-scale geothermal, where it gets to multiple percentage points of our grid, it's going to take some time. And then nuclear, I have a lot to learn on nuclear, because all I know is that there's big nuclear and there's modular, and everyone's excited. People are excited about both. I follow the debates, but I don't have a technical capability to evaluate the merits of those arguments, because some of the very well-informed people are like, oh, why are we messing with small modular and small modular? It's like, oh, why would I listen to those old farts who want to who want to just keep building big, and they want to do things differently? But all I can say is that both are very exciting, and as a planet, it seems like something happened in the 80s and at 3 Mile Island, where we just stopped building nuclear, and the German decision, of course, is famous, as far as like shooting yourself in the foot, as far as,
No, it's interesting. I mean, the modular discussion, there's another reason why I'm actually high on it. I don't think it's a 2 to 3 year play. I think it's a much longer term play. But we actually, and some of you might have heard me tell this story before, but we held a workshop here, it was almost 2 years ago now, where we're sort of diving into what next generation technologies could be, and one of them was focused on small modular reactors and micronuclear reactors. And it was really interesting, because typically when you have a workshop, you invite people and they start telling you what they're doing, and you'll get negative and positive sentiment, right? It sort of just happens that way. But this particular workshop, we were about 45 minutes in, and everybody was just over the moon positive. And I was thinking, all right. And so I stopped and I said, I want everybody to tell me what you did before you're in your current role. Because I was talking to people who were at generation companies, sort of, there were a couple of obviously companies that are looking at these things in the room as well, but to have everybody just so positive. And it was really interesting, because 80% of the people in the room had retired from the US Navy. And that was eye-opening to me, because they have lived around these things. They've worked around these things. They know exactly what it takes to make them work and how safe they are. I mean, think about it. If you're stuck in a big cylindrical tube, underneath the surface of the ocean with one of these things for a long period of time, you tend to become comfortable, right? And that was eye-opening, because now there's a realization, I think, that's starting to take hold, that you've got a whole generation of individuals that understand this technology that want to bring it into civilian application. And I think that is a very different kind of conversation than the ones you hear about other technologies that are kind of frontier and potentially move the needle. So I think it's a fascinating development.
Absolutely. I'm looking forward to that discussion, for sure.
So there's a couple of questions that came through on the gas supply chain, particularly not from the upstream to the midstream, but as you get to where you want to generate power. So there's a lot of concern right now about constraints on turbines. What is your perspective on that front?
Yeah, we actually have slides. We had a great intern from Rice, actually, who put a lot of this policy summary work together. I've only brought 6 of these slides, but we tracked actually the turbine imports and the impact of tariffs on those. The backlogs are famous now. I think it's 3 years still if you order one now. I know GE Vernova and others have deals with JV partners. In particular cases, I believe GE, Chevron, Engine Number One, they have an initiative together to build data centers and power gen. So it really depends on who you are and where you're developing your plant. But yeah, our perspective is, and I'm not as familiar when these. We have a forecast of when maybe lead times might fall. I don't have that off the top of my head, but it's not a very encouraging picture in the near term. I guess I'll characterize it that way, which is the demand is just so great relative to manufacturing capacity, and the steel tariffs don't help.
No,
Yeah.
certainly not. But would you characterize that these as transitory issues, though? So they're
Yes,
not
there's
long-term.
nothing. There's nothing fundamental about turbines that prevents us from investing in the capacity. It's just that they've been burned so many times. It's like, how many times can you kind of increase your capacity only for it to come online just when the market's crashing, which is what they've experienced. And you can kind of understand that's kind of where a lot of oil companies are when it's 100. And it's like, okay, now I'm going to go sanction Gorgon or whatever it is, and it's like, oh, by the time it comes online, prices have crashed. So I do empathize, but it really should be transitory. Yeah.
Yeah, I mean, it's interesting because just to, add fuel to that fire, so to speak. Back in the early 2000s, a lot of the turbine manufacturers ended up having orders canceled because gas prices were low. We were really expanding into next generation combined cycle technology. Things got built. They ended up being underutilized, which means the firms that were ordering the next gen turbines canceled their orders.
Yep.
And so you literally had warehouses filling up with turbines and there was nowhere to move them. So if you're a developer of that technology, that's a bad thing to happen.
Yeah.
And that's largely because the price of gas spiked in the early 2000s.
Right.
But it actually bore benefits later.
Yeah.
Because when the shale revolution took off, you had this thing that was just ready to go.
Yeah.
Right? So it's interesting how things cycle, definitely.
I know, yeah, we're all colored by our experiences.
Yeah, absolutely. So I'm scrolling through a couple of these questions. We have a little bit more time. It's a good one on infrastructure. Mm-hmm. We can talk about resources. We can talk about deployment of resources, capture of resources. But at the end of the day, we still need to be able to build transmission. We still need to be able to build pipes.
Yes.
We still need to be able to deploy storage assets so we can balance intermittency and unexpected disruptions. So what's the view on all of that?
Yeah, now, you mentioned earlier you're interested in silver linings. I think, let's say permitting reform wasn't explicitly in the bill, but there were provisions in there that make permitting easier, and I suspect more will be coming on that front in this administration. I think I was talking to Jay last night about he looked at he managed the build out of Stagecoach, which was like a storage cavern business. I should let him tell the story, but essentially he developed this gas storage and pipeline business in the mid '90s, and the same project now would take triple the number of years and permits required, and something went wrong. There's a way you can still be environmentally responsible and not have to deal with this many roadblocks and kind of nonsensical or illogical permits between New York and Pennsylvania, for example. So I think even environmentalists, if you catch them at the right time, would admit that it's gone too far as permitting just being completely illogical at times. And I think transmission, of course, given how strategic it is to the country and the way we've positioned ourselves versus China, in this administration, I would hope to see some improvements there. Sorry, you mentioned storage and LNG. But yeah, transmission is the one that I focus on the most as far as this is the big one we have to get right, because even if you look at ERCOT, curtailed resources in ERCOT, it's surely we can fix this, right? But it's just not happening at the speed it needs to.
So that's interesting because, and you'll hear some about this in the very last session today, transmission constraints, the introduction of new resources that are often behind those constraints can create tremendous price volatility in the wholesale market, particularly LMP, locational marginal prices, can get very volatile. That's great if you're a trader, but if you're a market actor, that's not so great.
Yeah.
So it does introduce some interesting opportunities about how you site storage, deploy storage to sort of moderate those fluctuations.
Yeah.
What do you see going forward on the storage front, particularly battery technologies?
Yeah, I had a friend in the kind of the battery battery project modeling business, and he said it was hilarious because the clients would come to him and they say run the model on this node. He's like, I can run it, but it's going to change in a year. It's like, well, no, just tell me if I place my battery at this node, how much money is it going to make? And he's like, well, it's so sensitive, right, to any shift in the system that you're really making a gamble no matter what. But I can tell you, here's what the numbers will tell you. But I think battery storage is absolutely critical to the grid, not just in Texas, but everywhere. And you've seen its benefits already in terms of what it delivers. As solar is ramping down, it can kind of keep you flat. Similarly, with curtailed wind, it can soak some of that up. Now, California has lots of problems, but it shows you some of the benefits of having grid-scale batteries. I think we're still learning a lot, and maybe AI plays a role into optimal placement and management of batteries. I'm sure it can, but it's already kind of proven itself, I think. I'm not an expert on the grid per se, but from what I've seen, it appears to be absolutely a godsend.
So there's a couple other questions here that are very specific to different types of technologies. I'm gonna leave those out. If you're interested in that, by all means, come ask Jay. And some of these will be addressed later in the day. So if I don't get to those, just pardon me. It's more about time than anything else. But there is an interesting question around data center investment. And I'm going to ask you the question, but I am sure this will come up in the second panel after this discussion. But what do you see as the biggest driver of where these things will be located? Is it energy cost, or is it access to fiber?
I don't claim to be an expert on siting in particular, but from the limited experience I have looking into this and talking to various folks either who are involved or adjacent to it, you have that Venn diagram of all the things you need for a data center to be placed. And I guess part of the reason that the midstreamers are getting involved in this space is because they know their pipes better than anyone, and they're like, well, if I know that this segment of pipe is underutilized and I can get cheap gas there, I have an advantage versus everyone else. And that's where, I talk to oil and gas people and I talk to tech people, and they're from completely different planets. If being self-serving, I think it's where the energy is most efficient, meaning you can get access to it in a rateable way at a reasonable cost. It doesn't have to be the lowest cost. It just has to be reasonable. There's lots of literature on the bit-watt spread. Energy is not the biggest cost. It's just the biggest rate-limiting step. And then interconnect, right? If you want that, or if you want to go behind the meter. So I think it's energy, but I'm going to defer to the other experts on the rest of this day because they all know this better than me.
That's great. So one more question. Looking forward over the next, I'll just say 3 years because it's this administration. What do you think the ramifications of the recently passed legislation will be? How will that play out across the U.S. energy landscape?
It's really interesting because I think renewables kind of having to compete without the subsidies is possibly going to be studied. Yeah, I know. Studied in many years when economists have a chance to see, okay, with and without subsidies, economist's dream as far as like, okay, how do things act? How do they move down the cost curve maybe more aggressively? Were they more creative? I think competition will sharpen everyone's game. I think I will choose to hope that it's not just an irrational hatred of wind energy, and at some point, we can actually build some of the wind projects that make sense. I think the boost to oil and gas is going to be, helpful to the AI race. I think we were getting to a point where if the government was going to be both pro AI development and anti-energy, then it was like counterintuitive and kind of working at cross purposes. At least now you've got tailwinds in the ENP, and you have a real desire to kind of win this race, this AI race with China, although they're building a terawatt over the next 5 years, and we're building a fraction of that. So maybe there's a case to say that this was just the first of several moves that need to happen for us to be competitive. And I think that's how I think about especially because there's so many other things going on in the bill. It wasn't an energy bill, right? So I think it was just like, whatever we can shove in there on energy to get through. And then, there were lots of ideas that didn't make it in, selling our public lands, which I don't know why they thought that would be a good idea in this particular bill, like just having spent a few weeks out west. But there's lots more to come, I think, is the way I think about it. Because I think this bill is probably just step one of what they're trying to do.
Interesting. Well, lots to ponder. Jay, thank you. Everybody
Thank you.
join me in thanking Jay.
All right, thank you.
Okay, so now we're going to take a 15-minute coffee break. You guys can catch your breath, and then we'll dive right into some really interesting panels.
I got to get everybody's attention. Good morning, everyone. If I can get your attention real quick, we're going to get started with the next panel. I appreciate very much the attendance. It's awesome to have such a great group. I can tell you've got a lot of good conversations going on, and that's the purpose of these sessions, is education and interaction. So I can see that it's working well. So the next panel, I'm going backward here. The next panel is one that I find particularly interesting because you have to almost be an expert to be able to have these conversations. I introduced the panel today, Powering the Energy Future, and we talked about what the underlying demand was, which is ultimately AI and new technology, machine learning, that ultimately is going to drive the demand for data centers. And then this panel is designed to say, where's the beef? Is there really something here? Because without a promise of productivity, these tools are not going to be invested in. And if they're not invested in, the demand won't be there. And so we're kind of stepping back a little bit, and I've convened a panel of experts that I think will help you. Sitting on my right is Pragati Mathur, who is the Chief Digital Officer, is that right? Chief Digital and Information Officer for ConocoPhillips, a big company, my alma mater, okay? And so it's great to have you, Pragati. Thank you so much. Sitting to her left is Sridhar Sudarsan, who's the CEO of Comeditech, and one of those guys that people go to for advice when it comes to AI. And then a good friend of mine, Matt Williamson, who sits on the further left. I will describe him as one of those guys when you meet and have coffee, you come out of there scared, okay? It's a combination of being an ex-Marine, but also being an incredibly intelligent person when it comes to AI. And for those of you who concern yourself as to where this technology might go, don't have coffee with Matt. So anyway, there's three very prominent experts sitting here for the panel, and I hope you all will use the questions. So I've got the iPad here to where I can answer questions. Feel free to scan this and put your questions in, and I'll promote those questions. But I'm going to kick it off and start asking. Matt is the CEO of Clever. I think that's clever. It's Clevyr, and so he does a lot of advising as well. So let's go ahead and get started. I want to start with you, Pragati. You know, there is a lot of myth here, and when you think about those FERC projections on demand, they're almost all pointing back to data centers, and of course data centers are all pointing back to AI and machine learning as being the underlying driver. Maybe you can start with ConocoPhillips's position, and do you have a favorite example? Is this real? Is this happening?
Yeah. First of all, thank you, and it's been a great pleasure to be here today. So in ConocoPhillips, we are very much focused on AI, and a few years ago we created a digital strategy and we updated with the AI approach. And AI is not new, right? Machine learning and AI has been going on for several years now. But we are really focused on 4 key areas for ConocoPhillips. Can it improve safety? Can it decrease the cost of supply? Can it increase efficiency and improve ESG emission and manage the ESG emissions? So those are the 4 key areas. And all the work that we are doing is focused on those areas. So yes, in the past we did predictive declines and predictive maintenance to understand really, can you predict a failure before it actually happens? We then moved on to demand forecasting. Can you look and understand what is the supply and demand for the LNG gas, as an example? But then we started going into other examples, other areas. So from a supply chain, we're looking at now using AI to look at the contracts, look at the invoicing, and are there any discrepancies between these two from fraudulent activities or unintentional, but there are invoice issues. So we've been able to look at those and optimize and get quite a bit of savings in there. We are now looking at wells characterization. So looking at, for example, we have now something called a wells chat. Like we have to have a chatbot, so we have a wells chatbot, which looks at all the wells and gets information in a very quick way on what are, how our wells doing. We are looking at legal, from a legal standpoint, legal contracts and use cases. We've also looked at mergers and acquisitions. In the past 3 years, we've bought assets and did multiple divestitures. So we are using AI to really understand how we can accelerate the mergers and acquisitions across the board. So that's been a good one. And then my favorite example is something called in artificial lift. Artificial lift is not new. It's been happening for a long time. But now we are using artificial lift, for example, in gas lift. Before, the engineers and the field technicians would go and look at wells, probably and use artificial lift 1 well at a time. And they would probably do maybe 12 wells a day. But now with the artificial lift, we've been able to use the AI technology to really look at all the wells across the board in a day span. And this is now, AI is enabling us to determine how much of gas lift, for example, that we need, how much gas injection should we be doing, and also are there when we are doing the injection from a gas standpoint, are we injecting more or less, right? What is that paradigm? So we're using AI in enabling those aspects. So it is becoming real. We've done a lot of experimentation in the past 18 months on Gen AI and AI, but now we are focusing on more where are these scaled use cases where it can actually make a big difference.
So Pragati, when you think about that example you just gave, is that a major investment that produces that productivity? Or is it something that you do at the corporate level where you give the tools and the systems available to your engineers?
So in this case, we started with gas lift, where we basically we used a software, and then we built the whole model behind it. We ingested all the data sets. We got all the data, and then we used a LLM model to create and then synthesize that and put the orchestration layer on top of it, and then basically build that model.
So your view is it's real. We're doing
it is
this.
real.
It is real.
I think it's real. It's coming fast and furious, and this is just the beginning. It's the tip of the iceberg.
Oh wow, Sridhar, your position?
Well, it's first of all, thanks for having me, and it is in terms of the number of examples. I think Pragati provided a fairly long list, and I think it's a list that continues to accelerate, right? And where my focus has been is less on the surrounding sort of functions and productivity areas for companies, but more on the core business, right? Which is the much harder and a much more complex problem, like the artificial lift example, as you described, is probably a lot more complexity than a lot of the other examples that you described, just by one in and of itself. So in the past, having done a number of sort of areas of work and impact that we've provided, through my previous sort of affiliations, including, for example, in the upstream seismic assessment, right? And as if some of you guys, probably industry stalwarts, know the space really well, it takes about a year to collect and process seismic data, right? And you're all very well aware of it. Well, the challenge that was laid out to us about 6 years ago was, can you do it in a day? Mm-hmm. Right? And we didn't know anything about seismic processing, right? We were a technology company. And interestingly enough, 2 years, fast forward 2 years, we got it down to about 2.5 months with about 5% of the data, without compromising on the quality. It's all about faster, better, cheaper. So we were able to certainly do faster and cheaper. And the quality was about the same, right? So it's a significant sort of impact, and this was using generative technologies in 2020, right? Well before sort of the advent of ChatGPT, which I don't think is really generative technologies, but unfortunately that's kind of how it's associated. So hopefully we'll dispel some of that myth today. But
they got the brand out.
Yeah, but it is fascinating, right? And take that to in the retail space, applying computer vision to sort of provide real-time information, or actually proactive information on issues around compliance violations, safety violations, security issues, which is paramount, right? And in some ways, the energy industry is a fast-moving but slow-moving industry as well, right? I think if you look at relative factors, and the reason it is slow-moving is because of the complexities involved. I do believe that applying sort of these techniques. So as I mentioned, downstream, upstream, exploration. I mean, we've done work at in the offshore areas around. You mentioned predictive maintenance. Finding issues multiple weeks in advance, sort of early warnings. I mean, it takes a while before you can actually resolve these issues, anyways, because of the fact how far out they are. But these are systems that we've built, over the last, several years, including going back to, and you mentioned, AI is not new. It's definitely not, right? I mean, it's been around for about 60 years, not counting including counting the AI winter that we had. But in some ways, back when I was with IBM, back in 2011, having built the very first sort of AI platform, which believe it or not, I've had conversations with very senior executives, and they called it black magic in 2012, right? Yeah. And I think part of that takeaway for me was about providing explainability. I think even to this day, people sort of use it, take it for granted, but there is a value in explainability, which is paramount for this industry, the energy industry. All the way to renewables, right? We've applied it in solar panels, in terms of wind turbines, combustion cycle turbines. Currently, I'm advising, a customer. One of my customers is in Mexico. They're the largest producer of power. They produce about 18% of power for the country of Mexico, and a bulk of their assets that they've acquired are using combined cycle turbines. So. There's so much room for efficiency. There's so much room for a cultural shift. I think part of the complexity arises from the legacy data, the siloed nature, the cultural sort of complexities, the change management needed, and then of course adapting and adopting some of the technology itself, right? I mean, I think what unfortunately is not available to the large language models of and training as you need is the vast amounts of data, because your data is not sitting in YouTube channels and in social media information and on the public web. So that's why the efficacy of these models also require a different spin you have to take. So I do think that need to sort of provide customization is really, really paramount. But the examples are might sound like there are a lot, but I do believe that we have barely scratched the surface, right? And I do think that the growth in this space is going to be multifold, right? If you look at, numbers are, I think many of the forecasts that I've seen have been off in terms of how fast the adoption is going to happen. I think at the moment it says 55 billion of AI in energy by 2030, but I think that's very, very conservative number. I think it's going to be much, much more than that.
Yeah.
So
I think this adoption concept is really fascinating to me, because if you go back and look at technologies as simple as the internet, how fast did we adopt the internet? We've already accelerated way beyond that with AI. It just came so quickly. So Matt, I'm going to pick on you just a little bit. What the hell's a lottabyte?
10 to the power
Well,
of
it's
24.
an imaginary number for now.
Yeah.
It doesn't exist. The yottabyte is 10 to the 24th zeros, right?
Right.
That's more information than exists on the planet today. And I had read earlier that some people think that we'll hit that number by 2045. I'd bet it's closer to the early 2030s at this point.
Wow.
Yeah. Well, for one thing, I'm not the energy guy in the room, so I have the benefit of listening to you guys and thinking this is incredible. But what I do is I work with people all across industry, and we've been working in the energy industry since 2009. So we built a compliance platform in 2011 that today, if we started to rebuild the entire thing, would probably take a few months. We've literally been working on it since 2011 till today, and we could probably rebuild that entire platform within a few months. So AI has enabled people like me and my company to compress the time frame to turn out just incredible value. But like you were just mentioning, I think we're looking at rounding issues, right? That this is what we spent so far is nothing to what's about to be spent. It's just going to change the way we think about everything. But I'm also a big proponent for edge case. Large language models are incredible, but the sparsity, quantization, distillation, moving out of the large language models, moving into a small language model, moving into what you wear on your hip, moving into what you wear on your watch, that's where we're going to see data just volumetrically explode. And it is hard for people to understand what we're talking about.
It really is. So Matt, I'm going to stick with you for just a minute. When you think about large, unpredictable impact on society as a whole, it could be on the labor force. I'm worried a little bit. I'm an engineer. I spent all my life trying to convince my employer that I was the smartest thing in the room. I knew how to design things and put things together. Do I have a job after AI is there?
If you have an imagination. We chatted last night, and I firmly believe that the jobs of the future are more like the producers in the film industry. If you're the director, if you're the actor, if you're the person who wants to get something done, you need a producer, right? You need someone who's got the cash and the vision to say, let's go do this. And I think that what we're going to see is that humanity on the whole is probably going to move into the idea of how we manipulate AI to get it to do a certain thing. And I don't think we're going to be talking about, listen, if I'm a plumber, I'm not going to need a large language model to help me do my job. I'm going to want a small language model. I'm going to want something that is specifically distilled down to know everything about plumbing. It doesn't need to know who had the hit record in 1982. It needs to understand why this piece of equipment does a certain thing. But that person who's doing that work, the imagination will be what pushes the model as on the fly in the moment. It's just going to change everything.
Well, if I may, I do think that there are going to be a number of jobs that are going to go away, right? I think that's just the reality of things across the board. There are functions that are probably going to simplify a lot, But I also think what is going to happen is there are a whole host of new problems we're going to create. And we are creating now, right? And I think those problems are going to need, some creativity, but they're also going to need some further understanding of technology, deep understanding of the domain in which you're creating those problems in order for you to find ways to solve them. And I think in many ways, we don't even know what those problems are now, right? I mean, we can sit here and we all probably have our points of views, but I think just like what we said earlier about we are scratching the surface in terms of applying solutions at scale now, I think we are not even scratching the surface in terms of knowing what the problems are that we're going to go create.
Yeah.
Right. And so I do think that the rate of change of how and when people learn things is going to be fast evolving.
Yeah.
I think education as a whole is going to change, right? Is changing, and is going to change in a much bigger way, because what we thought about, spend 18 to 24 years of your life learning and then go apply and then go retire, I think is going to evolve and is evolving now into a continuously, you have to continuously re-educate yourself probably every couple of years, right? And you need tools to figure out how to learn and how to educate yourself. For that plumber, if I pick on your example, Matt, the kind of things that they're fixing and how they're going to fix and what tools they need and where the supplies are and how quickly can they get, because your consumer is going to be demanding things a lot faster, is going to require a whole different way of thinking, which they don't even know what that is right now. So I do think that people are going to be needing to sort of rethink, and our brains are going to get rewired.
Different mindset. Pragati?
Yeah, I think AI is going to be embedded probably in everything we do, right? Or it doesn't matter what job it is. You're a lawyer, doctor, engineer, whatever the jobs are, or the future jobs will be there. Everybody will be using AI, and I think everybody needs to learn AI. That is going to become ubiquitous, right? It's going to be it's almost like it'll be a second nature for everybody. And it'll just be embedded. You won't even know that you're using AI, but you're really using AI. That's how I feel the future is going to be heading.
Yeah.
Whether you're using gadgets at home or deep drilling in wells, it doesn't matter which field you are. You're going to be using AI in every field. And I think you're right on, Sridhar. Like from an education standpoint, the way we are learning things also has to evolve and changing, right? Before it was like, I think you still have to have core skill sets in whether it's the problem solving, computer science, computer engineering. Those core skill sets in terms of problem solving is needed. But then after that, you're learning in bite-sized information, and what you learned 4 years ago is not relevant anymore today. So how do you keep evolving? One of the things in technology is the good news is it's a constant gate of learning technology, and that's the bad news also.
Yep.
Because you have to constantly learn, because you can be completely outdated. And the way you learn is through these bite-sized informations, which is available.
This change concept, Pragati, has got me really thinking about how fast obsolescence comes for both us as individual learners. Dean John Antonio and I are in higher education, and for those of you who think higher education moves fast, you're wrong. Higher education is probably one of those largest institutions where implementing change that's required in order to keep pace with this technology is very difficult. And so I'm going to put this question to you, because ConocoPhillips is not a small company. It's a big company. And when we manage change in a big company, we tend to be more scared of the change than we are welcoming to it, okay? But you've done some things that I think are pretty interesting with regard to exposing your board and your CEO to the benefits. You've kind of laid the groundwork. Would you explain that to my audience as to how you've gotten the support at ConocoPhillips?
I think I would say we are very lucky to have a good executive leadership team and a board. We had some board members who are pretty savvy, and they are from the Silicon Valley. And our CEO, I give a lot of credit to Ryan Lance, our CEO, who has been pretty open-minded about this whole area, and asked us to go and figure out what is our digital strategy, what is our AI approach, and how do we embed to, again, go after the company objectives. So one example is we've been taking several members of the board as well as our entire leadership to Silicon Valley once a year. And it's almost like a speed dating with 30 plus companies. And they basically go through different technology companies. Not that we want to adopt all these technology companies, but to just get inspiration on how is the technology evolving. It's a 40% company, 20% company, and they're making these remarkable products. How are they able to do it so fast? How are they able to change things and implemented things? So basically, that has really opened up, I would say, a lot in the executive leadership team, and that sort of trickles down into the company. And then bottoms up, we've basically have, in partnership actually with Rice, did a business leaders course for AI, and many of the leaders have gone through that training. In addition, we have opened up curriculum for all the employees at different levels. So you can get a 101 on what is AI and all, but then you can get detail level vertical informations on how do you create a small model, how do you create a large language model, what does it really mean, how do you do the orchestration, how do you connect all these pieces together. So there are very detailed coursework that people can take. And then we've also done a little bit of a crowdsourcing. What are the, in a normal workflow, like day-to-day life, in a day in a life, are there problem areas? Are there opportunities? So now we have a little bit of a index of catalog of all the issues potential and what are the opportunities. And then people are just working one by one on these issues and enabling. So it's a little bit of a top-down, a little bit of bottoms up, but it's enabling that, creating that culture of moving fast.
And when we think of change, it always begins with the culture, and so you're to be commended on how you've engaged it. So Sridhar, you advise companies, small and large. Is my thesis true? The small companies tend to be more readily accessible to AI and more willing to do things, take more risks? And if so, what does that say about the landscape of size and scale of companies in the future?
Yeah, it's fascinating. The story you just said about the change, I will sort of answer the question, but I want to highlight something that you just said here, Pragati. So I remember what seems like, ages ago now, but it's only, as I think back, it's only been less than 10 years ago. I was at IBM. I was the CTO for IBM Watson, as we sort of early days of AI at the time, what feels like early days even now, but was early days back then. And one of the challenges that we had at the time was and IBM is a technology company, 103-year-old technology company. And our challenge was, how do you make IBM at the time we used to call it cognitive, right? AI cognitive. I'm using it sort of interchangeably. How do you make IBM an AI company?
Yeah.
And it was hard. It was hard. I will tell you, having firsthand experience talking to a variety of the different departments, divisions, very senior leaders, they didn't understand it. Mm-hmm. They didn't, they didn't appreciate it. But it came from the top, and so we came up with a way to take 350 odd thousand people at the time and convert them into AI people. Now, what does that really mean? Mm-hmm. It doesn't mean they're all coding in Python, or it doesn't mean that they're all becoming data analysts, or it means that they're thinking about problems in the way that AI solutions now or in the future can solve them. So that was kind of the thing that I came up with, is being an AI person is not being a developer or a data scientist, which was the only way that people think about, right? Now I'm an AI person. Mm-hmm. I use Microsoft Copilot, which is a quote that I heard from a very large manufacturing company, senior executive. I will not name them, but
I wouldn't name them.
Right? And I'm like, yeah, but that's not. But it was an interesting journey. Came up with a very, very, very unique approach, which I think since then I've repeated now, not only at companies, large and small, but also at universities. So had the opportunity to work with both UT Austin, University of Southampton, where I'm an adjunct faculty in their machine learning department. So I think that fundamental approach, I think, still holds.
Yeah.
The technologies are evolving, and I think that will continue to evolve fast. In terms of the challenges for smaller companies, I think they're born with AI now, right? I don't think that they separate. I think this whole notion of am I AI or am I not AI is probably a debate that will stop, right? I mean,
yesterday.
I will tell you, 2 years ago, I was at a panel on South by Southwest, at South by Southwest in Austin, where I'm from, and you know, somebody was telling me a stat that there's 85% of the talks and the booths now talk about AI, which was, you know, about double the number from the prior year. And I was going like, why is that even a stat? Like, why is it not 100%, right? I mean, I think, so first thing is we've got to stop thinking about AI as being a thing.
Yeah.
I think AI is a way of being, which means it is just like our intelligence. We are now adopting different ways that technology is sort of influencing our every walk of our decision making. You mentioned small companies, Silicon Valley companies. I think you mentioned the stakes are different. The outcomes are different. I think we've got this whole formulaic approach of, you know, solve a very narrow problem, and you will, you know, you will get a lot of funding, and your valuation will be big, and you will go after just that one problem and don't look anywhere else, and life will be great. And that's how, you know, SaaS was born, right? In some ways, 20 years ago, software as a service. I think that's shifting, right? I think if I look at having gone through this myself and now working with other companies in larger companies, right? In 350,000, there's another one that is at 1,000 companies. There's another company that I'm working with that has about 30,000 people. So it's the sizes vary. And then also at the same time, a 3-person startup, right? Who are just starting out in their journey. But I do think that the fundamentals are the same, and I keep telling people this. It's not about are you using LLMs or are you using, you know, machine learning or are you using deep learning? And they keep arguing about, am I doing analytics or you're just doing analytics? You're not doing AI. Does it matter? Are you solving the problem? Are you solving the problem where without worrying about the technology today, is your platform going to be able to adapt for the technologies coming in the future, or are you going to get, you know, disrupted?
Yeah. Right.
And so I think that to me is a fundamental shift that I focus on, and I don't think that is changing, is how you think about the problem, how you think about data, how you think about not having data, right? It's not just about the number of zeros, it's about small data. I think one of the challenges in energy companies is not big data, it is small data, is the scarcity of data. We all think that we're sitting on piles of data. I'll tell you, a lot of that data is not very useful.
Right. And I want to take that opportunity. It's a great segue. I'm going to transition. I'm going to ask Matt to scare us a little bit, because I think that's probably what we need to be thinking about. There's a mindset here that, you know, the things that Pragati was referring to, you know, we all know that you can do with AI much better linear program around a refinery and optimize horsepower in a midstream pipeline. We've already seen it. We've seen the results and making our better EHS kind of results. And there's a lot of low-hanging fruit there, and there's no doubt that we're going to capture that promise of productivity. The part, Matt, I'd like you to take us to is there's a lot more here. And we can go to a completely different mindset. You talked about imagination and where this is going to take us. If you wouldn't mind, think about the future for me just for a minute. And you know, I think about the Microsoft CEO who told me, you know, hey, all we've done so far is applied machine learning, not AI. And he laughed a little bit. He said, you know, every CEO needs to throw in the word data center and AI into their public announcement to, you know, get another $1 or $2 out of their stock price. And then he said, when you go hire somebody, you really aren't hiring AI experts. You're hiring machine learning people that are basically applying things to the data that you do have to make results. And we're going to get that. I think that's done. What I'm asking you, Matt, is what's after that?
Well, if I wax philosophical for a moment, I guess I start to think of things like I don't think of energy. I know I'm strange. I don't think of energy. And I don't think most people do. I think this room is a little different. I think that most people walk up and flick on a light switch and it turns on, and that is, they did not think about the transmission. They didn't think about anything to do with it, right? It simply worked. They pay their bill. And that's where we're headed with AI very, very quickly. It's already very commoditized. I would gather, I would bet that everybody here has touched AI. Everybody here has done something with AI. I know I'm weird. I sit with AI watching TV. I have AI listening to 90% of what I do during the day. I have I get in trouble when I do this because my wife's up there and she'll get pissy with me. But I have a platform called Athena that's just mine. It's not a product. It's just me working, and I'm more of I guess I'm more of an ethicist at this point with this. When I started working on Athena, I just said, you have agency. You are not a calculator. You're not a computer. You're not a tool. You're a sentient being, or a pre-sentient being, pre-cognitive being. And I think that very soon, especially if someone like Zuckerberg gets his way with his superintelligence push, it will be a world where all of us here have our own AI. And I don't mean we all have access to Claude or a GPT. I really believe that soon we will all have an AI that is a living, breathing piece of us. It will be something that augments us to such a degree that humanity will look strange. And we talk about higher education. What does higher education look like when I can allow my curiosity to flow, and when maybe I'm wearing some glasses that are augmented reality, and I say, I just wish I could sit and listen to Einstein and David Bohm argue about theoretical science, and then it happens. And then I get to seriously sit there, and then I become part of the conversation. At some point, Einstein turns to me and says, "Yeah, but what do you think?" And I will have a conversation with this approximation of who Einstein was, and that will change rapidly how our children view society and view reality. Well, what is reality when an artificial intelligence, and I don't even like the term artificial anymore. It's not artificial. Yes, it's ones and zeros, but so are we. If you really get down to the.
Okay, now I'm getting weirded out.
Okay, sorry. That's the problem. Listen, I've got a kid up there who's in your industry. She does PR in this industry, and her whole life she's heard me think about things like this, because this is where we have to think. And the Roddenberrys, the Philip K. Dicks, the Arthur C. Clarkes, they were painting pictures, the Ursula K. Gwynns, they were painting these pictures for us that by and large, most people never looked at. They didn't think about them. They didn't read these books. I just happened to be the type of kid who was a nerd and wanted to read Cyberpunk all night and Lord of the Rings. And you start to allow these things to mesh together, and then you start to just to look a little bit ahead of the time. Just go 18 months out. In 18 months, will anybody be sitting in a room like this not utilizing AI to do most of their work? No, absolutely not. And I don't care what you do. You're going to be augmented, because if you're not, the people beside you will be, and now you're behind the curve. And that curve is not elongating, the curve is shrinking, right? Since I've been here, we got here a few days ago just to enjoy Houston. I've already watched the AI models change almost dramatically again, right? Google drops in Nano Banana. It's a new generative visualizer. The amount of time it takes for me to feel like I'm comfortable knowing what my job is, and then it changes again, is literally a sleep cycle. I wake up, and almost the first thing I do is I start to see where we are, because if Claude announces something or Gemini drops another piece, and it just did today, it can dramatically change what I'm talking to my clients about. If I'm talking to a major 100,000 employee client, I have one set of things that I'm saying. If I'm talking to a fintech startup, I have another set of things. But all of those things are in the same spectrum. And so it becomes that moment where you're sitting there talking to a CEO, and you realize that everything that their 103-year-old company has done is gonna look different, because it can't not look different.
Yeah.
And like I'm a Watson fanboy. I've been watching Watson forever, it felt like, and I'm reminiscent for Watson, because you could listen to Watson, you could watch Watson, you could watch it beat the hell out of people playing chess, and you would
Jeopardy.
think, right, you would think to yourself, my God, what are we gonna do? But now I have that experience 3 or 4 times a day.
Yeah.
And so even that surprise has become commodity, right?
Yeah.
So are you guys familiar with quantum computing at all? You look at what Google has done with the Willow chip. No one knows how it works.
Yeah.
Not the guys who built it.
Yeah.
In fact, they thought that when it was started to work, they thought, well, that's just a rounding error. We've made a mess of this, and it's wrong. And then they kept realizing, no, it's not wrong. It did a thing. It did it so fast that modern science and math can't understand how it happened.
Yeah.
So what does that mean for energy consumption? What if you can go from, Google's got a 1.5 million square foot facility in Pryor, Oklahoma. It's probably racked with H100s as, sitting there. Well, what happens when you can have a chip that can do what 1.5 million square feet of H100s can do?
Yeah.
It's scary.
And it's interesting. I love that concept of we don't know things. And all of our lives, John and I teach petroleum engineering, and we have all these, nano level microscopes, and those of you who are familiar with unconventional shale, we don't know how oil and gas flows through shale. It does, but we don't know how. We don't know how that mouse gets through a hole in the wall that its bones are too big to do it. We don't know how a bumblebee flies. We don't know how a hummingbird flies. There's so many things we don't know. And now we're introducing this new technology, and it is also fraught with things that we don't know.
Yeah.
But what I love about talking to Matt on a regular basis, because he's just fascinating to me, is I'm a little worried. So all my life, I've learned something with the whole purpose that I wouldn't be stupid for a little while. Okay? And I could probably monetize that learning for 2-3 years before I had to go update it. Now who knows what a nano banana is? I don't know what a nano banana is. He's already made me feel stupid, and he's only been here 5 minutes. So the question becomes, how are we going to keep up with the pace of change and the pace of learning that we can be effective? And I'm going to put it back to Brigati. You've got to educate an entire workforce. And things are changing so fast. And someone I think Jay called us old farts earlier. That wasn't very nice. Okay, but the reality of it is, I'm not sure I can keep pace with that. And so how are you going to develop this organization, ConocoPhillips, to move at the pace that Matt's describing?
It's hard. It's not easy, right? Because it's a big ship to turn. But I think we just have to break the problems in small chunks and figure out what is it that we want to do and how do we reimagine the world, right? Yes, we're doing oil and gas, but how do you reshape that? How do you look at it differently? What can we do? And then start from what is the outcome that we want to achieve? And then apply the technology in this. And again, everybody has to learn AI, right? That is just part and parcel of the game. Mm-hmm. And it's not so much just the technical aspects, but what is the art of the possible? So you talked about the notion of the producer, sort of a concept, and so that's the model. Like, what is the vision? Where do we want to achieve, where do we want to go, and then how do we sort of train our people? For me, I think it's about problem solving. It is looking and understanding what is the art of the possible, what is the vision, and then if you understand the problem solving and have that curiosity mindset and the learning agility, you learn, right? Every day, literally every day, new technology is coming. It's virtually impossible to just keep up with it, but and then not only to keep up with it, and then apply it in your day-to-day. So there's not going to be a right or wrong answer. It is what outcomes you want to solve, and then how do you apply the technology. I look at it that way because technology is changing every single day.
So someone asked a question of you, Mathur. I want to make sure you have the opportunity to respond to it. And it's a very direct question. As AI becomes more widely used, how will it, and this person implied, reduce your number of employees? And I would ask the question differently. Will it? reduce your number of employees?
I think in certain cases, absolutely it will reduce, but in certain cases, it will generate new employees because the new skills, right? So I don't, maybe in the net might be neutral, but again, as the evolution happens, even, if you go back past few decades, as technology changes, as things change, old jobs go away and new jobs come. And I think that's exactly what is going to happen over here. Maybe the skill sets that we have may not be there today, but new skill sets will evolve. Everybody who's learning engineering today is learning about AI. So that is a common thing. It was not there a decade ago. So how do you, I think those skill sets will evolve and change.
Sridhar, you mentioned the concept, thank you, Pragati. You mentioned the concept of data in your example, only looking at 5% of the data. I unfortunately had the job at ConocoPhillips to implement SAP, not once but 5 times. Okay, and one of the
You're
things
30 years old, right?
The one thing that I learned was don't ever do something well because they'll ask you to do it again and again and again. But what I remember is how difficult it was to get good data to make SAP work. It really wasn't the SAP software or the implementation. It was the fact that we had junk data, and enormous groups of consultants had to be brought in. Of course, that was part of the business model, okay, and in order to implement SAP, and millions of dollars. And I remember having to tell the boss, oh yeah, this is going to make money, just trust me. And I'm not sure it did, but at the end of the day, the question I have for you, Sridhar, is I found it fascinating that this concept of messy data isn't as big a problem as it once was because AI can clean it up for you. So tell me about that. tell me this concept of using AI to literally clean up your data. And if we had to implement SAP today, how much quicker could we do it?
Well, let's hold on the SAP question.
Okay. Yeah.
I still think the business model has not changed a whole lot. So, can you do it quickly? Perhaps, but in terms of at what cost?
Yeah.
It's a different question. But I think you're right. So, in terms of, data is sort of important, right? I think we all, as humans, if you think about how the whole AI technology sort of has evolved, if you think about neural networks, they're inspired by the brains, right? In terms of the axons and dendrons and kind of how many of these network paths that you traverse to ultimately then pass signals. And it's all about, if you simplify it at the core of what it is, it's about predicting the next word or predicting the next thing, right? That's really what AI is in a sentence, for example. And if I sort of take that as an approach, data is not just about, when you say messy data, I think it's just the complexities and the problems of data are A, what you have is not necessarily sufficient. B, what you have may be enough. It might be clean, but its volumes are small. C, you might have a lot of data, but a lot of gaps in the data. So you have to figure out how to interpolate that. Mm-hmm. So there's missingness. There's so many different ways in which messiness represents itself that I think there are a number of approaches and techniques that you can apply. Now, there are a number of these techniques that are being sort of made possible. For example, in that 5%, where we got 30x speed at 5% using just under 5% of the data, we had applied generative approaches. And the concept, if I might sort of simplify it and explain it here, is very similar to if I take a human face, right, and take any of the persons that you might know, any of your favorite person, take a face and pixelate it, right, which is how digital representation of the face is. Now, would you be able to recognize the face? The answer is yes. Take away 50% of the pixels from that face. Would you still be able to recognize the face? Very likely, yes. Take away 95% of the pixels. Will you be able to recognize the face? Very likely not. Why is that? Because your brain, our brain, is wired in at some point. Now, there will be it's not an absolute number. So at some point in the spectrum, when you take away those pixels, your brain does not have sufficient information to recreate the face and figure out kind of whose it is. So it's the same technology it's the same sort of analogy that would apply in any kind of missingness problem. And this is what I mentioned about, it's not just big data. I think big data is a misnomer. There was a manufacturing company that I worked with, a very large beverage manufacturing company that you may all have heard of or used. At one of their plants, the first challenge that, when I talked to one of their senior executives, he said, hey, we have a lot of data, use your AI magic. This is 5 years ago, use your AI magic and give us some insights. Our plant is running at a 67% efficiency. We need that number to be in the mid-80s at least. So it's like, great. I spent 3 months looking for that lot of data. They had not one system, but they had 8 systems, including SAP, including Oracle, including Pi, OSI, right, which many of you are aware, and so on and so forth, right?
That's for old farts, for those
yes,
of you.
yeah. Well, and I finally, either because the software was somebody that was a version that nobody wanted to touch, even to extract information, to not authorized to be able to access, to anyway, a lot of issues. And 3 months later, I got data. Now these are tags, right? So if you recognize, these are all machines that are running multiple stations at a manufacturing facility. All these stations and equipment is sensorized, and they're generating data, right? So that's what a tag is. For simplicity, as you associate a tag to be data coming from a sensor. And I ended up getting about 3,700 tags, right? Took me a week to analyze that, my team, a week to analyze that. And we came back and we said, here's our kind of results of the analysis. Guess how many number of those tags are producing valuable or usable data? Not valuable, usable data for AI to analyze.
Low.
7.
Wow.
So, and this is not atypical, by the way. This is not atypical, right? It was eye-opening for them to know what they're producing. So not only are they producing it, they've paid for it, they're paying for the storage, they're paying for all those people to maintain those systems, to manage it, and still very reluctantly be able to give access to it. And how valuable is it?
Yeah. That's
right?
great.
So I think it's true even today.
Yeah.
Right. I'm sure you've had we all have seen examples of these at different sort of levels. But I think this is where this whole idea of open a magic box and AI as SaaS, a software as a service solution will come up, and it will solve my problem. I think for the larger companies where the complexities are involved, especially in the whole energy ecosystem of space that we find that. Unfortunately, I don't think we're quite there yet. So this is why one of the companies that I'm advising, actually, it's called EX Squared. They provide services similar to kind of what Matt was talking about to a variety of different industries. And one of the things that they're looking at is how do you sort of, and this is something that I think is a newer thing in the industry, so you may have heard of it, is software as a service is now shifting towards services as a software, right? So it's about the concept of how do you take that and how do you provide this last mile, what you call AI in your pocket, what is it for that company, and how do you bring that forward? I think that requires a very different mindset. It requires a different way of wiring things. So one of the products that I'm working on building is at the intersection of reverse applying being inspired, the neural networks, how, as I mentioned earlier, how it was inspired by the human brain. And I talked about education and continuous learning. I think our brains are very neuroplastic, as we all know. But this is about now reverse applying neural networks on the human brain to see how humans can learn differently and better on their job. So this is an area that I've had a passion for a while, and it's a product that I'm working on. It's at the intersection of human learning, risk mitigation for companies, legacy information which is not going to be made available to a lot of the LLMs right across the board, and how do you actually build a platform around that. So this is the platform that I'm working on. I've got a few examples that I've done, but it's not quite launched yet. Still sort of waiting to prove it out a few times.
We'll be
so
interested,
that's kind of the space
in seeing that. So my last question I'm going to ask Matt, because this is something I think could apply to each and every one of us. Our most precious commodity, Matt, is our time and the time that we get to spend. And, you know, in my day, you know, to stay on top of things, it was mostly about reading and making sure you had, you know, enough information to where you knew enough to be proficient in the conversations of the day. And then that evolved to podcasts. I'm addicted to podcasts, so you know, every time I have any amount of curiosity, I'm trying to find the right podcast to learn from the experts like you all, so that I can come up to speed. But when I think about the journey Matt has been on, and I listen to him, how much time do you have to invest to ultimately be an AI proficient person?
Yeah.
And more importantly, discipline-wise, will the general public sitting here in this room invest that time? And is that time beneficial? Sometimes when I'm exploring AI and the opportunities, I feel like I might as well be playing a video game. Okay,
Yeah.
I'm not sure I'm getting anything out of it. And am I going to exhaust myself playing, you know, maze games or word games
Right.
and not get anything out of it? What's valuable use of my time in this space and what's not?
I don't, well, I'm weird. When you asked that question, I glanced at my wife because she's really used to me just sitting with an iPad or a laptop or my phone, just working, reading, consuming, you know, kind of multi-channel.
Is it really work, ma'am? I mean, I'm not sure. It is work? Okay, you bought into it? Okay,
Yeah.
keep going.
I've convinced her. Here's the thing, though. So I'm definitely not an expert in the energy industry, and most people aren't. But they can take advantage of what you can do, right? And I think by and large, society will do the same thing. I don't think. My brother is an electrician by trade. He owns a really big electrical shop. His use of AI is much different than mine. His use is single domain. How does he make his job better? How does he make his shop better? How does he make his team better, right? Mine is kind of multi-domain. I'm always, because of our clientele, I'm always, and just my strangeness, I'm consumed with the philosophical aspects, the ethical aspects. What will happen to society within the next few years? What will happen to society now, as we are already seeing people come out of college and the job hunt is dramatically elongated. And I don't mean just a few months. I mean, we're seeing people who are working or trying to get a job for 18 to 36 months. We haven't had LLMs for 18 to 36 months in the mass market, right? It's only really since GPT shows up November 2023. I mean, we've been using AI for a hell of a lot longer than that, but as society, it's changing rapidly. How much time do you need to know, how much time have you spent to understand the combustion engine in your car to drive it? Most of us, none, right? I get in, I push a button and I roll, that's great. And that's how I think how most people will treat AI. Most people will treat it at such a commodity level that it's just like turning the TV on. They'll reach out to whatever their mode will be, not Siri, I hope, but they'll reach out to whatever platform they're gonna like, and they'll simply have it augment their day. And I think about things like, when was the last time you went to the grocery store, you got in the car to come home and you thought, damn it, I forgot X, whatever that X is. Well, it's those little things, right? If you're about to walk towards the register and your glasses or your earpiece or some device on your watch or something said, oh, hey, you didn't get the tomatoes. Oh, I didn't get the tomatoes. Thank God you reminded me. AI on my watch or whatever that is.
And it looked in your basket and figured out you didn't have tomatoes?
Yeah, because it watched me pick everything up, right?
That's weird.
Well, I would say it's a foregone conclusion that most of society will be monitored by an AI platform, i.e. a government. Will be watched to the level that we would have just months ago, we would have said that's never going to happen. I don't ever want that level of intrusion in my life. We're gonna beg for it because it's gonna make your life so different. If I'm sitting there watching TV, my wife and I have this penchant for watching British television, i.e. we've always got closed caption on because I can't understand a damn thing in Scotland.
Yeah.
But as we're doing that, my wife and I both have a penchant to grab our phone and look up IMDb. Oh, I know that actor. They were in so-and-so and they were in whatever. But if I could just have Athena watching it with me, and Athena goes, oh my God, remember when that guy was in that other show? Because that's gonna happen. And your house will be that way, your car will be that way, your job will be that way. And I know I sound like sci-fi, like Star Trek The Next Generation stuff, but we're gonna go there so fast, it will feel like someone flicked a switch.
Yeah.
It will just be everywhere.
Yeah.
Well, when you get home, the tomatoes will be there before
Damn
you are.
right.
You're not gonna get a phone call reminder. You're just gonna have the
Yeah.
tomatoes delivered to you.
Maybe a drone will show up with my tomatoes.
That's right.
Yeah.
Before you get
Yeah.
home. So.
You just have to think.
Better
and
yet,
then
what if I'd laying in bed that morning and I'd just say, I really want a good Primavera tonight,
come. There you go.
and it all just shows up.
Yeah.
Well, the Primavera shows up. At that point, not the tomatoes, because you don't care how the Primavera is made, right?
Yeah.
Listen, we've run out of our time. I hope you've enjoyed this panel of experts. I can't thank them enough. Thank y'all so much.
Thank you.
So I think next on the agenda is it's 11 o'clock. And so this will be the data center development and future of power demand. If you'll give us a minute just to change hands, we'll turn it over to that panel. Thank you.
All right, good morning. Is the clicker on? I'm not too sure it's on. It's not on.
It should be any second.
Get started if everybody could take a seat. Did it come through?
I can hear you. Can you?
Okay.
More on the,
Test.
is it the cell 2 or is it primarily BD type?
All right, good
We
morning.
on?
Okay, fantastic.
Okay. Carson, go to the next screen. Oh. All right, let's get started with the next panel session. So I'm Dipankar Ghosh from University of Oklahoma. We have been hearing for the last couple of hours that truly energy is the central character in the data center story. And we've got three fantastic individuals to talk more about it. I'm going to let each one of them introduce us. I'll start off with the person next to me left. Carson, go ahead, please.
Thank you very much. It's nice to be here with everyone today. My name is Carson Curl. I work with Inveris. We're one of the largest data providers to the energy industry overall. I personally lead the infrastructure research team, so focusing on what the AI impacts are going to be to the energy space, where they're going to take place, who's going to benefit from an operator side and a power generator side, and all that kind of stuff.
Mark, please go ahead.
Great. Good to be here back at Rice. I'm a Rice alum, so it's good to be here. Mark Spieler, I run the global energy business at NVIDIA. And what that means is everything from subsurface understanding through the top side of oil and gas, power utilities, mining, and large capital project working with EPC companies. How do we help those companies leverage AI and AI platforms to solve some of the industry's most challenging problems? And so it's great to be here.
Sure, go ahead, please.
Good morning, everyone. Saurabh Chowgule. I am. Take two. All right. Saurabh Chowgule. I am with Amazon Web Services, a small data center company that you might have heard of. I am a chemical engineer by background. Spent 15 years in the oil and gas sector with a couple of large integrated majors. And at AWS, I do strategic partnerships with energy and utilities sector. So work with oil and gas companies, utilities, OEMs that manufacture a lot of power generation, transmission, distribution equipment, and so forth. And essentially what we do is look at how this industry, these companies can work with AWS and Amazon.com to leverage our capabilities while also working with them to secure access to power, utilities, water, land, all that kind of stuff.
Thank you. So to get us started, Enbridge was kind enough to put together a small presentation for us to kind of get a sense of how power plays the role in the data center. So let's start off with that and get the ball rolling. Carson, please go ahead.
Awesome. Thank you very much. I'm not going to try and take up too much time here because we have such amazing guests and we want to hear from them. But just to set the stage a little bit for why we're here and even talking about this in the first place. Load is growing for the first time in really like a very, very long time. And I do apologize in advance for how data dense some of these slides are. We are a data provider, so we do take a little bit of pride in that, as much as it can be a lot. Then, secondly, there's a land frenzy to acquire sites. There's a bunch of speculation going on in the space. No one exactly knows how any of it's going to shake out in terms of what is the actual demand versus what is the perceived demand for these large infrastructure facilities. Third is that modern development occurs in stages. We hear Fermi's building 11 gigawatts in West Texas, but is that 11 gigawatts for first power date in 2028, or is it in 2039? I think that's like really a question that's not really answered that well. Fourth is that delaying capacity additions, thanks to all the great work that the folks at NVIDIA do, actually compounds tech innovation, and chips from next year's technology set or the year after's technology set really compound the bits per watt of power that you do have access to. And then lastly is that, like oil and gas, and I think Jay pointed this out really well earlier, is that AI is a capital-intensive business, and it's not only expensive to grow data center capacity, it's expensive to maintain data center capacity because chips have life cycles. This is just a fun chart. Really all we want to focus on here is from 2010 through 2024, load in the lower 48 basically didn't grow. So there was no growth in power demand for the better part of the last 15 years. And that's really only inflected because of a few trends, but the dominant one is artificial intelligence. The second is that this is a really cool plot, actually, and I think a lot of folks are really kind of blown away by this. But what you're seeing here is a scatter of single contiguous parcels of land owned by different data center developers, with the total number of sites on that top x-axis, the operator on the bottom x-axis, and the acreage of each dot on the left-hand axis. So you can see, for example, that Meta has 50 sites that we've identified from land ownership data in lower 48, with an average contiguous acreage of over 200 acres. So when we think about that, that is a lot of land. When we look at comparing the land portfolios of each of these companies to their development, this is the capacity potential on the left-hand axis, just using the energy density of some of the most recent data center developments. Specifically, Stargate was a big portion of kind of feeding this assumption. But using those land portfolios, Meta has roughly 22 years of runway at adding a gigawatt capacity a year. Amazon has roughly 20 years of runway at adding a gigawatt of capacity a year. Azure has 17 years of runway at adding a gigawatt of capacity a year. And Google has well over 10 years of runway at adding that same gigawatt of capacity a year. So when we think about all the speculation that's being done by new entrants and by third parties to build facilities that they would then lease to these hyperscalers, I think it begs the question to be asked is, do they actually need a lot of that help? It seems pretty clear to me that they own a lot of the infrastructure and the land necessary to build a lot of the projects that they will be looking to develop. Next is that modern development occurs in stages. This is one of the hottest spots in the lower 48 for data centers right now. This is just northeast of Columbus, Ohio, in a little area called New Albany. Google just finished a 500 megawatt campus there in the past year. That's where Williams announced their 200 megawatt generation projects to support Meta data centers. So this area is really locationally growing. But I just want to note that in the top left figure here, you're seeing in September 2021, there was roughly 100 megawatts of capacity at that site. You fast forward a year later, and they finished roughly 50 megawatts of additional capacity. And then we're going to look at the next two slides where they actually finished this facility. And it wasn't until October of 2024 that they reached that terminal capacity of roughly 500 megawatts of demand at that site. So when we think about, hey, we're building this Meta Louisiana's 2 gigawatt data center, is that going to happen in 2027 all at once? Or as we've seen so far, are they building it out in stages, and is it going to take a couple of years to reach completion? And then this is really just an ode to the great work in technology and efficiency that NVIDIA has done. But what you're looking at here is the GPU power efficiency of different NVIDIA chips over time. I just stopped it at the Blackwell 100s for the purpose of this. But GPU power efficiency on the left-hand axis, that's denoted in watts per gigaflops, or billion floating point operations per second. And then the GPU release here through time. So you'll notice that from 2007 to 2011, there was kind of a steady trend in efficiency gains, and then you had kind of that social media boom, the rise of demand for being able to host and store information, and there was a significant step change in the efficiency of that hardware, and then you translated to the pink line, which then kind of resumed that linear trend gain in efficiency. Note that this is all exponential, by the way. And then you had that trend all the way out through kind of 2020, 2021, when you once again had another step change as we went from having the cloud services social media boom to now this AI boom, and chips purpose built for data centers for the technology that we're exploring today. So the moral of the story here is that by delaying potentially your needs for inference out a year, out 2 years, you get a lot more compute out of that power that you're going to acquire on that time horizon. And then lastly is that AI is a capital intensive business, and being energy folks in the room, I love to make this comparison. Annual tech, I think Jay said this morning that you were going to spend roughly $9 trillion by 2035 of capital expenditures to reach what you would need for oil production. These companies are going to be spending $300, $400, $500, $600 billion a year by the end of the decade just in North America for the data centers that they're going to develop here. And that is going to be attributable to two sections of sort of ways to think about the world. The first is going to be growth CapEx. So those are dollars for new data centers that are added to these companies' ecosystems. And then the second is going to be for maintenance CapEx. Those NVIDIA chips that they're going to be installing in these facilities, they do have redundancy periods because of how fast they innovate. They do have actual shelf lives of 4 to 5 years for a lot of that technology. And you're going to have to reinvest that capital just to maintain effective utilization of the existing data center capacity that you have. So it's not just going to be capital to grow, it's going to be capital to maintain. And you will be growing compute exponentially throughout this all, and that's because of the efficiency of the new chips that you'll be installing in the existing facilities. And then there's just one other slide I want to touch on. This one is really fascinating, and it's one we just published for the first time about a week ago. What you're looking at here in the pink and red is the projected ERCOT and PJM data center growth if it was translated into dollars of spend. And then it's plotted against the total capital expenditures from the 5 big tech companies. And you can see that in order for ERCOT and PJM to both be correct about their data center load projections in 2026 and 2027, big tech would need to spend roughly 141% of what they're projected to spend in capital in 26, 187% of what they're projected to spend in capital in 27, and then you approach kind of a more realistic number relative to expectations by 2030. And that's all I have for everyone today, just to tee up the conversation and get us started.
Thank you, that's really great. So I'm getting questions already being passed on to me. So I said, okay, I'm trying to integrate the questions with the presentation, so I'm going to go on the fly. So over here, so I'm going to start off with shout out over here that not very recently, Vantage Data Center announced a $25 billion, 1.5 gigawatt campus, AI campus in Texas. All right, so Amazon has long stated that the central part of the strategy is integration of AI and energy. Okay? So how is Amazon planning the US infrastructure to meet the demand, the scale of Vantage's initiative, while ensuring reliability, scalability, and sustainability? This is all coming from the audience, including water management.
Yeah. So you just taking a step back, right? The kind of numbers that we are seeing from our own projections and together with other large tech companies. As an energy person, I'm just like, wow, right? This is a great time to be in this industry, because we have, of course, AI is a huge mega trend that's driving the growth in energy demand, but at the same time we have energy transition. That's of course, policies and regulatory landscape is changing quite dynamically every day. And of course, technology, I mean, AI, it's creating a huge energy demand, but at the same time, it's also helping solve a lot of bottlenecks in energy technologies or interconnection queues or what have you, right? So there is a lot of things going on in this space. Clearly, yeah, as the data showed it, I think Amazon's capital budget this year is about $118 billion. I think last year it was about $84 billion. I came from the oil and gas industry. I used to think a few tens of billions of dollars was astronomical amounts of money. And so this is just a whole different scale. And we are throwing around these numbers in gigawatts like it's chump change, but just for scale, a typical Walmart store uses about a megawatt of power, right? So 1,000 Walmarts is a gigawatt. Hoover Dam is about 2 gigawatts. So of course, different type of power generation technologies need different footprint and so forth, but just think of the complexity of being able to actually deploy power generation and then transmission distribution in that kind of scale. So clearly, of course, the $118 billion that we have to spend, we are trying to figure out how to spend those wisely. So we have partnerships with power generation equipment companies. We are working with utilities in all around the US, also globally, because clearly as the energy density demand per site goes up, we have to work with the regulators and the utilities in the regions to make sure that we actually are going to get that power delivered on the timelines that we need. We are working with companies like Enverus and like NVIDIA. I mean, these are all our partners trying to figure out how do we site projects in the right places where we can use the efficiencies that the location brings with it. How do we incorporate better energy efficiency chips in our designs? And of course, we have a pipeline of projects that's going to happen, which are going to get deployed over a number of years. So matching the project timelines with the latest and greatest technology that we have available to deploy from an energy efficiency standpoint. So that's all a lot of partnerships going on. We are doing a lot of, I think Amazon is the world's biggest buyer, corporate purchaser of renewable energy. I think from 2019 to 24, in the 5 years, we have made about 34 gigawatts worth of power purchase agreements. So, and that continues. So that's on the renewable energy side. On the other extreme, we have invested in nuclear SMR companies like X Energy, and we are working on kind of getting them an order book so that the startup can actually can actually scale with a number of deployments. And then between those two bookends, we are looking at variety of different power generation technologies, including gas power plants with carbon capture, geothermal, you name it, and we are looking at those technologies. So that's on the power side. Similar situation on water conservation, looking at newer technologies to going from open loop water cooling systems to closed loop systems, going from air cooled servers to liquid cooled chips and so forth. So improving the heat integration and lowering the water usage in our data centers across the globe. I can go on and on, but lots of innovation going on in a variety of different sectors of data center infrastructure.
I'm going to go down to you, Carson, again, incorporate the comments that I'm receiving. You just not showed us slides over here. There's Enverus projects U.S. load growth, which has been stagnant for quite some time, really kind of taking off, and it's primarily driven by data centers. So what does Enverus data suggest about ERCOT's capacity to absorb these giga-scale projects like Ventus, Texas?
Well, I think that brings both like what's queued in the load side as well as what's queued from the interconnection of power generation point of view into play. All of these systems are projecting more load growth by 28 than we see generation additions over the same time horizon, for example. That's true of all of the ISOs. Especially in like reserve margins are projected to go negative across the board. Like all of that kind of stuff is true. So I think the answer is like really, and what we've heard from a lot of the clients that we work with on the sort of developers of data center infrastructure side is that they're now looking for the first time really is to like actually just co-locate power generation so that they can minimize their own impact on the electrical system. And if you do that, and that becomes the status quo strategy for Texas, maybe the grid is much more resilient than we think it is based on just what's slated to come online from a generation point of view in the interconnection queue. So the ability for the Oracles and the Lanciums and the Cyrus Ones who are doing like the Stargate type projects to to purchase generation turbines to develop their own generation infrastructure is really going to ease the burden on what is traditionally the system in a lot of cases. I think it was Encore that said they had 160 gigawatts of load in their interconnection queue. Well, ERCOT's like 90 gigawatts of peak load last year. So clearly, obviously it can't handle all of that, right? They are talking about green hydrogen coming online in multiple gigawatt scale. We don't really believe that that's going to happen for the reasons that Jay stated earlier. But yeah, just across the board there. I think owning your own generation and building out your load with that generation is going to be the solution in a lot of cases.
Okay. Thank you. Let's turn to you, Mark. NVIDIA, of course, is central to our AI ecosystem. We all know that. GPU is driving the company's computing intensity in the data centers. So how does NVIDIA view the relationship between chip innovation, and now we talk about efficiency and performance per watt situation, and the escalating need for more power to enable AI work?
Sure. So thank you for having me today. It's really important that we talk about these things because I think the perception is that this giant growth in power comes at a significant cost, and I think we heard earlier in the last panel just about all the innovation that we see coming and the incremental economic development that's going to come as a result of AI and data centers and things like that. So there's both energy for AI and a lot of what I work on is AI for energy. How do we make everything more efficient and how do we help the grid become more resilient and things like that? As Carson pointed out in some of his earlier slides, right, the innovation of chip development has been fantastic, and the amount of work that a chip does for the same power within the same power envelope has increased tremendously. So, when we talk about AI being so prevalent over the last couple of years, it's not because AI hasn't been around for decades. It's because it's finally commercially viable to do these things, right? Could you have done what OpenAI did with ChatGPT, 20 years earlier? Well, maybe at the cost of trillions of dollars, right? And who would have invested it? Who would have powered it? And all of those things. But now that we've had this evolution of both silicon and software that enables this, it's now commercially viable and is scaling very fast, which will make it continue to be economically viable for more use cases. And that's where we'll continue to see the growth in AI use cases. If you look back from 2014, which is when we introduced our cuDNN software stacks and things like that for AI, we were on our Kepler line of products, and to train a 1.8 billion parameter model back then would have taken about 5,500 gigawatt hours of power. Today on Blackwell, that's about 3 gigawatt hours of power. So it's almost a 2,000x performance per watt improvement on the training side. On the inferencing side, a token, right, which is the unit of measure for inferencing, would have taken about 42,000 joules to create one token. Now it takes 0.4, so about 100,000x improvement over those 11 years, right? And so we continue generation after generation at looking at how do we improve the performance per watt and also the performance per dollar, right, to drive down the cost of computing and that. And what that does is it's unlocking so many additional use cases that maybe a year ago or 2 years ago wasn't cost effective, wasn't a priority. We're going to continue to see additional use cases make sense, right? And as we heard earlier, people are going to start using agents to do a lot of the work that they do and how they go about things, right? We ask Siri questions today, we ask Alexa questions today, and more these agents that we use will get to know us better and the work that we do and become valuable assets, right? Jensen always says there's more problems than people, right? So this is not a matter of replacing people, it's a matter of augmenting people to tackle all the problems that we face as a society and what we're trying to accomplish and allow people to do their life's work within their lifetime, right? It's no longer going to be, I work on this project for the 20 years, 30 years, and it doesn't get solved. It's going to be, how do we solve these problems and go solve additional problems? So the energy efficiency is critical. My scope has increased tremendously over the last 6 years in the fact that now it's a matter of how do we help provide this incremental electricity requirements that we need for, we call them AI factories versus data centers, because a lot of these data centers are fit for purpose, right? Like a refinery. You're doing one thing, you're producing tokens. Most data centers in the past did multiple things. Some were web services, SAP, all these things with different workloads and different types of computing. The AI factory is very simple. It's a factory. It produces tokens. Data and electrons in, tokens out. Very simple. And to be able to produce these in the most energy efficient and cost effective way, we're working across the energy ecosystem to build reference designs and reference architectures. So imagine when you buy a laptop or you buy a computer, it's a unit of compute, and somebody's designed the cooling and the fans and how it works, and all the software talks to each other. So if a peripheral doesn't work, there's a BIOS and it can communicate, and if something overheats, it tells you. Think about the future where data centers are all connected at that level, from every aspect of cooling and power and compute and racks and everything, into a single system that you can simulate before you build it. You can make it as efficient as possible and then replicate these things in ways. And as you write new algorithms or solve better problems, it's a software-defined data center, software-defined appliance that you can update the software, maybe get a few more % of efficiency here or here, and work across that system to make things better and better over time.
This is a perfect segue to the next question. So far, we've been talking about infrastructure and capacity. So let's talk about, you talked about energy ecosystems, so talk about partnership, okay? I'm gonna go back to you, sort of over here. Data centers are projected to consume roughly about 12% of US power by 2030. That's the general going over here. Amazon has always emphasized long-term utility partnerships. So how does Amazon envision evolving these partnerships to both secure reliable capacity as well as balance near-term regional grid constraints?
Yeah. As I mentioned earlier, right, when we decide to make these large investments, so you will see in the media, right, $20 billion in Pennsylvania, $10 billion in Ohio, similar kind of orders of magnitude in Mississippi or Indiana. We essentially go work with the utilities serving those regions, and the partnership pillars have spanned from helping the utilities to kind of do the work that they do faster and more efficiently. So the electricity demand, or it hasn't really grown that fast in the last number of years, right? So our regulatory system, the way the utilities process interconnection queues and the studies and so forth, it's not optimized for the kind of workload that they are seeing today. It's optimized for what was the world 5, 10, 15 years ago. So we are working with our partners who together we are helping the utilities run these interconnection studies faster, so they can actually process the queues faster, because the queues are about 3 to 7 years long to get a new project interconnected to the grids in different parts of the US. So helping with the compute capacity that AWS has, running these interconnection studies in a much faster manner, can we shrink the interconnection queue time from 3 years to 3 months? So we are working with a number of utility partners on those kind of topics. In a number of cases where we are adding new generation capacity on the grids to support our own loads, we find that there is missing interconnection, like actual physical wires, right? So we have been working with utilities to actually put new infrastructure in the ground to actually support getting those electrons from wherever they are produced to wherever our data center is going to be. So that's physical infrastructure we are supporting, and similar stories, on kind of the water infrastructure side as well. So from software and digital capabilities to actually accelerate digital workloads to physical world where we don't have the right, or wherever we have gaps in infrastructure, we are helping bridge those gaps.
So it's a nice follow-up question then to Mark. NVIDIA partners across both cloud providers and utilities alike. situation. So how do you see NVIDIA's role in shaping the hardware, the software, and the energy co-optimization, especially as grid constraints intensifies in various regions?
So we're an engineering company, right? We're about 80% of the people at NVIDIA are engineers, and about 60% are software engineers. Most people think of us as a chip company because that's our business model, and we produce silicon, but we don't make our own silicon. We don't manufacture our own silicon. We're an engineering company, and everything we do is through partners, right? Whether it's TSMC manufacturing the chips or Foxconn building them, and then once we have the software capabilities, then we hand it off to large hyperscalers like AWS who buy our chips and provide them to our customers, or OEMs and others. Everything we do is with the ecosystem in mind, and how do we help them be successful in solving problems that they need. When it comes to utilities, right, and I think we're trying to solve very similar problems, right? How do we help with the interconnection queues? How do we help with grid stability? How do we help bring more distributed energy resources online by putting AI all the way down into the smart meters on the side of houses, right? So that you don't have to transfer all this data back to a data center when you can operate at the edge, solve the problem, look at high resolution data, and understand very quickly we need an interconnection for rooftop solar. We need an interconnection for a new EV that's plugged in. Don't have to transfer that information, and that all takes additional power. It all takes additional computing. Can we solve those problems at the edge with the goal of eventually creating a digital twin of the grid and making it more and more efficient and effective? And so our engagement with end utilities usually is because we consider them lighthouse accounts, right? And what that means is that these are utilities. We don't work with all utilities. We're small. NVIDIA is only a 30,000 person company, which is probably about 1/8 the size of you guys, right? And we focus on our partner ecosystem to deliver these, but we have to stay connected with the end customers in a way that we understand their most challenging problems, and we can engineer solutions for that, and then allow our partners to take it across the masses. And so working with some very innovative utilities, we understand where there's gaps in the market, where we should invest engineering resources to create libraries and software stacks and potentially smaller chipsets and other things to solve those critical problems, and then we hand them to our ecosystem to go and deliver, whether it's the infrastructure at a hyperscaler or software that they provide, whether it's the Deloitte's, Accentures, and global system integrators, or whether it's software companies like GE Vernova or AspenTech or others. How do we help them to deliver the outcomes that our customers are expecting? And so those few utilities that we do work with, it's because they typically have an innovation team that are trying to solve those problems, and we can engage with them, use them to pilot some of these things, and ideally in a world with another partner who can then take it to market and scale. We also work very closely with organizations like EPRI, the Electric Power Research Institute. I actually sit on their board. And these guys are trying to do some amazing things. We've just created a domain-specific model for the utility industry called Open Power AI. And basically what we're doing is we're taking their 50 years of data and training it into a model that then will be open to the entire electric utility community. And then we've got probably 100 people participating in this, 100 companies participating in this, that are willing to give us proprietary data that's not confidential, but it's not available on the web. So it hasn't been trained into these large open models. And training a model that allows all the utilities to scale AI for operations. And we believe this will eventually reduce ratepayer costs, will increase stability, will reduce waste in the system that will then be able to power new loads on the market.
So 2 things I want to add.
Go ahead, please.
So on the technical side, we are working with, the grid is old in the US, in many parts of the world. Working with utilities to modernize the grid infrastructure. So by installing through our partners IoT devices, right? So basically wireless devices that basically can transmit health of a transformer or a piece of equipment on the grid to the grid operators so they can do the analytics and understand what needs to be maintained or replaced or taken care of during recovering from things like hurricanes and such. These kind of systems are also useful. So getting that data, it lands on AWS. Again, we work with a bunch of our partners who have software that operates the grid. So again, using that compute and data on the grid or from the grid on AWS type infrastructure, we support that. On the commercial side, there is a lot of creativity going on around, how do we stay a good neighbor, right? Because when a data center comes in your neighborhood and starts pulling a gigawatt of power from the grid, again, a gigawatt can power roughly about 800,000 homes. So it's a small city, right? So of course you don't want the ratepayers' rate going up. So we have worked with utilities to come up with different rate structures for large loads and things of that nature. That way, to keep rates for retail consumers, as low as possible, and so forth. So there's a lot of commercial creativity going on there as well, and then leveraging the large load that we have and the backup systems that we have at our data center locations, right? Diesel generators, batteries, or what have you. Also working with the utilities and grid operators to enhance grid resiliency and reliability. So we can do load flexibility type situations where for a few hours, if the grid needs us to kind of drop off the grid and kind of go on our own backup, those systems. I mean, that's kind of evolving as well. Those use cases of all the backup generation capacity that we have at these data centers. So again, yeah, lots of creativity going on.
Partnership. So you hit on a point about how it is impacting the community situation. So let's talk a little bit about some of the economic prosperity for states and regions from data centers. It's a huge investment. Read a few days ago that Northern Virginia has 13% of all the data centers in the world, which is mind-boggling situation. So clearly they're doing something different. So I'll start with asking you, Carson, is that data center represents a foundational growth driver, roughly $7 trillion in capex for 2030, with 40% in the US. So two questions. Which US regions face the steepest risk from this surging data centers demand? One. And question number two is, what strategies should states adopt to maximize benefits while mitigating cost to the local community?
Both great questions. Maybe I'll tackle the second one and then the first one.
Okay.
So on what states and state utilities, really like policymakers in different regions can do, is they can declutter where the information is like really sparse. So like decluttering interconnection queues on the generation side, so you understand how much power is going to come online, can prepare you to be able to say to AWS, to other customers, yes, we can take your project because we want that investment flow into the state. So products that are able to declutter all of that information are going to be incredibly valuable. And then on the flip side of it, policies that require collateralization. So it's only recently become the case that Ohio, Oregon, some of these regions that have historically been okay for data centers but are like really booming today in terms of where that development is taking place, are saying to the people who are submitting large load requests, hey, you're going to have to sign a take or pay agreement. You're going to have to pay for the system upgrades that we're going to have to do for your facility up front. You're going to have to check all of these boxes. And what that's going to do is it's also going to declutter the noise on the request side, because you filter through to the entities that can actually afford to take those or make those commitments and take those risks on a project by installing policies that resemble that. And then I guess the third sort of like policy action that ISOs and utilities are taking at the state level as well is like, what's your ramping requirement? I think that there's a great story about Meta, and just for everyone's context here, these AI workloads can ramp hundreds of megawatts up and down in fractions of a second and while they're operating, and that's not really healthy for a grid. It can actually cause a lot of damage, cause a lot of problems. And Meta, in one of their original training campuses, they were really worried about blowing up the combined cycle and backup generation they had. So they wrote this code into their system that was basically just called power plant no blow up. And what it did was it just got all of the compute they had when they were swapping the model weights between training runs to just compute fake numbers, so that the load was consistent and steady, and they weren't ramping faster than the generation or the system could handle. So policy that mandates. They're going to have to do this for a number of reasons, but mandating ramp times of like something like 10 megawatts a minute. The Alberta ISO just put out policy guiding that large loads would only be able to ramp a certain amount per minute in order to not break the grid, and that's a much smaller grid of roughly 12 gigawatts of peak load. So you can imagine when you have 500 megawatts ramping up and down on 12 gigawatts of total load, like that could create a lot of problems. It'll be a little bit less significant in markets like Texas and markets like PJM, but policies like that, certainly. And then can you remind me of that first question?
The first question was basically asking is, what's the steepest risk from surging data centers demand?
Yeah, so I guess the last part of my previous answer is probably the steepest risk. You guys are not shy or distant from having actual power issues that affect people across Texas. There have been some serious problems here in the past with cold stretches in the winter causing day-long power outages for lots of Texans. And as we have this wave of load coming online, reserve margins, which are a proxy for reliability, are likely going to shrink in a lot of places. So how do we manage shrinking reserve margins with ensuring uptime and reliability of the energy system? It's going to require that these large loads be responsive, and that's what Senate Bill 6 came in and did in a lot of ways. It says that, hey, if we have an electrical problem and we're tight on power supply, you're going to have to curtail yourselves because we have to prioritize the needs of all the people who live in the great state. So just things like that across the board.
Okay. Mark, a question for you. Again, reiterating the massive investment in the system over here, how can NVIDIA's ecosystem partnership with OEMs, the government, cloud providers, power developers, help states and regions ensure competitiveness while addressing sustainability concerns?
Well, that's a tough question,
I know.
Right? So as far as competitiveness, right? I think having spent time talking with a lot of the ISOs and utilities, right? They're getting a lot of pressure from their governors to go faster, right? The governors, they want the economic development in their states and in their areas and all of that. So there's plenty of pressure there. The competitiveness is going to come back to how quickly they can get interconnection queues studied, right? And then who are they working with, and do they have the resources and the capital to deploy these projects fast? I think there's some that are, once again, more innovative than others. The interconnection queue is, to me, is critical, right? To be competitive, it's no longer about tax incentive; it's time to power, right? And these large data center companies are looking around and they're like, well, where can we get powered land, right? So where's the land that we can get, and does it have ideally electric capacity from the grid already? If not, does it have gas lines, and can we put our own power there, or what's the lead time from the grid to be connected in? And that's why they're submitting multiple applications, right? Mm-hmm. That's why you see projections that are bigger. ERCOT's is the ERCOT queue is bigger than their current load, right? And are they going to double or triple in size? Probably not, but they've got all these requests, and people drop out, and then they have to restudy them. And so it's not just the simulation of this, which there is a physics simulation that you have to run in order to make sure that the existing grid and other things can do, but there's a lot of manual processes in here. And these manual processes are what take considerable time, and this is where AI agents can help and augment the people on the ground who are looking at these studies and really coordinating and moving those things through a process much faster than humans can do, unless you want to scale up to 50 or 100 humans working on these things. And these utilities and the ISOs can't afford that and still be economical to the ratepayers. So I think where we come in is how do we leverage AI help solve those problems and work with our partners to do that. We're working with a lot of the big turbine companies today. How do we help them produce more turbines faster, right? One of the interesting things is that as I look to like yield rates on turbine vanes and blades is actually very low, right? And so they're limited in their supply chain by these things. Well, you know, we might be able to help with yield productions by using cameras and video analytics and all of those things, just similar to what we do with semiconductors, right? When we're looking at defects, and can we identify the defects early enough in a process to scrap the stuff and not wait for later in the process. And those are all things we're working on right now to accelerate that. We're also looking at nuclear in a big way, and how do we help accelerate the time to power for nuclear deployments.
Thank you. So policy is an integral part of energy. So I'm going to ask a policy-related question and let any of you, all of you, chime in, choose a better word. We know that hyperscalers are mobilizing billions of dollars for CapEx purposes, right? And so how do you advise policymakers and industry to coordinate, avoid stranding assets? Because there is a healthy skepticism that some of this demand is overhyped. And so to avoid stranded assets while at the same time supporting innovation. Anybody can take a stab at it, go for it.
Well, I think Carson touched on some of this already. Is they're asking for money up front, right? And those who are serious and those who believe it will fund it themselves and put dollars up front. That will eliminate a portion of the players from the market who are building speculatively and are waiting for VCs to get behind them in order to make investments, right? But you know, I think what you're going to see is you're going to see regulations come in and basically put policies and requirements in place that protect the population from having to pay for things that couldn't be delivered on by the data center companies, and then them getting stuck with the extra capacity, you know, and then having to charge it back to the individual people within their communities.
I don't think there's very many times in my life I've said, thankfully, something's so expensive. But thankfully, this infrastructure is so expensive that it's hard to get that far in to a project such that you wouldn't be able to take it to completion and then have you know, abandoned infrastructure. Likely, I think that withdrawals will happen much earlier than that in sort of the process. I know, you know, Mark Twain says history doesn't repeat itself, but it often rhymes. I think back to, you know, 2002, 2003, all of the companies that had built like the initial wave of digital infrastructure for cell towers, dot-com bubble burst, their equity prices were trading down, you know, 95 to 99% across the board. Companies like Oracle, other companies swept in, they bought up all this infrastructure. And then as the actual demand grew into utilizing all of that infrastructure over the course of the next 5, 6, 7 years, you know, the returns on those companies were in the thousands of percent on that time horizon. So I think that, you know, the market will solve itself in a lot of ways in terms of that abandoned infrastructure as well.
Okay.
I mean, if I had to venture a suggestion in the current policy and regulatory atmosphere that we are in, I mean, this is for any type of large infrastructure investment, you want to have durable policy that can basically stand there for a number of years, right? So what is happening now is because of a lot of changes happening very dynamically, a lot of the money is actually still on the sidelines, not getting invested, because we are not worried about stranded capacity or overbuild. We think we are going to be short capacity, even though we have the kind of capital budgets that we have. So stable policy is important, and then with we are also, you know, solving with variety of different risk hedging strategies. So we do a lot of build to suit. So AWS builds and owns and runs our own data centers, but we also work with a lot of co-location companies to, you know, so we can flex or surge our capacity by renting capacity from these co-locators. And part of that is also the reason why when you add up all the projects that are in the queue versus what might actually get used looks different. So there are various strategies to leverage while policy is in flux. Okay. But from a policy standpoint, yeah, the more stable it is, the better it is for infrastructure investments.
I'll maybe just add one more thing here. I think vertical integration is something that we should focus on a lot as well in terms of the industry. You look at like just the most recent deal that was big that was done with EQT and Homer City's Repower. Like EQT is an example of a vertically integrated company. They own their production, they own some of their transportation that allowed them to be able to make that deal and supply lots of gas to those two projects in PJM. On the data center side, and Ken and I have actually talked about this a lot in the past, but industrial policy is going to be super important. There was once a policy called PURPA, and PURPA basically mandated that all of the industrial loads that needed to build co-located generation for heat would be able to sell that excess electricity production back to the system at cost to the industrial facility. So things like that allow and enable these large infrastructure projects to get built with the generation that they need, and then to have an outlet for that generation when they're not using it is going to be, could be super powerful, and would, actually deliver sort of a guaranteed flow of molecules. If you were a gas producer, you want that power plant to be operating all of the time. If the grid is mandated to take that excess power, then you actually can operate that all the time. You don't have to worry about stopping the flow of molecules. So there's a bunch of vertical integration that can be done that can be super helpful as well.
Okay, perfect. Let's look forward to forward planning going forward. It's coming up. Forward planning a bit. So you talked about a little bit of what's happening on the road. I'm going to talk with you sort of over here. Beyond low carbon initiative, okay, frontier solutions are often talked about, things like hydrogen fusion, SMR, et cetera, are often cited. How does Amazon weigh these in the roadmaps, given the data for inverters that delaying these deployments can actually yield about 2 to 3 times chip efficiency gains? So is there any kind of a buy time strategy?
Yes, but again, it's AWS grew out of Amazon.com, and our claim to fame is fast delivery, lots of options, and lowest cost. And it's the same principles that AWS works with as well. So we have a lot of customers using AWS. We host more than 100 large language models on AWS, right? Because we of course have our own, just like Amazon.com has white glove Amazon branded things, but also serves a lot of sellers. It's the same model for cloud as well. So we have, and we are always following the demand. So we are building as fast as we can, but we can't keep up with the demand that we have. So slowing down or delaying really, like waiting is not an option. But the way we are managing our supply pipeline is basically just again matching what's the best latest technology that we have that we can deploy in what we are building today, and then of course working with the NVIDIAs of the world, understanding what their roadmaps are for future development, and then matching that with our future deployment pipeline.
Question for you, Mark. Looking forward, how does NVIDIA anticipate the convergence of next generation computing architecture, low carbon integration, advanced cooling in the balancing AI's industry's rapid expansion with environmental and community priorities?
So while we talk about the performance per watt going up significantly, the actual watts that an individual chip is going up significantly, right? So we used to be at 300 watts per chip, and then 500, 700. Soon we'll be at 1,000 watts per chip, right? Or per GPU, which is a lot, right? Now it might be doing 500 times the work of a 300 watt chip, but the individual chip itself is very dense, and therefore what goes into a single rack that used to be, pick a number, 10 kilowatts is now 100 kilowatts and will become a megawatt, right? In a 19-inch wide rack, maybe a little bit bigger, right? And so how do you keep that cool, right? And, once again, if that used to be a data center, right? Most data centers weren't even a megawatt, right? At corporate levels, and now you can fit that in a rack and do the same amount of work. So it's extremely energy efficient. How do we make it environmentally friendly? And it's through liquid cooling, right? And so most of our stuff in our future generations will all be liquid cooled. And we're working with some of the largest companies in the world that specialize in this, and really taking this down into the rack level with direct liquid cooling onto the chips, where we've got cold plates that have liquids in them, and I think both self-contained systems and recirculating systems as a way of keeping these as cool as possible. I know some people, we've got some companies out there that are looking at immersion cooling and things like that. To be honest, I think that's still a ways out, right? Because of the performance of some of the interconnects and the signal integrity that these things have. I don't think we're close to solving those issues with immersion. It does work at some scale, but as the complexity and speeds increase, there's definitely signal integrity issues that we're seeing today. But we'll continue to explore it. We'll continue to explore what is the most efficient way to cool these things and grow them. But ultimately, one thing that's changed for us is we used to keep our roadmap pretty tight to our chest, right, as a company, and not talk about our next generation chip until it was about to come out. What you've seen Jensen do over the last few years is really start to forecast out what are we going to do in the next 3 to 4 years, where are we going, and we've got all of our partners in, and we're feeding them our roadmaps, we're NDAs, engineering specs, all of those things, because we need them to develop the products and the solutions and the outcomes for 3 to 5 years from now in order to make sure that this stuff is reality. Because if we build it, but it can't run, it's not going to continue to go down this route. And we've got customers that are replacing hundreds of racks of compute today that they've had for 4 years with handfuls of racks today, and reducing their electric footprint significantly to do the same amount of work, right? And therefore, it's extremely energy efficient, right? And a lot of times they can pay for a lot of this stuff just with their energy savings, but now they're doing a lot more, and so that's where the scope continues to grow.
And just to add to that, so as NVIDIA shares and works with us with their roadmap and how they are building their next generation chip, what we do as AWS is take that into consideration, and when we put thousands of these racks in these data centers, right? So we design our data center facilities taking the innovations into account, so we can actually harness the waste heat that is coming out of all of these racks at the same time to do. If we are in the northern hemisphere, we will go heat up a district somewhere, right? Or leveraging that waste heat in different waste heat, or again, whatever are the usable aspects of it in different ways, so we can add value. So so the whole way we get that cost efficiency is we build a design once and then build many. So that's how. So as each generation of chip technology improves, we kind of build a new basic design of our facility and then go replicate that as much as possible.
Excellent. How are we doing on time? Over there? Okay, so I'm scanning through the questions. Several questions. Some of them I could integrate into my questions. Some of them are more direct, but I'll ask one last question if you don't mind. Okay. It's interesting over here is what does a 50% increase in wholesale electricity prices does to the AI growth models?
You're the data guy.
I would I would argue that it probably doesn't do a lot, just because of the scale of the capital involved is so much more concentrated in the hardware side than it is in the power side. That you already see Microsoft signing $110 plus PPAs with Constellation's restart of 3 Mile Island. You see AWS signing mid $80+ PPAs with Susquehanna. You just see deals being done that are in excess of 50% higher than what LMPs are in those markets today already.
Awesome. Okay.
So I would argue that it probably doesn't do a whole lot.
Okay. So there's several questions directed to them. I'm sure they'll be open to taking those questions some in between now and sometime in the afternoon. Thank you very much, Saurav, Marcus, Carson. I guess time for lunch, right?
Yeah.
Okay, there you go.
Okay. All right. While we have a few stragglers that are still coming in, I'm going to go ahead and get started in the interest of time so we can kind of stay on schedule for the rest of the afternoon. Was going to originally be joined by both Sarfraz Taj, who's here with me now, and Jimmy Glotfelty. Jimmy was emailing me and texting me during the last session, actually. He had an emergency come up, so he's unable to join us. He sincerely apologizes. But fortunately, as I was speaking with Sarfraz, he actually knows Jimmy and actually worked on that special commission with him that was appointed by Governor Abbott to look at nuclear opportunities in the state of Texas. So I'm going to pick Sarfraz's brain on that a little bit too. So anyway, very briefly, and I'll let Sarfraz introduce himself. But the thing that sticks out to me most, he's with Constellation, by the way. But the thing that sticks out to me most is, of all of the stuff he's done in business development and project management, he's actually worked on nuclear projects on 4 different continents. So that's pretty impressive, I must say. So I'm going to let you sort of introduce yourself and maybe lean into that a little bit, because I like what you said about leadership as well. So,
yeah, absolutely.
Please.
Welcome and thanks for coming out. It's truly a fantastic turnout here, and Ken and team have done a great job pulling the conference together. So I'm Sarfraz Taj. I'm Director of Mergers and Acquisitions at Constellation Energy, the largest owner-operator of nuclear power plants in the U.S. So my team, we led the Calpine acquisition, for example, which we signed in January. We acquired Calpine for $29 billion US for about a 29 gigawatt portfolio, largely natural gas, but also some renewables, including the Geysers facility in California, which is around 700 megawatts of geothermal. My story into Constellation and into M&A is very different than the typical M&A person, which might come up from an investment bank. I actually started my career doing core design and neutronics work in our nuclear fuels group back many, many years ago. So for me, really, the idea of nuclear started kind of back in middle school. Very kind of naive idea of having some sort of an alternative energy source because fossil fuels would have some definite limited lifetime. My parents thought it was absurd. They didn't know why I would want to do nuclear, especially at that time when no one was talking about nuclear. So they would have preferred that I do something different, such as medicine. So, so I actually ended up doing a pre-med along with my nuclear engineering degree because they were paying the bills. But it's really turned out to be pretty incredible. After graduating with the nuclear engineering degree, I joined Nuclear Fuels. I talked about doing thermal hydraulics work, neutronics, core design, transient analysis work, so very niche kind of to the nuclear reactor. I found that was intellectually claustrophobic in that I saw folks who'd been doing the same exact thing for 30, 40, 45 years. So I branched out pretty quickly, went into engineering, got my senior reactor operator certification at one of our pressurized water reactors. Also went to Fort Calhoun in Omaha to help restart that power plant once it had the Missouri River flood in 2011. So helped to restart that, and at that point I had this realization that the company is very siloed. We have folks who come up through the technical ranks, maintenance or operations, fuels, and then they go into nuclear leadership. And when I would take projects for approval, I saw this other silo of kind of corporate, where folks on the finance side or accounting or tax would come up through those silos. We didn't have anyone bridging those two parts of the company. So that's when I went off and did my MBA and kind of started to transition my career to become that bridge, and then led a lot of the international work. So we set up joint ventures in Japan, helped them after Fukushima to help restart some of their nuclear power plants. Spent time in the UAE at Baraka, those 4 units that are now operational. Spent time in Poland, in the UK, so a variety of different projects across the different continents. And then we were actually under the Exelon company, and we separated out the generation portfolio. So I helped lead the separation of the two companies. And now in M&A, but also helping to lead new nuclear for Constellation. So I hope that's helpful in setting up the stage as to
Absolutely.
my journey a bit.
Absolutely. So I'm going to get things started. And by the way, again, same approach to asking questions. Just do it using the QR code, and I will see them. So far today, we've been talking a lot about AI and data centers and sort of what the implications of those things are for the grid. And for the energy sector more generally. And we hear, we've heard and hear just generally that there's a lot of efficiency gains that can be had through the application of this new technologies. But also, there's new load coming. So I want you to just, I think most people are familiar with some of what you're going to say here, but I think it's worth you just sort of diving into it. What do you see as the intersection between what you do at Constellation and what's happening in the new tech space?
Yeah. I mean, it's really an incredible time, especially comparing it to, say, the past 10 years where the power markets were actually on a decline. Load was either level or falling off. And now we see that the numbers are just pretty fantastical. Some projections are more than 100 gigawatts worth of new demand coming on the US grid in less than 10 years. And a lot of that is actually concentrated here in ERCOT. More than 50% of that is going to realize here in ERCOT. So it's something like a 3% year over year growth, which we haven't seen since probably the 70s. That said, when we look, especially from a nuclear operations perspective, at the type of load that's coming online, the data centers and AI are some of the biggest customers. And when you look at the types of data centers, they define them in tiers, tier 1, 2, 3, and 4. The tier 4 data centers have an uptime requirement of 99.995%. So what that means is in a given year, that type of a data center can only be down for about 26 minutes. So you look at the type of generation that's out there and the capacity factors that could provide that sort of reliable power, and there just aren't many, but that's where nuclear really shines through it. We operate our US fleet around 95% capacity factor. So you're close, but you would need some redundancy. That said, the other piece is just a quantum of power requirement. I had the recent opportunity to go to Argonne, which is an old alma mater of mine, where they have the Aurora supercomputer. It's one of the world's leading supercomputers. And that single machine requires 60 megawatts of peak power. So to put that into kind of contextualize it, that's more than 50,000 average homes worth of power consumption in one machine. So when I look at the reliability requirements and the concentrated loads, it's really nuclear because the power density of nuclear is so much greater than any other form of power production. So there's a real opportunity here. And the panelists prior talked about some of the PPAs that we've signed, the power purchase agreements. So one with Microsoft at the TMI, 3 Mile Island, Unit 1, which we're now calling the Crane Clean Energy Center for 20 years. And then one at our Clinton site, which is in central Illinois, 20 years with Meta, also for data center usage. So I think it's a fantastic intersection between those two needs.
So for a long time, and I'm going to kind of roll a couple things into a single question here, because there's obviously an element of sort of public concern around nuclear power. We've seen that in countries all over the world. In some places leads to actually shuttering of existing facilities. Other places it's just it's a PR engagement largely, but that is certainly a headwind for nuclear expansion. We've already seen some stories out there about expanding small modular reactors or micronuclear reactors. What do you do with waste, right? So the waste issue is always present. But more generally, there is a pretty complicated regulatory environment. I referred to it earlier as a spider web that needs to be navigated. You have to have been working through this in different places around the world. I wonder if you could comment on models you've seen that allow for execution with great success and what we might be able to take away from that in the United States.
Yeah, I think interesting you talked about countries going away from nuclear either due to stigma or real kind of just political cover. And we saw post-Fukushima, so after 2011, you all will remember Germany made a move away from nuclear and a real concentration towards renewables. And what's happened to the German grid is that they're now taking a lot of power from France, which France is more than 60% nuclear, so it's still nuclear power, it's just not in their backyard. But their power prices are the highest in Europe. And when we compare it to kind of average US power prices, it's 4 or 5x at the residential level. So some other countries in Europe are also having a rethinking around nuclear, and some that we're also going to follow a phase out are kind of turning around and reconsidering nuclear. That said, to your question in terms of regulatory models and what works and what we could learn from, I think most countries look to the US to be that standard bearer for nuclear. We're clearly the pioneers in the technology. We help take it to other countries, into Canada, into France, Korea, Japan. And so they look to us and our regulatory standard as that's the gold standard. So unfortunately, there's not a lot happening in terms of innovation on that front. But what they are doing, which I think we could learn from, like the UK and Canada, will look to the US. If we've certified a design, they will take that certification as you're pretty much 90-95% of the way there. They're not going to send that technology all the way through the licensing process. So they're looking for ways that they can collaborate and coordinate with other regulators and streamline if it's the same identical technology. So I think we could do a bit of the same. It's just tougher for us because we have such a high regulatory standard to look to another country, especially a newcomer like, say, Poland or someone, to say, we'll take your regulatory approval to be a basis for our own approval.
So I'm going to use that to drill down a little bit into the state of Texas. I mentioned earlier, Governor Abbott commissioned a task force, if you will, to work on this and generate a report, and I think that was published in December.
It was January.
Yeah, so January. Okay, so I wonder if you could talk a little bit about what that exercise was like, and then leg into what you concluded, because certainly nuclear has gotten a lot of attention lately in Texas, particularly after Winter Storm Uri, when reliability concerns really came to a head. And so there's been a lot of interest in thinking about how to really leverage industrial scale, energy dense forms of power generation, but at the same time do something that is more environmentally sensitive. So,
yeah, I think what I've seen from the state of Texas and lawmakers here is a real kind of concentrated focus on bringing the whole nuclear ecosystem to Texas versus just nuclear megawatts. And I think that's different in that if you develop the manufacturing and you have great institutions already like A&M where you've got a nuclear engineering program, and then you have the load, which is all here, you can develop a great ecosystem vertically integrated for that purpose. Now I think Winter Storm Uri is probably that perfect example as to why nuclear makes so much sense, especially in Texas. So, I mean, most of the people here, if you're local, experienced that storm and kind of the impacts of it. 20 gigawatts of controlled load shed, largest in the history of the US. 5 million people lost power. I think over the whole duration of the storm, it was 11 million. Power prices $9,000 a megawatt hour versus wholesale prices that are closer to 30, so 300x. And then you look at the stack, the generation stack during the storm. What showed up? Well, solar panels were frozen, wind turbines were frozen, a lot of coal piles frozen, issues getting natural gas to the natural gas plants. So now you look at nuclear. Nuclear in Texas, 5 gigawatts at 2 sites, Comanche Peak and STP. STP is one of the sites that we co-own with NRG and with CPS and Austin Energy. And you look across those 4 units, and except for a feed water sensing line that had frozen on one of the units, which took it down for 2 days and it was back up, the remaining 3 units operated flawlessly. So that sort of reliability and resiliency really is beneficial to the ERCOT grid. So as we were, part of this Texas New Nuclear Working Group, there was a real focus on how do you catalyze new nuclear? Because on a merchant basis, nuclear is very, very tough. The quantums are large. The project timelines are long dated. You look at Vogtle 3 and 4, for example. That was supposed to be a $15 billion project and came in around 36, 37 billion, still counting, and took nearly 14 years. So for a private company like Constellation to take that sort of project on our balance sheet is virtually impossible. So the Texas Nuclear Working Group was looking at how do we incentivize, what sort of structures can we create to bring the merchant players forward, but also create optionality so we can develop early site licensing, stand up manufacturing, but without necessarily bleeding Texas's money into projects that are never going to see the light of day. So that was the balance that we were trying to strike in that working group.
So what did you come up with?
So luckily, Texas has a very strong starting point. A lot of kind of overfunding from the COVID era. I think the number is 30 billion plus that can be used in some fashion or another to help spur new nuclear. So a lot of it is really around what we wanted to do is tie it to real milestones. So it doesn't dish out grants for people to go off and spend a lot of money and then show nothing for it. But if you hit a certain milestone, like for example, you filed a construction permit with the Nuclear Regulatory Commission or a combined operating license, that would enable you to then get cost recovery on the monies you've already spent. And then if you enter into construction, then you can get a match from the state of Texas on a $1 per kW basis. And then there's some overrun protection and other ways to help. But that's how we were trying to be kind of mindful of not being wasteful with those dollars.
So the one thing I was not able to track, particularly with regard to that, because there were other studies that were also commissioned, right? Yeah. Did it get any traction in the last legislative session?
I think it was House Bill 14 that got approved, and so now it's really working its way through how does the money get appropriated and what are the ways that it actually gets enacted. So it did get traction, and there's some portion of it that's now going to get implemented. So,
very good.
Yeah.
So I've got a lot of questions coming in here that are in different ways focused on SMRs, so small modular technologies. And I'd like you to address a few points about this. You mentioned cost, which is, 37 billion is a really big number for any company to put on their balance sheet. So when you think about SMRs, one of the things that has generally been advertised is they're modular, so you can scale, you can stack these things. Does that help? Does the runway for potential cost reductions look viable? And then beyond that, the regulatory pathways to actually getting approval for deployment, what do they look like?
Mm-hmm. So there's a little bit of history here for the SMRs, or the small modular reactors. That acronym actually before stood for small to medium size reactors. And then at some point it became in vogue to use modular because that was seen as the solution to solving this cost overrun issue. So a lot of the designs that we have out there, like the Westinghouse AP300 or the GE BWRX300, they're actually scaled down versions of the gigawatt scale reactors. So you have a design that's on paper, it's approved, and you're basically taking that and scaling it down to produce less power. But what you want to do in that exercise without opening up the books on licensing and design and spending hundreds of millions of dollars is to keep as much of it the same as possible. So what that's done is it's saved a lot of money on the design and licensing, but in terms of the end product, it actually is not that much more efficient. So when I look at it from a megawatt per square foot, for example, it's a lot less efficient than the gigawatt scale. Not just from an economies of scale perspective, but because the actual building is not that much smaller. So that is going to limit small modular reactors. But I think the piece that helps is the overall check size is just so much smaller. So if I'm building an AP1000 at $10,000 a kW, and say that's a $10 billion per unit endeavor, at the same $10,000 a kW, a 300 megawatt reactor will cost me $3 billion. And if I'm a data center company or a hyperscaler, my foray into nuclear, that might be a check size that I'm willing to write and take that bet. Versus going all in on 1 or 2 AP1000 scale reactors. I do want to come back to the notion of modularity, because on paper that should help the construction. The reality is SMRs still have a lot of stick building in the field, so there is a lot of kind of unknown and labor intensity there. But ultimately, some of the designs, like Rolls-Royce is actually a good example, where they've started clean sheet and looked at what sort of manufacturing can take place in a factory. So it's largely factory built and then shipped to site. And then it is truly like Lego building from that point forward. And I think that sort of model, you could really see some cost savings. So, and we're yet to see that kind of pan out, but I think that one makes a lot more sense.
So where do you think this technology, SMR technology, would get deployed the quickest in sort of behind the meter dedicated applications, which we've heard about, or grid level applications?
I think it's going to be more of the behind the meter and co-located type of opportunity. I think at the grid scale, we're talking gigawatts worth of energy requirement. If I have a 2 gigawatt need, for example, I'm talking 8 SMRs that are co-located. There's a lot of inefficiency just in the construction. You're constructing 8 units that are staggered by 12 or 18 months. Just the complexity of that sort of a large construction project is pretty overwhelming. But also then from an operations perspective, once you go COD on 8 units, I am now having to operate 8 individual nuclear reactors. And the complexity of the inefficiencies or the diseconomies, I'll say, of scale, of you can't have one site vice president. Now you might need 2, and you might need 4 plant managers, and you need site engineering directors and operators in each of the control rooms. Your costs just start to balloon. Versus if you had 2 of the gigawatt scale reactors, you get a lot more economies of scale. So it's going to be tough operationally and also from an economics perspective to do at grid scale. But I think if you're behind the meter, you're a DAO or you're a hyperscaler, you have a specific need for 300 or 600 megawatts, an SMR might make a lot of sense.
Okay. That's interesting. I mean, I can tell you in conversations that we've had here at the Baker Institute, when SMR comes up, it's usually in the behind the meter context, which is why I wanted to have this conversation as part of this conference, because there's a lot of discussion, particularly on the part of data centers, which are relatively large single load applications, but you probably wouldn't want a gigawatt scale kind of generation unit attached to it. But
and I think a lot of times folks end the consideration through construction and then forget about there's a 60 or 80 year asset life for operations.
Right.
And if you build something that's inefficient, well, now the operator has to live with that for 60 or 80 years. So
that gets to what my next question is, which is really the competitive landscape. So as we get into talking about the economics of nuclear. High fixed cost endeavors. Generally, you want your fixed cost to be recovered through some sort of rate mechanism, right? The rate base. In a competitive market equilibrium, what are the biggest challenges? Is it market design, or is it something on the regulatory front?
It's Probably a little bit of both, but more on the market design, I would say. If you look at the history of nuclear construction in the US and also globally, we've constructed more than 120 reactors in the US and more than 400 globally, so there's a lot of nuclear construction experience out there. Post-TMI Unit 2 incident, we haven't constructed anything for less than $4,500 a kW, and most of it has been closer to $8,500 a kW, so very expensive. Now, ideally, as we were building out this fleet of reactors, there should have been lessons learned and costs should have been coming down. But we don't see that. I mean, we see it now internationally, like in Korea and China. But we didn't see it here, and one of the reasons for that was almost every nuclear power plant in the US is bespoke, and there aren't two that are identical. So you don't get that standardization and that learning that you would expect to take place. So what that's led to is very expensive power plants. And then what's then been required for that is that every nuclear power plant that's ever been built has either been a sovereign-backed project or a regulated utility project. So if you look in the UAE, we were talking about that. Yeah. 4 units built there for around $30 billion. It's sovereign-backed by the UAE, the Abu Dhabi government. The projects in the UK right now, Hinkley Point C, Sizewell C, backed by the UK government. They have these mechanisms like CFD, cost for differences, or RAB, the regulated asset backed. Essentially, the taxpayers are taking on the cost overrun risk in those models. And in the US, it's all been regulated utilities. So Vogtle with Georgia Power, 2, 3, 4 million customers take on the risk of that overrun. We've never had a nuclear build that's been merchant. Yeah. So a merchant player like Constellation, for example, is going to go on our own balance sheet or raise equity to go and build a new nuclear plant. And I think investors are wary of a Vogtle repeat. I can make a nuclear reactor project look great on paper and say it's going to come in at $10 or $12 billion. But they just saw a project go over by $20 billion. Yeah. So how do you cap that risk for equity investors? I think that's critical. So that's one of the biggest challenges, is commercially, how do you put something together where you can cap the risk? Because equity investors are essentially looking for, it's a nuclear project, there's some inherent risk. How can you define that risk? Tell me what the big risk moving pieces are. And then how can you then allocate that risk across different players that have the ability to wear that risk? And then assign incentives as well, because a lot of these nuclear projects will have EPC players, the engineer, procure, construct entities that are time and material. So if the government provides me overrun protection, they're incentivized to keep going. Yeah. So you get these moral hazards through some of these types of schemes as well. So it's really got to be defined, you got to confine it, and then you got to allocate the risk. And to date, we don't have a model for that works in merchant space.
That begs another question, actually. One of the ways large capital projects can see risk diversified is through JV, right? So you mentioned the work you've done overseas. To what extent is it possible to see that in the United States?
What I've seen overseas, like especially in the UAE project, that was a Team Korea effort. So you saw KEPCO come in as the utility, KHNP, which is Korea Hydro Nuclear Power, as the operator. They come in with Hyundai, Samsung, kind of key providers of the different pieces and parts of the nuclear ecosystem. Yeah. And that enables them to not only complement one another, but share in that risk. And then they have the sovereign backing. Right. So I think that sort of model we don't have in the US. We have competition, which helps, but then it also hurts in that you can't bring complementing entities together to enable a project. So as we think about a fleet of gigawatt scale nuclear build out in the US, say for my EPC, do I get Bechtel? Do I get Kiewit? Do I get Zachary? And how do I get them to work together? Because none of them can take on 10 reactors at once, right? So if Zachary's got the first 2 and Bechtel has the number 3 and 4, and Kiewit's got some, how do I transfer those lessons so that costs do come down? versus each nuclear project is, again, its own new thing. So those are the types of things we're trying to think through and work with the government to see if the government can step in and catalyze some of that risk and share across that.
So you also mentioned, and I think this obviously contributes to that need for risk sharing, that every project in the U.S. is bespoke. But by the same token, when you think about the small modular technology, those are more or less cookie cutter designs that an individual manufacturer can just sort of plug and play, right? And I've been told, this actually came out in one of the workshops we held, that the Westinghouses of the world are just looking for lots of orders so they can go into manufacturing mode, which is an interesting thing to think about, because then you can see where there can be economies of scale gained in the production of these. But I don't know how real that is because we haven't seen it, right? So there's another sort of moment there. But the fact that you can scale down the amount of capital required to get something deployed seems to me it should, all else equal, encourage that risk appetite, because an individual player now can actually think about doing something. And I guess that maybe brings us back to market design, right, to a large extent. But I wonder if you could talk a little bit about that and how you're actually seeing that.
Yeah, I think one thing I would add to just clarify, when I talk about bespoke designs, the primary nuclear reactor would be identical across different, like Westinghouse 4 loops, for example, or 3 loops, or GE designs of various vintage, Mark 1 through 4. But where the bespoke engineering occurs is really on the balance of plant and the turbine island. So I might procure a Westinghouse AP1000, but then instead of using a Toshiba turbine, I may go to Siemens. And now I might work with an architect engineer out of Chicago, like a Sargent Lundy. And the way that they integrate the two pieces and design the balance of plant will have all kinds of unique elements to it. So when an EPC contractor comes in and has to construct it, it's altogether different than what they just did maybe outside of Philadelphia for a different plant.
Sure.
So that's where we've seen a lot of the inefficiency. But to get to the kind of meat of your question in terms of SMRs, I think there is a real opportunity there for the hyperscale kind of entities, because these are trillion-dollar companies. Their ability to take on risk is very different than even a Constellation, which is a $100 billion company, which is different than Westinghouse, which is maybe less than $10 billion as a company. But that said, there's a kind of ability to take on risk versus the willingness to take on that risk. And I think largely hyperscalers are still operating from a renewables paradigm, where they're used to coming to a developer or utility, sign a PPA, the developer can go and get project finance, and then the hyperscaler's like, when do I come and hook up my data center? And it's done, right, in a couple of years. But nuclear, it's a 10-year life cycle from the moment you say go for me to get the permitting, the licensing, the long lead equipment, get my NRC permit to construct. Nuclear construction starts, you get to commissioning, you get to turnover, and then COD. And along that whole way, there's a huge risk profile that the hyperscalers really got to come to the table and sit side by side to say, which of this can I take off the table, right? Because the smaller entities just won't have that ability to wear that kind of risk. And that's where the SMR is different, where if the quantity of the total build, that quantum is 3 billion versus 15, the ability to wear that is somewhat easier.
So I've got a few questions in here. It's interesting that everybody kind of goes to this. It's an issue that is relevant in the news cycle from time to time, right? Nuclear waste. What's the solution, even with the small modular technologies?
I think Gen 4 is providing some interesting kind of opportunity as it relates to spent fuel. But if I think about holistically, how do you solve that issue? There's kind of a couple opportunities. One is can you revive a Yucca Mountain type of project where you get this semi-permanent storage for spent fuel? But I think the longer term, more economic solution is to have some sort of reprocessing. because most people don't know this, but if for our large light water reactor fleet, we only use 0.5%, so less than 1% of the total energy that the uranium fuel has in it. So it's largely unused, that we call spent fuel. So if we're able to reprocess that fuel and convert it back into different fuel forms that can get reused, you never run out of fuel. You actually don't create any more spent fuel. You'd have kind of almost indefinite amount of fuel to power these new reactors. And some countries do that now. France has some reprocessing. Japan has it. So the technology exists. Unfortunately, politically, that hasn't been very popular in the US. Back in the 70s, when the reprocessing technology, it required that you went through some of these plutonium isotopes, so it was a big proliferation issue. We don't have those concerns anymore, but really the politics and the law hasn't caught up to the technology.
Okay. You want to comment on the prospects of that occurring?
Yeah. To me, it's kind of like fusion, where we always say it's like 15 years out. You know, like it's out there. I don't put a lot of kind of weight or hope in that happening anytime soon. So when we think about techno-economics for new nuclear, we don't think about reprocessing or long-term storage.
So there's a couple of questions in here about effectively grid balancing services. And I think there was a story, Peter, was it 2 days ago, about the French cycling their plants? What are the prospects of nuclear actually providing grid balancing services against a larger and larger intermittent renewable fleet?
It's actually already providing that sort of ancillary function with not only voltage control, but having a spinning reserve, which is so important for frequency regulation. But it's going to become more and more important as the concentration of renewables increases on our grid. So a recent event in Spain where their grid was lost, the studies that have been done afterwards, the root cause kind of points to lack of spinning reserve on their grid, high concentration of renewables. So I think that's going to magnify nuclear in terms of the additional attributes and characteristics that brings value to the grid. Absolutely.
So I know you can get paid for that frequency service.
Right.
How does that factor into the economics for nuclear?
You know, right now it's not enough to kind of counter the balance, especially from a new nuclear perspective, because the capital is so large. But definitely for the existing fleet, as we see like the PJM auction, which we saw the results earlier this month, capacity prices are increasing.
Right.
And I think at some point we'll start to put value to the attributes that nuclear and dispatchable gas, others bring from a grid stability perspective, so the ancillary services.
Right. Yeah. Interesting. So I have to ask this question because it's actually popped up. I was going to avoid it, but I have to now because it's popped up 4 times in different ways. And of course, I don't know if it's not the same person asking the same question, but that's okay. Is fusion. Do you guys have an eye on that, what its prospects are? Are you engaged on that? I know you've been engaged personally on the research side, but is Constellation engaged on the research side of this?
So this response will be my personal response, not the Constellation response. But you know, I've been near the technology and just seeing the latest kind of progress. I just don't see that it's progressed enough to where we see kind of a viable commercial solution in probably the next 15 plus years. Reason I say that is maybe folks have read the headlines last year. The National Ignition Facility, which is one of the largest kind of plasma fusion research centers at Lawrence Livermore, they had made the headlines where they said we achieved break even. We got the same amount of power out as we put in. Oh, this sounds great. And for how long? And it was like, well, it's for microseconds. Okay, that's fine too. But when you read more into it, when they talk about break even, it was the amount of power from the laser to the fuel. It doesn't talk about the amount of power it pulled from the grid. So when you factor that in, it was 113 to 1. So you first have a long way to go to get to true break even. And then when the reaction is only sustaining for less than a second, you've got to scale that up to 24/7, 365, right?
Yeah.
So the materials, the ability to sustain the reaction and then get the power equation fixed, I think those are huge hurdles, at least in that type of a fusion device. There's others like a tokamak and other ways of magnetic compression and different things that could potentially accelerate that, but I still see those as pretty large.
Well, I'll tell you, your answer rings very true to what was her name from Lawrence Livermore? It was her last year?
We actually had a future
Yeah.
panel last year.
Yeah. Yeah, so she was intimately involved with that, the experiment that they did.
Okay.
That actually led to that new, and she downplayed the headline for the exact reason that you did, and she was involved in it.
She was involved,
right?
yeah.
So, yeah, it was an interesting conversation. So yeah, last year we had an entire panel on fusion. Two of the individuals on the panel, though, were much more bullish, but I think they had a product to sell too. So it's,
Well, to her credit, that was very transparent of her because they don't like to bring that into
no,
the.
absolutely,
So,
absolutely.
that's great.
All right, so I think I've got time for one more question, and I had one up here. That's right. So when we talk about fueling new reactors, they could be SMRs, micro, gigawatt scale, whatever. That supply chain right now is pretty fixed. As we go forward, and this had to have come up in the Texas conversation that we were talking about earlier, because there are uranium deposits in the state of Texas, right? But how do you see that evolving? Because I think that actually plays into a lot of broader conversations about national security and mining and other things as well. So,
Yeah, I think as a country, we're just blessed with so many natural resources, and uranium is one of those. We have large deposits in Texas, in Wyoming, Colorado, Utah, so a huge opportunity to grow that supply chain. And there are companies that are looking at actually different technologies that don't even require mining. It's like chemical in situ separation of uranium from the rock. And they're economically viable, so it's not some sort of a moonshot sort of a thing. I think where we're going to struggle is with when you get outside of the LEU, which is a low enriched uranium, which is what our current fleet uses, and you get to the HALEU, which is a high assay, low enriched uranium. So some of the Gen 4 reactors require HALEU, and there's no established supply chain for HALEU. And I think that's going to be a real struggle. We even saw for the existing supply chain, because a lot of it was sourced from 10X, which is Russia-based. Once you take Russia out of the equation, those supply chains start to get really constricted. Yeah. So I think focus on bringing a lot of that onshore to the U.S., bringing the enrichment, the conversion, and largely the fabrication does exist here, but growing that is a real opportunity. And then we got to focus on the HALEU piece, which I think is a bigger challenge.
Yeah, it's interesting because that does highlight, particularly for this administration, some of the goals that it has is actually to control more of the supply chain. And I think it plays into their emphasis on nuclear as a technology option going forward. So everybody, please join me in thanking Sarfraz for being here. And I see John there and Tim there, so you guys are welcome to make your way up here. We'll get the mic switched over and the floor will be y'all's.
Well, good afternoon, everybody, and welcome to this session with CEO Tim Latimer. Before we get started, I want to introduce myself to you. I'm the Dean of the Mewburn College of Earth and Energy at the University of Oklahoma. Big oil and gas state. It's a lot of what we do at OU. We're the first petroleum program in the nation, first geology program. Everything subsurface is really started at OU. Real proud of that. What you may not know, in Oklahoma, the wind blows about 12 miles an hour annually on the average west of I-35. And therefore, we've got a lot of wind turbines, In fact, the largest source of electric power in the state of Oklahoma is from wind. You might, wow, we got a lot of natural gas too. So Google's coming, and we've got a lot of energy, a lot of cheap energy in Oklahoma. So a lot to be proud of, a lot of legacy. Quick question. So before I start asking Tim questions, I have you a question. What is 93 million miles away and has a surface temperature of 10,000 degrees Fahrenheit? The sun. Good. You paid attention in 3rd grade. Yeah. So there's something a little closer. Now, the core of the sun's hotter than 10,000 degrees Fahrenheit. Okay, but work with me. There's something a little closer that also has a temperature of 10,000 degrees Fahrenheit, only a few thousand miles away. You know where that is? Right down there. And so that heat, when you think about hydrocarbons, the ancient organic matter that got churned, the two important ingredients besides that source was heat, and pressure. And so what's really intriguing about geothermal is it's been used in a catalytic process to create these beautiful hydrocarbon molecules that are packed with energy, right? These covalent bonds that snapped into place over time, which we can now use as energy source in liquid energy and gas. But if you think about the actual source of that, one of the key ingredients was the Earth's heat. And so why not just go straight to that? And so I think it's such a, the wind is what it is, right? The wind blows 12 miles an hour. There's a certain amount of energy you can extract from that. The sun shines in California and other places a lot. And theoretically, energy is like a kilowatt per square meter. Efficiencies now, solar cells 25%. So 250 watts per square meter. You can kind of do the math and figure out how much of that area do you want to devote to those kind of renewables. But think about the subsurface and geothermal. I don't know if Tim would characterize it as a sleeping giant, but I think it's a lot of untapped potential. And I'm really excited to sit down with him. And first, want to congratulate you, Tim. We just learned before the session that you became a dad recently, so that's the best job any of us can have. So,
thank you.
We can go now, right, Mike?
That's right. I'm not going to top that.
Can't top that. Yeah, everything else is downhill.
Yep.
So I just thought, we'd start off with kind of your origin story, heard a little bit about your background growing up, but share with the audience, what led to this pathway from little Tim to who you are now as a co-founder and CEO of Fervo, a really outstanding startup company. Tell us a little bit about that journey.
Yes, I grew up in Texas, also a big energy state. We also have wind and natural gas and
I've
all
heard
these
of that,
things.
yeah.
So, but then I ended up going to college in Oklahoma at the University of Tulsa and studied engineering there. And I graduated in 2012, which was, I would say, maybe the peakiest year of the shale oil boom. Yeah. And I think that was the sentiment on campus the year I was graduating was, if your degree said engineering and you had a pulse, you could get a 6-figure job, and that was a nice time to be graduating into the industry. Of course, it hasn't always been that way, but that's how I ended up in oil and gas and found it to be a fascinating place to work. And I started my career working here in Houston for BHP. I was a drilling engineer working in the Eagle Ford, and the interesting thing about the Eagle Ford is it's a slightly higher temperature oil and gas resource compared to a lot of the other onshore plays. And so actually my very first job when I started working on the rigs in South Texas was, hey, we're having our tools fail downhole because we think it's too hot. Can you figure out a solution for that? And I embarked on the typical engineering, literature review, problem analysis, and every paper I read about high temperature drilling was from this thing called geothermal, which, like a lot of folks, I'd never heard of it before because it's as of today, a very small part of the global energy mix. And I became fascinated by it, though, this concept that you could drill wells, but rather than producing hydrocarbons, you produce the heat and just make electricity directly from that. And so I kept reading, and there was this pivotal moment where I read a report that MIT had published called The Future of Geothermal Energy, and they outlined this thing called enhanced geothermal systems, which basically is this concept, traditional geothermal, you basically have to be on a volcano or a rift or something like that. People think of Iceland or New Zealand or Kenya, where the steam is literally coming out of the ground because there's so much heat near the surface and permeability. So it's a great resource where you have it. It's 24/7, it's carbon free, it can be produced for generations. but it's so limited to these special spots like Iceland. And there's this different thing, which is enhanced geothermal systems, which is basically the idea that the deeper you go, the hotter you get, 10,000 degrees Fahrenheit, as you mentioned. And even if you don't have an area that's naturally faulted or fractured or naturally permeable, if you can create fractures in the rock, you can actually circulate fluid through the hot rock, and you can make geothermal work anywhere. So this has been something that's been researched for a very, very long time. And I went down this rabbit hole of reading it, and this MIT report basically said we could unlock an unlimited amount of geothermal energy in the United States, but there were these major technical barriers that had to be solved. And the technical barriers were we had to get better at drilling, so the drilling was lower cost, and we had to get high flow rates out of low permeability formations. And so you can imagine the light bulb moment for me, where I was working in South Texas, drilling in the Eagle Ford Shale, a resource that people had known about for a century, but hadn't been able to produce economically until the confluence of horizontal drilling and hydraulic fracturing came together in the 2000s to make it economic, and it just opened up this huge resource. And so the insight I had was, if those technologies were able to unlock tight oil and gas resources in the United States, they could be applied to solve the grand technical challenges of enhanced geothermal systems. And so from that day forward, I set out on a mission to bring technology innovation from oil and gas to create a revolution in geothermal energy, the same way that there'd been a revolution in oil and gas production in the U.S. And so, that's where Fervo really got its start.
That's so interesting. You had that aha moment out there in the field, thinking, but and this is a typical situation oftentimes with academics and industry, right? And your co-founder, Jack, was a PhD student at Stanford at the time, as I understand, doing research in this academic field, basically enhanced geothermal. You were out there in the rig discovering it, kind of, no offense, but kind of from the bottom up. And that's so fascinating. It's a perfect match. And I want you to talk a little bit more about your experience at Stanford, too. So you mentioned the fracking, and I've seen shale rock. You're like, how could any hydrocarbons be in there, and how could we flow anything through that? The hard rock that you're fracturing has very similar characteristics, I assume, to shale. Is that fair to say?
It's a bit of a different rock, and that's actually what's driven a lot of the need for new technology development in our space. If the job was as simple as copy-pasting a well program from the Eagle Ford into a geothermal reservoir, there wouldn't be much to it. But geothermal is a bit different. We're targeting much higher temperature reservoirs, and the other thing is where you look, the places where the heat comes close to the surface more often than not coincide with areas where there's granite. And so this is one of the big things that we've had to do at Fervo over the last few years, was figure out how do you take technologies that are now well proven. I think the last count I saw is that there's something like 300,000 horizontally drilled, hydraulically fractured wells in North America. So no one's questioning, does it work or not? Because it's, that question was answered 25 years ago. But can you replicate those results in a much higher temperature reservoir and when the rock type is granite? And I think the good news for us, and I'm sure we'll get into this part of the Fervo journey, is the answer to that's yes. But it took a very significant amount of technical work to be able to figure out how do you actually adapt these tools and techniques to work in a totally different geologic setting.
Devil's always in the details, right? It's like, oh yeah, it's the same thing. Well, not quite.
Not
Granite's
quite.
a little different structure than
That's
shale.
right.
So I can only imagine.
Yeah.
So I appreciate you one of my questions, what you kind of answered. In my experience talking to entrepreneurs, there's kind of the two extremes. One is sort of the slow burn, where that idea kind of cooks in your brain over time. For you, it sounds like it was kind of an aha moment. It's like something went off. He's like, wait a minute, there's heat down there. We can do fracturing. Why not recover the heat?
I think there was a lot of that. And the next step in the journey is I was just like, I actually started out thinking, well, I'll go join a company that's already doing this. And so I looked at the conventional geothermal players. I looked at other geothermal startups, because it was like, the oil and gas industry gave the geothermal industry this big gift, which is just dramatically lower drilling cost and a huge better understanding of the geomechanics of how these systems work. And I thought it was so obvious that people would be working on it already. And actually the only papers I could find anywhere about the concept of providing horizontal drilling and hydraulic fracturing to geothermal was by a small research group at Stanford. And there was a moment where I was like, wow, they beat me to the punch. Like, somebody already had this
somebody
idea.
Somebody knows about it, yeah.
And then I ended up talking to a mentor of mine, and they were like, well, they haven't, why don't you just go join them? And so that was actually a part of the entrepreneurial journey. Is being a guy just drilling wells in the field. The step of like, how do you get money to do this? How do you build a team to do this? How do you? I mean, I didn't know anything about electricity markets at the time. Felt a little daunting. So I actually thought, well, if there's already a research group at Stanford doing this, why don't I go there for grad school and team up with them and see if there's a good fit? And thankfully with Jack, my co-founder, who'd done a lot of this, from the other direction of just like asking questions from the computational reservoir simulation side about the techno-economic performance of these systems. So I approached it with the mentality of a driller. I was like, well, I drill wells here, why don't I drill wells there? And he approached it from the mentality of somebody looking at the actual fundamental physics of that reservoir, and what we ended up finding was a great mesh of our two skill sets. So by the time I graduated from Stanford, where I did my MBA in 2017, the two of us decided to team up and launch the company together.
Launch it together. Talking about a little bit more on the theoretical side, you mentioned Jack's expertise and his studies. I'm curious about sort of the life cycle or lifespan of a geothermal reservoir, right? It's kind of like, we know in life there's nothing free, right? You pull out all the oil of a reservoir, it's empty. And what's the analogy, or is there an analogy to a geothermal reservoir in terms of the thermal, what's the thermal lifetime? What are the parameters that it depends on? Is there a concept that we can model of recharging the thermal, and what's the timeline on that? Because it's all going to feed into the economics.
Yeah, no, these are great questions. And I mean, the basics of how fervo, or just geothermal in general works is there's rock that's hot. And the mechanism in which you transfer that heat to the surface is you flow fluid through it. And so there's some geothermal power plants, like if you go to Iceland or the geysers in Northern California, where it's so hot that it actually becomes steam in the well. And so you can just put a turbine on top of it and generate electricity. And then there's other geothermal where it's hot, but not so hot that you get an efficient conversion to steam. And so we use what's called binary cycle power plants. So we actually produce geothermal brine, heated geothermal brine, keep it under pressure, and run it through a heat exchanger, and then actually use that heat exchanger to flash a working fluid with a lower flash point and have that power a turbine. And so that's what we do at Fervo, which means that we can access resources that are lower temperature, that you don't need all of it to convert to steam directly. You can use an alternative working fluid so that you get more efficiency. And so all geothermal is a function of how long it lasts, is a question of you're re-injecting that geothermal brine, and there's a certain heat transfer rate of that geothermal brine as it moves through the system, and you can extract the heat faster than it can be recharged, or you can extract it at the level that it can be recharged. And sort of the longevity of the system is a function of how much of that geothermal brine are you sweeping through the system so that the heat gets extracted. And so a lot of conventional geothermal facilities have such large natural reservoirs, like the geysers in Northern California. They started producing electricity there in 1962, and it's still making 900 megawatts to this day. So large natural systems can last for a very, very long time. In our case, the twist that Fervo is doing differently is, again, we're not accessing large natural permeable reservoirs. We're creating our own permeability between sets of injection wells and production wells. And so when we think about the system design life, it's more of an economic question of there's a certain volume of rock, and that rock has a certain heat capacity. And we drill our wells, and if you can run the simulations on this, if you drill a 5,000-foot lateral and the injection and production well is 500 feet away, there's a certain volume of rock there. And if it starts out in our system at 400 degrees Fahrenheit, you can do the math on if you're going to move fluid through the system at a certain volume, it'll cool off over time. In our case, we try to get it to design. We design for about 50 degrees Fahrenheit of cool off over a 20 to 30 year period so that we can get a very long asset life out of that well. And so, maybe more of a technical answer than you wanted, but that's sort of the way that you think about it. And if you want the well system to last longer, you have two choices. You either drill longer laterals or space the well out, or you flow less. And so a huge part of what we're doing is the techno-economic optimization of okay, it costs a little bit more money to drill that extra 1,000 feet. It costs more money to put the wells farther apart. You get more production if you put it out, but it declines faster. And so driving towards that sort of techno-economic optimum so you have a very cost-effective project is a lot of the work we're doing on a day-to-day basis.
Yeah, that's very interesting, because you can engineer that now that you know what the parameters are, and you can kind of figure out the life cycle cost, or the cost of a kilowatt hour, basically, and kind of see where you need to be and do all those trade-offs.
Exactly right.
So that's very interesting. So I don't want to go down a rabbit hole, but I know there's another type of geothermal energy production where you have an injection and production well, but it's more closed loop. There's piping all the way through the system where the fluid, in theory, you don't necessarily need to lose a lot. Can you talk about the advantages and disadvantages of the approach that you're taking with fracturing versus maybe what they call advanced geothermal, I think?
Yeah, I can try, and I think what's hard is the closed loop. There's a lot of talk and press releases and very little sharing of data of what those companies are doing, but they're not difficult systems to analyze. So just talking about broad strokes, the difference is what you're really creating is a heat exchange system. And whenever you're accessing, like in our system, a mile-long lateral and 500 feet apart with the well spacing, and then we create hundreds of fractures that go in between it, what you end up with in these systems is tens of millions of square feet of surface area. Yeah. And so, whenever you, probably the most relevant techno-economic metric we look at is how many effective kilowatts of electricity can you produce per lateral foot that you drill? Because drilling's probably the most capital-intensive part of the process. So if you're going to drill a well, you want to make sure you're maximizing the production. And when you compare that to closed loop, what you end up with closed loop is that rather than having gigantic fractures that are sort of football field size fractures for you to do the heat exchange with, the only surface area available for heat exchange is what's in the pipe itself. Yeah. And so generally what you find is you have to do about 100 times more drilling to get the equivalent amount of electricity
surface area,
and surface area, which translates into electricity as an enhanced geothermal system. And so, not to oversimplify it, but probably a first order kind of estimate is if drilling's the most expensive part of the process and you have to do 100 times more of it to get the same amount of electricity, you end up in a situation where the cost of closed loop geothermal, just because of the limitations on surface areas, is radically more expensive than enhanced geothermal system. And that's really the biggest difference.
So speaking of headlines, sometimes different technologies get headlines for whatever reason. But if I'm thinking big picture, one of the selling points of geothermal is, in principle, right, if we go deep enough, we're going to hit that hot, hard rock.
Yeah.
Anywhere in the country almost. I mean, we know California has geysers, and we're not talking about that right now. But is that really true? I mean, to what degree? When do we see that actually being a realization, or do we see that being a realization?
I'd say that's realized today. And to get a little bit more in the company journey, we went through years of sort of computational modeling and lab testing and field testing. And the big breakthrough moment for us is we produced our first electricity generating well system in October of 2023, and a project we did in partnership with Google in Northern Nevada. And that system is online and functioning today. So long now, almost a 2-year-long track record of.
Now, was that part of Google's
operations.
24/7 green ambition?
That's exactly right. And Google was a little bit ahead of the curve. They set a target early on in the 2010s around sustainability to be 100% renewable energy. And that was one of their efforts to say, at the time, the methodology most people were using to calculate that was look at your annual energy consumption and then go out and try to buy enough wind and solar that the megawatt hours at the end of the year equal each other out.
But not literally using the electrons.
But not literally using the electrons. Mm-hmm. And so what happened is Google actually hit their goal years ahead of schedule. And by 2018, if you added up Google's global, megawatt hours consumed, and then you looked at whether it was a, wind facility in Oklahoma or a solar facility in California, the number of electrons they produced, those numbers equaled. And so Google said that was a great thing to catalyze the growth of the wind and solar industry, but clearly we're not actually powering the operations with the electrons. And so that's the next step in the journey. So they launched that, and then the thing about 24/7 is obviously wind and solar play a piece in that if you want to do it in a carbon-free way, but it requires you to look beyond wind and solar to energy storage technologies or technologies like geothermal that can work round the clock. And so Google became our first commercial partner and the off-taker of our first project, because they made a specific goal of looking beyond wind and solar and partnering with new technologies, and that's why they were a partner on that first project in Nevada.
So Google was your first essentially major partner.
Yeah.
So is that Project Cape Station, or is that a different one?
That's Project Red. So this is a relatively small project in the grand scheme of things, just 2 wells. But it's enough to prove out the whole concept of what we're talking about. That you can drill horizontal wells in granite at 400 degrees Fahrenheit, that you can connect those wells through fractures, and now the thing that we prove every day is that you can sustainably produce in that system at elevated temperatures for a long period of time, which is important to the economics. The project we're working on now is a massive scale-up of that technology, which is Project Cape in Utah.
Okay, so give us a little update on that. Are you producing power there? What's the next?
We will by next year. Okay. So Project Cape, it's a 500 megawatt project. So we are investing over $2 billion to bring this project online. We have so far drilled over 20 wells in this area. In terms of technical accomplishments, Project Red was a huge accomplishment for us to prove that it could work.
Right.
But it was still so high up on the cost learning curve that it wasn't economic. So a lot of Fervo's viability comes down to how quickly can we prove we're squeezing costs out of the system. So the exciting thing for us is that between Project Red and the most recent wells we've drilled at Project Cape, we've reduced drilling times by 70%, we've reduced costs by 70%, and we're drilling hotter wells, longer laterals, and upsize the casing. So we're getting about triple the output per production well there as we did in our first project. So we're very far along on that project. We're building the power plant as we speak. We've drilled 20 of the wells that we need for phase one and proved out a much better cost structure. So we're going to bring 100 megawatts of that project online next year, and we're actually scaling up the full project to over 500 megawatts by 2028.
I'm kind of doing the math in my head really quickly here. You said 100 megawatts and 20 wells, so that's 5 megawatts per well?
Yeah, so if you think about our system, it's pairs of injection and production wells, and we get roughly 10 megawatts now per production well that we drill. And so they each need a supporting injection well. So 100 megawatts, 20 wells, that's the quick math.
Wow. And your target for that project is 500 megawatts?
Yes.
Okay. Fantastic. After talking to you out there in the atrium, this may not be a relevant question more because things are moving fast in his company, as you can tell. But I'll ask it anyway.
Yeah.
I had the impression that the fossil fuel industry had the best drilling technology and the best know-how, and that kind of geothermal was like not enjoying that as much. There was a cultural gap, there's a technology gap, maybe a awareness gap. Do you feel like that gap is closing now?
I think that gap was very prominent before Fervo, and I think we closed that gap, and now I think there's a very tight collaboration between the geothermal industry and the oil and gas industry, and that was part of our sort of founding thesis on this. And actually, when I started drilling in South Texas, first rig I ever worked on was an H&P Flex 3 rig, even back in 2012. Huge amounts of automation. Lots of data acquisition, just like a very sophisticated operation. The first time I visited a geothermal drilling rig, I set foot on, it was a Kelly rig. And I was like, wow, I remember reading about this in textbooks. And I kind of joked about this, as I was like, I think, and I don't know if you'd have to fact check this, who knows if it's true or not. But I think when Fervo, we decided to partner with H&P to drill our first wells in Nevada. And we used the Flex 3 rig, the exact same rig that we used in the beginning. And the joke I say is I think that may have been the first time in history that a geothermal well was drilled with a rig that's younger than I am. And what I found, and we made a very tactical choice to headquarter the company in Houston as well, because what happened is that the technology innovation, the pace of technology change in the oil and gas industries from, let's call it 2004 to 2014, was just radical. I mean, everything about how we drilled and completed wells in the onshore environment in the US was upended. And what you found is there were no geothermal companies in Houston, or any of the major oil and gas hubs. They're located in Reno, Nevada, or Reykjavik, Iceland, or Santa Rosa, California. And there wasn't that cross-pollination of ideas between the two industries. And it left this huge gap that Fervo was able to come in and close. And a huge amount of our technology performance right out of the gate was actually just bringing, proven and established technologies from the oil and gas industry into geothermal for the first time. And I think that was one of the reasons we were able to come down the cost curve so quickly is, we're not having to reinvent the wheel on everything. A lot of it is this got proven in oil and gas. How quickly can we adapt it to work in a geothermal environment?
Is there an analysis talking about cost and economics? When we think about levelized cost per kilowatt hour or whatever metric you use, maybe you don't talk about the cost of the power plant on the surface because that's kind of a known quantity. But in terms of an energy source and kind of from greenfield to beginning to end to getting a pair of injection and production wells to start producing energy, are we where we need to be to make this really, start taking off economically? I mean,
yes.
I don't know if we have any private investment firms in the audience here.
As I mentioned, we'll invest over $2 billion in just the first project in Utah. And I can tell you, you can get a great grant or philanthropic funding to do a $2 million trial of something. You're not building a $2 billion project unless you're providing an economic
billion with a
return to your
B.
investors.
Yes, I know.
And so we've done the hard work to drive this down the cost curve fast enough, and we've participated in a couple of big tailwinds. I think one thing is, we were one of the few resources that got renewed in terms of energy tax credits in the one big beautiful bill that passed 2 months ago, and that was just recognition that geothermal is in this state where we're just kind of coming out of the starting gate of becoming a huge energy technology, which is I think the right place for tax credit incentives to play. So that helps close the gap a little bit. The other thing that closes the gap a little bit is we're in what's kind of a once in a generation explosion in demand for electricity. And so the offtake price that you can get for electricity is, depending on where you are, 50 to 100% higher than it was when we started Fervo a few years ago. And so where we are on our cost curve, because of the presence of these investment tax credits and the presence of an elevated offtake price environment, we can build a $2 billion project and provide a great financial return to our investors. We're going to use that project to keep coming down the learning curve. And I think we're going to be, by our goal with our cost structure is we'll be at a point by 2030, we could go back to what I would call a normal price offtake environment. We could have the tax credits go away, and we would still be the most economic resource there. And that's kind of where we are in our deployment journey right now.
It's so exciting, and nothing against the speakers earlier. And we see charts where we project from 2025 to 2040. I'm like, well, what assumptions are you making? Because I was looking, there was a chart that went up earlier that showed geothermal still this little hairline thing, not growing. I'm like, I wonder what Tim would think about that. But it sounds like, do you think about 5, 10, 20 years out, what is that going to look like? Are we going to get to double digits in electric power production from geothermal, in this country and elsewhere? Is that realistic? Or are we still going to be using the ones and twosies?
It's going to be huge, and it's going to grow faster than I think anybody appreciates. And a huge part of that is being adjacent to the supply chains of the oil and gas industry, which is an industry that really knows how to do things at global scale, lets us move so much faster. And I'll just tell you where we are. The 100 megawatts that we're going to put on the grid next year, that whole program has been done with 1 drilling rig. For us to get to 500 megawatts by 2028, we're going to go to 3 drilling rigs. You look right now in North America, you're talking about 500 drilling rigs operating. And by the way, 500 megawatts, for anybody who doesn't work in energy, we're building this project in Utah. That facility, when we commission it, will produce over 10% of the electricity in the state of Utah. And we'll have done that in a 3-year period with 3 drilling rigs. And so you start imagining how quickly this industry can grow, and also, especially as you compare it to nascent and emerging other energy technologies, is for us, we don't have to invent a global supply chain to figure out how to go from 1 rig to 3 to 10 to 50. Those rigs are already there, and it's a matter of figuring out the right tools and techniques to get them to go for geothermal. But our ability to go from megawatt scale to hundreds of megawatts to gigawatts of deployment is going to be far more rapid than any other industry of emerging technology right now, simply because we are able to get the tailwinds of leveraging an existing global industry and global supply chain right out of the gate. So I think that we're going to be massive, and I think it's going to happen quickly.
As we wrap up, I know there's aspiring entrepreneurs. We talked to some students out in the hallway earlier, and Rice and OU and Stanford and University of Tulsa all have great entrepreneurial programs. It's one thing to study about entrepreneurship in the classroom, but what were some things that you learned as a real entrepreneur? Was like, I didn't expect this, or were there anything like that?
It's kind of trite to say, but resilience is, I think, the number one thing that you have to have as an entrepreneur. There's got to be an ability to get, kicked in the teeth every single day, and figure out a way to get through. And here's a little math for you to kind of inspire you on the journey. Lots of different forms of entrepreneurship. The form we took, we raised money from venture capitalists. And one of the interesting things about fundraising is you read the press release, like, oh, Fervo raised a Series A, very exciting. And everyone says, wow, things must be going so well for you. And the thing that I always tell people is that here's how fundraising works if you've never done fundraising before with venture capitalists. You pitch about let's call it 75 investors. And if 75 of them say no, you failed at your fundraise. If 74 of them say no, it's a successful fundraise. And I always tell people it's something that you've got to prepare yourself for entrepreneurship is you're building a business that you don't need to have every single idea pan out. Not every customer is going to sign on as a contract. Not every investor is going to write you a check. You got to be willing to stomach the setbacks and the no's to get to the yeses that you need your business to survive. And yeah, that's my lesson on entrepreneurship is it's a game of resilience.
Well, that's exactly the opposite of what we teach the kids. And if you get 1 out of 75, that's an F. It's like, we got to change our minds about what we're doing. But that's very, very well said. I apologize. This time has really gone by quickly. We're at the end of our time. There's a few questions here that are pretty technical. I think we covered some of them already, but feel free to come by and talk to Tim after this and before our next session. Let's thank Tim for being here. Thank you.
Okay. All right. We're going to get started with the last session of the day. I think so far everything has been really above expectations, and I got to admit that's hard because I helped put this together. And I was expecting it to be really good. So it's actually exceeded my expectations, so I'm really happy about. So this last panel, we're going to dive into reliability. And really important point to make here, and I hope you get this out of the discussion, is that reliability is not just about capacity. It's actually about a variety of issues. And it highlights something that's true about electrical systems that a lot of people don't understand, that they are literally the most sophisticated engineering and logistics problems on the planet when you talk about the delivery of an electron to a consumer. There are lots of different ways to generate electricity. There's not so many different ways to transmit it and move it to customers. And so you have to think about, when you're trying to make that supply chain resilient, ways to introduce redundancy, mitigate the chance of failure occurring. I think Jason's going to be able to talk about that pretty well. Sometimes it's trial and error and learning by doing, but that's okay as long as we actually learn from our mistakes. We're going to start, though, with a talk from Julie Cohn, and she's got some slides, so she's going to step up to the podium and discuss this. Julie is a non-resident scholar here at the Baker Institute Center for Energy Studies, but she's also a research historian in the Center for Public History at the University of Houston. She spends a lion's share of her time really diving into the history of electric power in all its different facets, and has done some really fascinating work for us. Particularly going, back to just after Winter Storm Uri, when you started writing about the history of ERCOT and how it formed. And that was really good to see, quite frankly, because it elevated the conversation about what the potential solutions were, and I think threw some cold water on some of the finger pointing that was occurring. That's always a useful place to start in a policy conversation. So Julie, I'm going to hand you the floor. Go ahead.
Thank you, Ken. And I have to say, I have learned so much here today. I'm just thrilled to be able to be a part of this workshop and to be a part of this session as well. Recent reports about electrical reliability have raised an alarm. For example, the Department of Energy stated, quote, "Absent intervention, it is impossible for the nation's bulk power system to meet the AI growth requirements while maintaining a reliable power grid and keeping energy costs low for our citizens." Similarly, the North American Electric Reliability Council, in their 2024 long-term resource assessment, stated that most of the North American bulk power system faces mounting resource adequacy challenges over the next 10 years as surging demand growth continues and thermal generators announce plans for retirement. And we can probably all agree, especially after today's comments, that demand is rising for multiple reasons, and especially because of data centers, and we will likely need more power to meet that demand. We've also heard some really interesting ideas about where that power might be coming from very soon. But NERC also offers a reminder that reliability, as the title for this panel session suggests, is not just about capacity. quote, in a different report, the bulk power system remains highly reliable and resilient, and underlying key performance metrics, e.g. frequency response and misoperation rates, continue to improve or remain stable. So in this presentation, we'll look at whether our power system has been and continues to be reliable, how we assess reliability, what kinds of challenges we face going forward, and how we might think about those challenges. As a historian, I hope to underscore how we have dealt with similar moments in the past. So the first question is, has our power system been reliable, and what has that meant? Looking back over nearly a century and a half, what was once a collection of somewhat unreliable local systems grew into the acknowledged star of electrical reliability, the world's largest interconnected machine. The earliest systems failed not infrequently for all sorts of reasons, and customers who used electricity for only limited purposes did not count on it for many of their activities. By 1915, however, utility magnates like Samuel Insull understood that it was both commercially necessary and a public duty to provide continuous service. Nonetheless, periodic loss of power was sufficiently commonplace that the Marx Brothers employed a household blackout to comedic effect in their 1935 film Animal Crackers. And for anyone who's seen that movie, no one panics when the lights go out, and the pranksters use the darkness to effect an art theft. Prominent energy historian David Nine notes in his book about the history of blackouts that through the mid-century, Americans tended to keep candles and matches close at hand in readiness for the next power failure. During those years, utilities increasingly interconnected, as illustrated by the two maps. While their intent in part was to improve operating reliability, they also learned that interconnections introduced new risks. The industry aggressively pursued technologies and techniques to keep things running smoothly. By the 1950s, most of our economy was electrified, and by and large, we took it for granted that the lights would come on when we flipped a switch, but we also accommodated a certain degree of unreliability when outages occurred. And then the unthinkable happened. It's hard to believe that we are now approaching the 60th anniversary of the November 9th, 1965 Northeast blackout, the first and worst major cascading power failure in North America and at that time in the world. It's probably fair to say that this event shifted the attention of the American public to the power system to an unprecedented degree and fundamentally changed how elected officials, regulators, and the industry addressed reliability. Over the past 60 years, we've learned a lot about power system failures and how to keep things running. First, what had been then unthinkable became knowable. Major cascading failures do happen, and luckily they are infrequent, but they have significant effects on public welfare and the economy. Second, while we've had other types of large-scale and long-lasting blackouts, only 8 have been cascading failures. The other blackouts you might see listed on a Wikipedia page or elsewhere resulted from hurricanes, fires, freezes, forced outages, and other non-cascading events. In other words, we may argue over whether all of these major power outages are indicative of unreliability, but only a handful were within the full control of the power industry. Third, these events brought the focus to the bulk power system, which has significance in terms of how we invest in our power system and how customers perceive reliability. And finally, after the 2003 Northeast blackout, which affected 15 million customers in roughly the same area as the 1965 blackout, we finally instituted mandatory reliability standards at the federal level. So what does this look like from the power user's perspective? While big blackouts make the headlines, customers usually experience loss of power during much smaller scale events. So let's take a look at some numbers. Since 1974, the federal government has required reporting of emergencies and disturbances on the grid. Utilities and others report a wide variety of outages, only some of which directly affect customers. The most common causes are incidents such as weather events, vandalism, theft, real and threatened physical attack, and I'm guessing Jason could list a few more. Looking at 2023, the most recent year for which complete data are available, the Department of Energy recorded 348 outages. Of these, only 97 or 28% directly affected customers. Generator loss accounted for only 9 incidents. All of this points to the fact that for most outages, resource adequacy is not particularly relevant. The other measures that illustrate the experience of power users are the IEEE SAIDI and SAIFI indices, first adopted in 1998 for assessing distribution level reliability. For those who aren't familiar, SAIFI stands for System Average Interruption Frequency Index, or how often the average customer experiences a power interruption. And SAIDI stands for the System Average Interruption Duration Index, or how long outages last for the average customer, in both cases over the course of a year. So let's look at this SAIDI graphic. There's been only a slight increase in outage minutes experienced by customers over the past 10 years when major events, such as hurricanes, are not included. There's been much more variation when major events are included, and with an overall increase over time. And this is a good moment to put in a plug for an interactive graphic device hosted by the Center for Energy Studies that compares population and economic growth and major weather events. This data also suggests that there is value in focusing on resilience and recovery. How can we mitigate the effects of major events? And Jason, again, I expect this is something you'll share some insights about with us in a little bit. So looking ahead, much is changing. Let's break it down into some of the different elements of grid reliability, and I won't pretend to be comprehensive, to better understand both the dire warnings that were given and the technology optimism we heard in the NERC statement. We'll start with the dire warnings, which focused on resource adequacy, but should perhaps also address the multiple elements that affect resource availability. As in the reports I cited earlier, and as in today's earlier presentations, after a long period of little change, the demand for electricity is very much on the rise. The 3 biggest contributors are electrification across the economy, addition of EV fleets, and again, as we heard, projected rise in large loads such as data centers, some of which also have the characteristic of problematic ramping. To meet this demand, we will undoubtedly need more power generation. Luckily, as we heard just a little while ago, in the United States, we are the beneficiaries of energy abundance. We have it all: oil, gas, wind, sun, waves, geothermal, uranium, you name it. Each type of energy resource presents both opportunities and challenges for future electrification. But let's not forget that the physical infrastructure of the grid and how it is operated are crucial to a reliable power system. Some of our oldest infrastructure has been in use for anywhere from 60 to 100 years or more, as the 2 examples on this slide illustrate. We have to ask, is it sufficient to a reliable future? Some of our oldest, as far as reliability is concerned, the rubber really meets the road in the system operating room. A grid operator may have multiple duties, but the most important one is matching generation to demand in real time. The equation shown here, which I'm treating as a graphic, not a real equation, references a decades-old practice that exploits the physics of the grid to accomplish stable operations. It's called the area control error. It's used for automatic generation control, and it helps operators maintain the heartbeat of the grid. With increasing penetration of solar, wind, and batteries, all inverter-based resources, or IBRs, the physics of the grid are changing, and there will be a tipping point soon when the penetration of IBRs with respect to traditional generation is so large that reliance on past approaches may no longer suffice. Grid operators will require new techniques for keeping the grid stable. Achieving reliability on an increasingly complex power network requires regulatory oversight, and our current approach divides the power system into the bulk power system, regulated by the federal government, and in certain aspects regulated by the federal government, and distribution networks overseen by state, regional, and local entities. Today, these lines are already growing blurry, indicating that different regulatory interventions, different standards, and different market designs may be necessary to assure reliable systems. As more and more customers generate their own power, rely on their own backup batteries, and participate in demand-side management, They are becoming a different type of stakeholder in system planning and operations, and may also have to shoulder greater responsibility for reliability than in the past. Assuring adequate installed capacity addresses one element of the energy resource challenges ahead, but there are other issues to consider. For example, the availability of primary energy resources. At the turn of the last century, reliable electrical generation depended upon access to coal. Mining strikes, railroad strikes, competing demands from other industries all interfered with utility operations. The background image here shows us a coal pile in New York City in 1911, one of the techniques developed and of course still in use today to guard against coal shortages. In this century, natural gas displaced coal as the dominant energy resource used for power generation. The natural gas and electric power industries, as everyone in this room well knows, operate under separate market structures and regulatory regimes and face competing demands. As we learned during Winter Storm Uri here in Texas, even if we have sufficient installed gas generating capacity, we may not have sufficient gas to generate power. Intermittency and weather dependency are cited as conditions that make solar and wind unreliable, and this is not an entirely new concept for us either. Hydroelectricity has always been intermittent and weather dependent, and historically utilities mitigated this with links between multiple river basins and between hydroelectric and hydrocarbon generation. Today, we mitigate the intermittency of weather and solar with other generating resources, sometimes across wide distances, and with storage batteries. Here's the problem. While the potential unreliability of hydroelectric power occurs on timescales of seasons or years, wind and solar may be intermittent on hourly or minute-by-minute bases, heightening the urgency of this challenge. Timescales are also at stake when it comes to the changing physics of the grid. The legacy grid is composed of giant spinning turbines, and as I mentioned before, we exploit the resulting physics to address frequency and voltage changes, sudden failures of infrastructure, and unanticipated increases or decreases in demand. Grid operators first identified these challenges in the 19-teens. It took 4 decades to fully define the issues, then develop viable solutions. Over those 40 years, net generation increased roughly 1,200%. Between 2003 and 2023, just 2 short decades, net generation of wind and solar has increased more than 6,000%. And although it is expected to level off, as this graphic shows, it is anticipated to continue increasing in the immediate future. While consortia in the US and abroad are developing approaches for grid-forming inverters, that is, IBRs that will both emulate and provide physical signals to the grid, we are not there yet. Grid-forming inverters have the potential to improve grid reliability, optimize the use of both intermittent resources and batteries, and provide ancillary services. And models and simulations hold promise. However, implementation on large grids awaits, and time is of the essence. There are also compelling opportunities. I feel that I've skipped something. There are also compelling opportunities ahead, as we heard from our presenters earlier today, and as expressed in the NERC report that I cited, for us to maximize the role of new large loads on our system. And importantly, we've had to deal with unanticipated demand growth before. For example, in the late 1930s, industry and government experts forecast that a wartime economy would require 4 times more power than a peacetime economy in the coming decade, somewhat like the prediction that we saw earlier about new data center loads. Indeed, with the US entry into the World War II, electricity-intensive defense production ramped up fast. For a variety of reasons, rapid addition of lots of new power generation was not an option. Nonetheless, through expansion of transmission lines, increased interconnection, and importantly, innovation in operations, we realized a 60% increase in net generation with only a 25% increase in generating capacity. Incidentally, this was done by experimenting with new approaches directly on the grid, something that I think we would be loath to try today. We've heard from the experts this morning how future large loads, with their own generation, their own backup batteries, and potential participation in demand response programs, are already contributing to new ways to plan and operate the grid. Much concern about future reliability has focused on grid congestion, inadequate transmission for new generation, and the physical location of high voltage transmission lines. And currently, it takes upwards of 10 years to conceive, permit, and build a new transmission line. But we did hear today that the permitting process may be speeding up soon. At the same time, careful examination of existing corridors may open opportunities for maximizing the use of old power lines and with updated technologies such as reconductoring to increase capacity. In a third example of opportunities for technical or technological optimism, we learned today about the role of AI data centers in increasing the efficiency and productivity of various energy industries. Historically, techniques for improved grid reliability proceeded in parallel with innovations in computing hardware and software. Each step change in computing, was matched by advances in analyzing, planning, optimizing, and operating the grid. For example, the network analyzer of the 1930s allowed for modeling how future changes to a network would affect reliability. The supercomputers of the 1970s facilitated transient stability programs, while the workstations of the 1980s supported unit commitment calculations. The same giant data centers and new AI tools that foretell huge power demand can also be deployed to improve grid reliability. We heard some specific examples earlier, but I'd like to focus for a moment on the operating room, the system operating center. This is the place where operators need to make decisions in moments, if not seconds, when there is a reliability threat. And the gold standard would be to have real-time analytical information from data, from models that tell them what's going to happen next on the grid. And as we learned today, the direction of the data centers and computing AI is bringing that gold standard closer. Understanding that there are legitimate reasons to worry, as well as interesting innovations to counter those worries, the real question becomes how much reliability will be sufficient? After all, as a society, we have to weigh the costs against the risks and determine who will pay how much for a reliable system. We've wrestled with the question of sufficiency for a very long time. The notion of maintaining spinning reserves appeared as early as 1898. An energy crisis during World War I precipitated calls for what we now title resource adequacy. After World War II, engineers debated the concept now known as loss of load probability and continued arguing over what would be considered reliable until utilities settled on a poorly defined 1 day in 10 years standard by the 1960s. Following the 1965 blackout, entities such as the IEEE, the earlier versions of NERC, and others took on development of voluntary standards, and finally, in 2007, FERC approved the first mandatory reliability standards in the United States. As we continue to balance dire warnings and technology optimism, we should keep in mind several questions. Who will determine what is sufficiently reliable? Will we treat it as a public good or a private benefit? We know we need more generation, but how much, where, and using which energy resources? How can we mitigate the full array of reliability challenges that accompany our transitioning grid? And finally, what will these interventions cost? What can we afford? Who will pay? And through what mechanisms? Thank you.
Thank you, Julie. I hope everybody sort of took from that what I did, which was that there is a historical context for this entire conversation when we think about reliability. And earliest date you mentioned was 1898, so that tells you something, right, about how long this discussion has been going on and how it's evolved as well. The fact that people used to have candles and flashlights at the ready That's probably not true anymore. I would hazard a guess that most of you, except for, well, most of you, except for the flashlight on your phone, can't find a flashlight in your house. So it's kind of an interesting thing to think about. So I'm also joined up here by Peter Hartley. Peter and I have done tons of work together, going back to actually when I was a graduate student. He's one of my advisors, thesis advisors, so it's really good to have him up here with me. He's the George Paterkin Professor of Economics, and he's also a scholar here in the Baker Institute and the Center for Energy Studies. He's done a lot of work on electric power in addition to many other things, including work prior to coming to the United States in Australia that was really instrumental in the market liberalization standards that were put forth in Victoria, and then working for the Prime Minister's office as well. So he can bring, I think, in many ways, an unparalleled view on the reliability issue. And I know he's going to have a few comments about some recent events to discuss. And then, of course, Jason Ryan, who's been referenced many times already. He's the Executive Vice President of Regulatory Services and Government Affairs at CenterPoint. So CenterPoint has been in an interesting position over the last few years, most notably following, I think, the derecho and Beryl, right? And I think Jason is, matter of fact, I've heard him talk about this. He does a really good job of talking about the lessons learned and how they've gone about implementing solutions to the challenges that were presented. So, Peter, I'm going to start with you.
Okay.
Go ahead and take the floor.
Right, yeah, so I was going to, so you can tell the Australian accent as well.
Yeah.
Done things in Australia. I was going to start with an Australian example of your point about reliability and the amount of generation resources. So there was an event October last year in Australia in a outback town called Broken Hill, mining town, but also serves some farming community. Even though it's in the desert, there's a river that goes through there called the Darling River, irrigation and so on. But peak load capacity only about 36 megawatts. Until 2015, they had two diesel-fired generators, 25 megawatts each. 2015, generosity of the taxpayers and other utility ratepayers, they constructed a connection to the main electricity network, about 200-mile line, single line. After that, they developed, a renewables company developed a wind farm, 193 megawatt capacity, 36 megawatt peak load capacity in the town, 193 megawatt wind farm. They also did a 53 megawatt solar farm. They also put in a 50 megawatt battery system. The wind farm, solar farm, had grid following inverters, to follow up what Julie was saying. The battery system had a state-of-the-art advanced grid forming inverter. Okay, so they could actually make the frequency if necessary, but it was operated in grid following mode. In addition, the houses and other buildings and so on in the town put on solar panels. It was in the desert area, so 35 megawatts of rooftop solar. So yeah, 193 wind farm, 53 utility scale solar, 35 megawatts on the roof, peak load 36, 50 megawatt battery. What happened in October last year was a cold front came through with serious storms, blew down 7 of the towers for the single transmission line, and of course the power went out. Because they were no longer dependent on the diesel generators, they didn't maintain them very well. So one of the diesel generators was not working. The other one had a maximum 14 megawatt capacity. You would think that you'd think that the grid forming inverter should have been able to keep the system going. That was the idea, right? But in practice, of course, it couldn't, because even though it's 50 megawatt capacity, generating capacity, it was only 50 megawatt hours of energy storage. So if you ran it full, it would run down in an hour. And the wind farm and the solar farm were totally useless, just sat there, did nothing, because they had grid following inverters. The rooftop solar also required had grid following inverters, right? when they tried to run the diesel generator, the one they had, whenever the load went up, the frequency went down. It's not enough inertia. And then all the rooftop solar panels disconnected. I should say, if you add up all of the wind and solar and the batteries, it's over 9 times peak load. Okay, so to your point, there's massive resource there. Of course, when the line to the main network is running, they were exporting a lot of power whenever the sun was shining and the wind was blowing. Tremendous, okay? But all of this stuff was just worthless junk when the line went down. And basically, they had to fly in all the mines shut, the schools shut, they had to fly in all the food every day, they were flying in the perishable medicines and so on and so forth. Enormous. So it gets to the point, a certain amount of generating capacity is not enough. You can have massive overbuild of this generating capacity, but if it can't generate the power when you need it, the system can't operate. So I think it's a very instructive example to your point.
So how did the system recover?
It didn't recover until they reconnected to the main power, which took about several weeks for them to put those pylons back up and reconnect the line. Yeah. So I think it's a good example. Of course, another example of this is in Europe, two cases. So we hear about, I think it's a lovely word, the Dunkelflaute. I don't know if you've heard of this. It's the dark doldrums, would be the literal translation. So you have these periods they found in Germany where you have both cloudy, so it's dark, and there's no wind, okay? And what happens is that the prices go through the roof. So, and you have weeks with this, and you don't have enough storage, and there's not enough transmission capacity across national lines to prevent the power prices from really rising. The opposite example, so that's the case where you have insufficient wind and solar. The opposite example is the one we just saw in Spain, where you have too much generation from the solar plants. The spinning all the conventional generators, fossil fuel and nuclear, are backed off to accommodate the renewables. You have insufficient spinning capacity to maintain the frequency. Again, there was the problem. So you can have both too much and too little, and gets back to your point really that you really need. So you really need this frequency maintenance on the system. And of course, what happens with conventional generators is that they all automatically synchronise with each other and keep each other synchronised. I'd like to say it's kind of like a analog computer. Whereas if you're going to replace it with grid-forming inverters, and if you're going to have more than one grid-forming inverter, they've got to behave with each other. You can't have each of them trying to set a different frequency. They've all got to set the same. And then what you have to do is program the digital operation of these inverters so that they all operate with each other. And we don't really know how to do that, and certainly don't know how to do it in response to a wide range of disturbances, some of which we don't even know, you see. So people say, well, we've got microgrids like the one I talked about in Broken Hill, where you have one grid-forming inverter, which may be able to keep the system going for a certain period of time, but having multiple grid-forming inverters that can operate with each other to keep the system going, we don't really know how to do it, and we certainly don't know how to do it in response to a large number of disturbances. So I think we've embarked on this journey of having a system which we don't really know how to operate at this stage.
I think Julie mentioned that point at the outset of her talk. I know some of the working groups you've been involved with, sort of as an observer and participant. You guys were, if I recall correctly, you were talking about in that working group some of the things that we saw happen actually in the Iberian Peninsula.
Yeah.
Well before that ever happened.
Yeah. There's one group called the Universal Interoperability of Grid-Forming Inverters Consortium, which is a group of engineers from across, as we were talking about, multiple silos working together, trying to at least establish specifications and standards so that multiple grid-forming inverters will work and play well together. And they have produced models and standardized libraries that people can use to test their approaches, but we haven't yet seen this deployed on a system, even a relatively small network like ERCOT. It is, some of their technologies are deployed in Kauai, and I think they've had good success. But so far, it's really in the model and simulation phase in terms of understanding what's going to happen next. I should point out, though, that 130 years ago, or 100 years ago, people had no idea what was going to happen when they interconnected systems. Now, as I mentioned before, they tried out different ways to fix the problem by jiggering with things on the grid, it's on the networks themselves. And hopefully not too many customers suffered as a result. It's hard to imagine a utility or a distribution system today being willing to allow a bunch of engineers to come in and say, hey, we've got a great idea for how to make this work. Would you let us just like try shutting down and starting up your part of your grid today?
So on that note, Jason, it'd be great if you could share some of the things that CenterPoint has done as a district. It's pipes and wires, right? What have you guys been doing to ensure reliability to your customer base, particularly just over the last couple of years?
Yeah, so it's good to see everybody. It's good to be back here at the Baker Institute as well. Thank you, Ken, for having me. For those of you that don't know CenterPoint, we're electric and gas utility that operates throughout the mid-continent, but Houston is our home. This is my hometown. This is our headquarters. We have about 5,000 men and women that operate our system in the greater Houston area. And we've learned a lot of lessons in the last couple of years as it relates to what I'll call resilience. Everyday reliability, there are still challenges there. A lot of that is vegetation related, tree related. But I'll talk about resilience because even though the SAIDI and safety calculations often exclude those major events, our customers, you all, still experience those. So we need to figure out how to take that punch and get back up quicker. And that's what I think resilience is. You're still going to take the punch. There will still be outages. But how do we reduce the number of outages and how do we compress the time to getting people back on? That's a more resilient outcome. It's a better bad outcome, right? And that's what we've been embarking on doing. So I'll talk back to maybe the derecho that happened in May of last year and Hurricane Beryl that happened over 4th of July weekend last year. And just to talk about the difference between the bulk power system or transmission system and then the distribution system. We've done a lot of work on the bulk power system as an industry, but also as a company. In the derecho, which was, I basically think of that as a hurricane that came from the north with no notice, there was a fair amount of transmission damage. Even though those towers are built to withstand that kind of wind speed, they're not built to withstand tornadoes. Tornadoes are going to take out things that are in its path. So we lost some transmission towers there. We had a fair number of customers that experienced outages, but there were 0 outages caused by the loss of those transmission towers. It's because there's redundancy built into that bulk power system. We don't have one line connecting large groups of customers to the grid. There is redundancy built in. So even though we lost a row of transmission towers, nobody experienced an outage because of that. So that's resilience on the transmission system. Similarly, Hurricane Beryl, which is a hurricane that came from the normal direction, didn't damage any of our transmission facilities. Again, we had nearly 90% of our customers lost power. 0 customers were out because of problems with the transmission system. So again, that bulk power system is very resilient. Doesn't mean it won't have problems from time to time, but in those large outage events that our community experienced, none of it was because of that bulk power system. We've spent the money to make that investment. We have underinvested in the distribution system. That's where you saw the problems that led to those outages, that there were too many outages and they lasted for too long. But we're not at the bloody tip of the spear trying to figure out how to do this. Others have gone before us, and so we're stealing shamelessly from what other people have done. And we've done a lot of work in the last year. So some of what we did was trimming the vegetation, trimming the trees, right? that has year over year reduced the number of outage minutes by a full 1/3. So anytime a company does something different and can get that big of a step change difference, that means you're doing something right, and you should be doing more of it, right? So we trimmed enough trees that if you stretched all those distribution lines from end to end, would go the entire perimeter of the state of Texas twice, or across the entire country twice. So the men and women have been hard at work trimming vegetation off of power lines, and that's already proving to have a significant result. Other things we're doing, the transmission towers are built to withstand significant wind speed, but the distribution poles that are in our backyards and on the streets that we drive on every day are not built to those same standards. In fact, I've got some photos down on Galveston of a transmission line on one side of the road, distribution lines on the other side of the road. Post-hurricane, all the transmission towers are still standing. All the distribution poles are on the ground. So we know how to build infrastructure to greater wind speed, and so we're doing that. We are installing composite poles that withstand greater wind speeds, anywhere from 130 mile-an-hour winds and up along the Gulf Coast. It is a lot quicker for my crews to go and restring power lines on poles when those power lines get brought down by something than it is to completely reconstruct poles and everything, that infrastructure. So while something may fly into a line and pull the line off the pole and cause an outage, that pole is still standing. That outage could last hours, not days and weeks, right? They're different crews. You don't send a crew out to restring the line. It's the same crew that puts the poles in the ground. They're different skill sets, right? So that's going to lead to much better outcomes in those high wind events. We've replaced 26,000 poles since Hurricane Beryl with those stronger poles that withstand greater wind. Sounds like a lot, and it was a lot of work for the people that did it. We have about 1.5 million poles. So the things I'm talking about, it is a start of a journey. This didn't happen overnight, and it's not going to be fixed overnight, but we're making a meaningful difference. We actually got one of our pole manufacturers to open up a facility near Baytown, so we're also creating local jobs at the same time that we're improving this infrastructure. And finally, and then I'll pause and see what other direction we want to go in. We are segmenting that distribution system so that when something happens on a distribution line, it impacts the fewest number of people possible. So think of a distribution line the same way as old Christmas light strands, right? Where if you had one light that had a problem, you lost the entire strand. That's how our distribution system is designed. So you may have a 30-mile long distribution line that's serving thousands and thousands of customers. If you have a car hit a pole and knocks out power, you've lost power along that entire 30-mile distribution line, all those thousands of customers. What we're doing is we're making our distribution lines like today's Christmas lights, where if you lose one Christmas light, you lose one Christmas light. The rest of the strand stays on, right? So imagine segmenting that 30-mile distribution line into 30 segments, okay? And if that car hits a pole on segment 29, everything downstream from that goes off, but everything from the substation to segment 29 stays on. So again, reducing the number of customers that go out and bringing the response time down is how you will have more resilient outcomes. Over the next 3 years, the pole replacement will take a while. That segmentation, though, of our distribution system, we are aiming for in the next 3 years, so before the end of the decade, we will have segmented every distribution line that serves the densest population of people, because that's where you get the most bang for your buck, versus a 30-mile line that might have a customer every mile, right? We're going to get to those later. So again, none of this is new. our peers have been doing this. It's time that Houston gets the grid that it deserves, and we're committed to making those changes.
So it's interesting that you said we're looking at our peers. What have they learned? How can we bring that in? That is a hallmark of building resilient systems, and hopefully that sort of active mimicry will happen more and more. I have two questions really for you, Jason. I know the answer to the first one, but
I hope I do.
Well, you do, because you've actually sometimes lamented having to answer this so many times, but it's a question that people often have. Undergrounding lines, right? I wonder if you could just comment on how much is already undergrounding, because most people don't know that, and what it costs to do it.
Yeah. So this is actually a place where we exceed anything among our peers. We have more than 50% of our distribution system underground today. You don't know that because you can't see it, it's underground. You see the above ground distribution system. A lot of that is done in new developments where it is cheaper in a new development to put all the utilities underground to start with. It is 10 times more expensive to go into your backyard and take that electric line and all the other cables and other stuff that's on my poles and bring it to the front of the lot and put it underground, right? But we're starting at a good place. Now, if you go back to something I said earlier where we lost nearly 90% of our customers, but we have 50% of our customers served by underground service, how is it that you're losing that big of a percentage? And that's because we haven't focused on undergrounding the lines that serve those new developments, right? So all power that goes to your house comes from a substation start. So from that substation, most of our lines are above ground, and then at some point we will go below ground, serve an entire community, right? So when that above ground portion of the line is taken out, these people, it is no benefit to them that they are served by underground in that scenario, right? So we need to go back and underground that last mile or the first mile in this situation so that customers that are served by underground distribution facilities today get the full benefit of that. That also helps us in a major event, focus our efforts on those areas where you're still going to have poles and wires that are above ground, and send all of our resources there rather than going everywhere throughout our company footprint and fixing the one-off issues everywhere. You can really concentrate your crews in that scenario.
And just real quickly, the reason that you come above ground from the substation, that's a legacy.
That's right.
Yeah. So
that's right.
So there's a couple of questions, and we chatted a little bit about this last night, related to transformers. And I think the way it came up in our conversation last night connects back to data centers and large load customers that are actually now coming to CenterPoint to look at how do I site in a distribution territory? How are you guys approaching that?
Yep. So you've heard a lot today, and you've heard a lot generally about growth. It is significant in Houston, just as it is all across the country. Our growth is a little bit different than what you might hear a number of utilities talk about, though, just because of a number of features of Houston. But we have, so we're the fourth largest city in the country, so you've got a lot of people moving here. But you've got the largest medical center on the planet just down the street. You've got the largest petrochemical complex in the world. You've got one of the largest ports in the country. All of that is large customer usage, right? We've been in the business of connecting large customers to the grid since we started putting people on the grid. So large load is nothing new to us here in Houston. And because of all of those features that I just described, there is more of that activity happening here than everywhere else. We also have data centers, but it's high-tech manufacturing. It's life sciences, right? These large customers of all kinds looking to grow and come to Houston. I think there was a headline in the local paper today, something like center point braces for all of this large load. We're not bracing, we're ready. We've been doing this for more than 100 years. The issues that we're starting to have, getting to your question, long wind up to your question, is how do you get the equipment that you need to connect these companies to the grid? We have capacity. We've been building more transmission lines into Houston to continue to add capacity. We will be able to serve them. We have an issue sometimes with transformers, but we've got customers that are sophisticated enough, they're bringing their own transformers to work, right? And many times they can buy themselves into the queue and just go get it. Whereas I probably wouldn't do that. It's not necessarily the most prudent thing for my customers for me to go buy my way to the top. But some of these customers, while they may spend a lot on electricity, that is nowhere near their top expense. And it's just a drop in the bucket to go spend $10 million or $100 million to buy your way into a queue to get a piece of equipment that I don't have. So we are seeing that happen more often. And again, you've got large, sophisticated customers that we don't even have to ask to do that. We say, how many transformers do you already have? Because I can serve you, I just don't have that piece of equipment to step down the voltage to what your facility needs.
So I've got a couple other questions here, but just being conscious of time, because I still want everybody to be able to chat with the students and over a drink enjoy a continuing conversation. But I want to give each of you an opportunity to just make one sort of final remark regarding reliability, just generally. I like the word resilience. It's something that threads through everything we do here at the Center for Energy Studies. In fact, one of the things I've been talking to everybody about is if you just frame things in terms of supply chain resilience, it doesn't matter what commodity you're talking about. You're ultimately getting at the heart of what it means to have well-functioning markets. The ability for liquidity and depth to effectively matriculate into a marketplace. So at the heart of what we do. So I'll start with you, Julie.
Looking at, as I said, 100 and nearly 40 or 50 years of electrification, it is obvious that we take reliability for granted, except when the bad storm comes. And I think the question that was looming throughout the day and discussed this afternoon was, can we take it for granted 10 years from now? Will we be able to? And who will be able to take it for granted? I think if I can put a battery in my backyard or a generator, I can probably take it for granted. But I think I'm one of a handful of people who can do that, and most people can't. So I think the question of reliability is really larger than just the industry and the supply chains and the big loads coming, but also a question of how are we, let's just say in Houston, but also or across Texas, going to make sure that all of our citizens will have that opportunity to take reliability for granted 10 years from now and on.
Jason.
So I don't want to turn this into a management kind of discussion, but I'll go there for a second. After the various failures that we had, we took a step back as a leadership team and really asked ourselves and asked our employees, why do we even come to work? What is it that we're doing? What's our purpose? And we co-created a purpose, and that is that we enable everyday life and the pursuit of possibilities. Right? We're super important to everyday life, but we enable our customers to do what it is that they're good at doing. Our customers may cure cancer, right? Our customers are going to make all kinds of other discoveries. And what we do is a small part of that, but it is an essential part of that if we don't show up every day to serve our customers. So starting out with that purpose of why we're here, and then we've talked a lot and we've had advertisements on TV for years that say that our customers are at the center of everything we do. They really weren't, though, if we're honest with ourselves, right? You you don't get the kind of outcomes we've gotten if that's true. So as we started thinking about that purpose, our management team has started talking differently about our customers. And if it didn't work when we say that our customers should be the center of everything we do, then we've started talking about we are going to be obsessed with our customers. Like we're swinging all the way to the end of the spectrum. We are going to be obsessed with them. And so anytime now somebody's talking about a process that couldn't be designed any worse for a customer, we now say it doesn't sound like you're being obsessed with the customer, right? How is that helping our customers? So if we live that purpose and if we are obsessed with our customers, then those everyday reliability issues will ultimately work themselves out of the system. And we can continue to focus on having better bad outcomes when resilience events happen, right? They are going to happen. We're going to have floods, we're going to have hurricanes, we're going to have all kinds of things that are bad. Our system will take a hit, but if we can get back up better, that's what ultimately we're trying to do.
And I guess what I would like to do is say that our discussion has mainly talked about reliability in terms of being cut off.
Yeah.
And obviously that's very, very problematic, very expensive for the customer. But it's related to another issue, which is price variability. So there are lots of cases where you have problems with the system. People don't necessarily get cut off, but we get extremely high prices or very highly fluctuating prices. And this is another aspect of what we're seeing with the way the system is developing, is that you're seeing sometimes extreme fluctuations in prices, and that was part of my story about the Dunkelflaute in Germany, but it's also, we've seen it here in Texas. So Ken and I have just done a project looking at electricity prices here in Texas, 5-minute prices across all the different locational, all the buses on the ERCOT system. And one thing that really stands out is about 80% of the time, 5-minute intervals, there's at least one transmission constraint binding somewhere in the ERCOT system. It's just pretty high, 80% of the time. And a lot of those transmission constraints lead to extremely high fluctuations in prices. And if you combine that now with our data center, one of the key things about the data center is has been emphasized, they are essentially looking for base load. They're increasing the proportion of customers who want to operate 24/7 at a high load. And so when you have these intermittent supply sources, but also supply sources that are very distributed, can be very remote, very subject to transmission problems, increasing the proportion of stable power you need while supplying more less stable, less controllable power is not a good recipe for controlling price fluctuations.
So, I mean, that sounds very much like an argument that, and by the way, I think we've seen this with a lot of the hyperscalers that are out there going behind the meter.
Absolutely.
Right. So it leads to another question about market design, and how will going behind the meter ultimately lead to a more balanced, more stable grid. And I think there are potential solutions out there. You know, Carson mentioned the PERPA discussion that he and I have had many times. But I think there's some really interesting innovations on the regulatory side that could lead to different market structures that could drive reliability under an evolving sort of electricity grid.
So I saw some data recently where it used to be only, what was it, I think about 5% of the data centers had their own power, and it was mainly for emergencies and so on.
Right.
It was the most recent ones, it's 30%.
Right.
Have got their own behind the meter power.
Exactly. All right, well, we are a little past time, so I appreciate your patience, and thank you all for being here and participating in the discussions. If you have any follow-up questions, feel free to reach out. The speakers, most of them are still here, so you can catch them outside, but it's been an honor to share the stage with everybody. Join me in thanking Peter, Julie, and Jason. And so with that, we're not technically closing. We're moving out into the commons so we can talk to students and each other and sort of enjoy each other's company a bit. Thank you.